Very good morning, everyone. How are you all? Very fine. Now, last revision class, we have completed consolidation. Have you understood? Have you revised it by your own? Are you now getting comfort? Have you done some questions by your own? No, sir. That is no, sir. But I think now you are comfortable. You can understand that if you will go step by step, all questions are similar. One second, I will say any new adjustment come in exam, only one new adjustment will come. That I also don't know, you also don't know. I am also same, you are also same. Correct? Any new adjustment come, whatever you have understood, do it. Don't waste your time in that adjustment. Whatever you are understanding as per your previous understanding, your experience, whatever you have understood, just do it. Don't think whether you are doing correct or wrong. Maximum what will happen? It will be either correct or wrong. But only one information, na. Balance you can do by your own. So don't waste your time in that particular information, thinking a lot. Got this point? This is only one lesson which you need to apply in exam. Whenever you are in class, then think 1 hour on that. When you are doing self-study, then think 1 hour. But in class, whatever you have understood, just do it. Without thinking that what will happen, if this is wrong, if balance is not tally, then what will happen? Don't think. Even though balance is not tally, chalega. Always step marking now. Always step marking is there. Got this point? Now today we will start business combination. Business combination is also an important chapter. Already I have said that either they will ask a question from consolidation or business combination. Now, business combination from exam point of view, I will say it is simple. Why? Because there are few questions. Until now, they have not asked any new question in exam. They have not asked a new question in exam. However, if they create a new question, it will be similar question. They will not create any exceptional question in exam. Got this point? Now let us start business combination. So when we say business combination, means a group of assets and liabilities are acquired. First, what is the meaning of business combination? Business combination is a transaction. When I say when you purchase any asset from the market, that is also one transaction. So business combination is also one transaction. One transaction means one journal entry. So it means it is a game of only one journal entry. Only one journal entry, one chapter is there. Correct? Understood? So business combination is a transaction in which one entity acquire control over another entity. So one entity which acquire control is known as acquirer. Other entity whose control is acquired is known as acquiree. So they acquire control over the business of acquiree. In this chapter, acquirer means we are doing accounting treatment in the books of acquirer. Means we are not discussing accounting treatment in the books of acquiree. So nothing to discuss about acquiree. Whatever we are discussing from acquirer point of view. Now who are acquirer? Acquirer is an accounting acquirer, not legal acquirer. Means legal acquirer are those entity who legally acquire other entity. But in this chapter, when I say acquirer, acquirer is not legal acquirer. Acquirer is what? Accounting acquirer. Means in a situation, a legal acquirer and accounting acquirer may be same. Normally in a normal situation, always legal acquirer and accounting acquirer will be same. Suppose if I say X Limited is a big company and Y Limited is a small company. So बताओ who will acquire whom? Big company will acquire small company. Big company will acquire small company. Practically this scenario will come. A small company will never acquire a big company. Small company will not acquire a big company. So, for example, if I say profit-making company, a loss-making company, but who will acquire whom? Profit-making company will acquire loss-making company. Correct now? So, normally this will happen. So, in normal situation, legal acquirer is only accounting acquirer. But sometimes what happens? A mechanism is developed in such a way that small company is acquiring what? Big company. Or a loss-making company is acquiring what? Profit-making company. So in this legal acquirer is what? Small company. But the substance of that transaction will happen what? Ki shareholders of big company will get control over the business of small company. So in this case, legal acquiree become what? Accounting acquirer. Legal acquiree become what? Accounting acquirer. So you need to understand the substance of that transaction. Can you say in CA foundation when you were doing, so there was one principle, substance over form. Means we do accounting treatment based on substance, not based on legal document. So legally anyone can be acquirer, but substantially who is the acquirer, that we need to identify. So in a situation where legal acquirer and accounting acquirer are different, means legal acquiree become accounting acquirer, that is known as reverse acquisition. That is known as reverse acquisition. So in case of reverse acquisition, legal acquirer and accounting acquirer are not same. So we are doing accounting treatment from the point of view of accounting acquirer. So this chapter is applicable for whom? Accounting acquirer. So when I say acquirer means what? When I say acquirer means what? Accounting acquirer. Acquirer does not mean legal acquirer. Similarly, acquiree means what? Accounting acquiree. It does not mean legal acquiree in this chapter. Understood? So one thing you have understood that in this case, a company will acquire control over the business. Business means group of assets and liability. Business means group of assets and liability. So when I say group of assets and liability is acquired, so what Ind AS 103 says that whenever any entity means acquirer, acquirer means accounting acquirer, correct? So whenever any entity acquire a group of assets and liability from any other entity, correct? So that may meet the definition of business or may not meet the definition of business, correct? Now means whatever you are acquiring may constitute a business or may not constitute a business, may constitute a business or may not constitute a business. If it constitutes the definition of business, then Ind AS 103 is applicable. Then Ind AS 103 is applicable, and then we need to apply Ind AS 103 in the books of acquirer. But if it does not meet the definition of business, then it is not a business acquisition. Then it is known as asset acquisition. Then we call it what? Asset acquisition. Now whenever you are acquiring group of assets and liability, correct now, which do not meet the definition of business, so we call it what? Asset acquisition. Now the question arises, for that asset acquisition, which Ind AS is applicable? Respective Ind AS? No. There is no respective Ind AS. There is no respective Ind AS. For example, let me give you an example. Suppose you acquire furniture, plant, machinery, debtor, inventory, everything you acquire, but that does not meet the definition of business. But of which Ind AS? Ind AS 16 is silent, Ind AS 2 is silent, Ind AS 40 is silent, Ind AS 38 is silent. Every Ind AS is silent for group of asset. Therefore, one doubt will come, ki sir, which Ind AS is applicable? You are saying Ind AS 103 is not applicable. So Ind AS 103 says ki I am there, don't worry. I am there, don't worry. Even though I am not applicable, but I will give a guidance for what? Accounting treatment in that situation. So Ind AS 103 is not applicable, but Ind AS 103 has given guidance for the accounting treatment of asset acquisition, group of asset acquisition, not single, group of asset acquisition. So in this case, it is known as what? Asset acquisition. Ind AS 103 is not applicable. However, Ind AS 103 has given guidance for the accounting treatment. So you are supposed to say Ind AS 103 is not applicable, but Ind AS 103 has given guidance. What is the guidance? To recognize all asset, identifiable asset, recognize all liability, identifiable liability, and whatever consideration paid will be allocated to all asset in the ratio of their fair value. So can you see, when you are allocating entire consideration paid in the ratio of their fair value, so no goodwill will be recognized, no gain on bargain purchase will be recognized. So in this case, no goodwill, no gain on bargain purchase will be recognized. Right now I taken breakfast now. It is coming up. Okay, understood? So have you understood what I am saying? So no goodwill, no gain on bargain purchase required. Means can I say goodwill or gain on bargain purchase can come only in case of business acquisition. Means whenever in the balance sheet goodwill is there, it is only because of what? Business acquisition. If there is no business acquisition, there cannot be any goodwill. There cannot be any gain on bargain purchase. So simple. till now no question have been asked, but for 2 MCQ marks question, super important question. So now all this para become important. Means when we used to teach before MCQs now, we used to say scope is not there. Even though we used to teach, scope is not there now, because business combination chapter there are many other points from where they will ask question, but now this small part become important. Now one more point, suppose they have given many assets, asset 1, asset 2, asset 3, correct now, and they have given liability. Suppose, just try to understand, the fair value of this is 20, one minute. What I am saying, suppose they have given many assets, or I will take better one example only, otherwise you will be confused. I will take one example. One example I have created, suppose they created this type, they have asked this type of example. This example, A Limited purchase following asset and liability from B Limited which do not constitute a business. Which do not constitute a business. This example I have only created, this is not ICS study matter example. So PP inventory, investment property inventory, debtor creditor. You can see fair value has been given and carrying amount is given. Carrying amount is of not relevance. Carrying amount is of not relevance. What is consideration paid is what? 10 lakh. Consideration paid is what? 10 lakh. Past journal entry in the books of A Limited. So you will say PP account debit, IP account. IP means investment property account debit, inventory account debit, debtor account debit, creditor account debit, bank account. Bank account is what? 10 lakh. Correct. Now can you say 10 lakh? How you will allocate? Because there is one creditor also. So can you say if the creditor would have not been acquired, then your PC would be 10 lakh 90,000. Because creditor acquired, to PC become what? 10 lakh. Means the total PC to acquire all the asset is what? 10 lakh 90,000. So this become total consideration to acquire all assets. So 10 lakh 90,000 will be allocated to all the asset in the ratio of their fair value, in the ratio of their fair value. That allocation you can do because you have calculator. Because you have calculator. So journal entry is very simple. 2 marks, super easy. 2 marks, super easy. Now in this I just want to ask, because I think that that type of question can be asked. Let me ask you one point. Suppose, just try to understand this example. Suppose there is one company A Limited, and there is one company B Limited. B Limited has what? One investment property 1, investment property 2. 10 lakh, 10 lakh. And they have a equity share capital of what? 20 lakh. This is the balance sheet. So only 2 investment property, understood it is not constitute any business. Correct now. Normally what happens, this company is formed only to avoid some tax. Understood now. The intention is not to sell investment property. Intention is to sell equity shares. So can you say when you sell equity shares of this company, already it means the company will be transferred to some other company. It means investment property will transfer. Now when you transfer only investment property, the tax may be high. If you transfer the shares of the company, the tax may be less. So this is a mechanism. It is one mechanism to save some tax. Now A Limited acquire entire equity shares. So this B Limited becomes subsidiary of what? A Limited. Correct. But can you say now this A Limited got control over B Limited by acquisition of what? 100% shares. So whether it constitute a business, it does not constitute a business. It does not constitute business. Now the question arises, whether in the books of A Limited, Ind AS 103 will be applicable. No, it will not be applicable. Ind AS 103 will not be applicable. It means in the financial statement of A Limited, investment property will come 1, 2. Then the entire consideration will be allocated to investment property in the ratio of their carrying amount. That you can do. Okay. Now the question arises, second question is that whether A Limited will now prepare CFS at the end of each reporting date. Understood the question? Ind AS 103 is not applicable in the books of A Limited because it is not a business combination, it is an asset acquisition. So that accounting treatment you have done in the books of A Limited without recognizing any goodwill or gain on bargain purchase. That you can do. Now the question is that whether A will prepare CFS with B. Yes, because for CFS Ind AS 110 is applicable, and Ind AS 110 says that whenever any company control another entity, so of course there is a control because they have acquired 100% equity shares, that will meet the definition of control. So even though it was not a business combination, A Limited will consolidate all its subsidiaries. So B is a subsidiary of A now, because they acquire equity share. So B is a subsidiary of A. So A Limited will consolidate B Limited at the end of each reporting period. This is one point. I don't know whether this type of question they will ask, but this should be known to you as a chartered accountant. So as per Ind AS 110, an entity must consolidate all entities that it controls. Either it constitute business or it does not constitute business. Understood? This, matlab, if I am creating question, I will create a 2 marks MCQ question based on this, because conceptual question. Okay, understood? Have you understood this point? Chalo. So this part is over. Asset acquisition now we will not discuss, because it is only for 2 marks. Now you can do that. Now let us come to what? Business combination. So you have understood that. In this case, what will be applicable? Business combination will be applicable. So what is the meaning of business? So how can we identify it is a business or it is not a business? That I will discuss at the end. That I will do, but at the end, not now. So can you see in exam, whenever they ask a question of what? Prepare balance sheet, means it is a business combination. It is a business combination. If they say ki prepare balance sheet, so it means it is a business combination, even though they do not inform anything. Correct? If they ask a particular question about identification of business, for that we need to understand the meaning of business. That I will do at the end. Now business combination, this is our objective. Our objective is to understand business combination. So already we have done acquirer obtain control of business of acquiree. Acquirer you understood. Business I will explain. Control already we have done under Ind AS 110. So control definition remains same, whatever we have done under Ind AS 110. Last class only we have done. Now this chapter say that control is obtained in 2 ways. Control can be obtained in 2 ways. Either by acquiring substantial equity shares of acquiree. Now substantial, already last class I have said that substantial, normally it will be more than 50%. But even though it is less than 50%, it can also give power over investee. I have given some example. Therefore, I have not mentioned more than 50%. It can be less than 50% if they acquire some de facto power. You understood that point? So I have written by acquiring substantial equity shares of acquiree. Correct now. Why I have written substantial? Because in some situation, even though less than majority voting power, control may be obtained. Understood? But till now that type of question has not been asked in exam. But in MCQ that type of question can be asked. Similar illustration has been given in ICI study material, but no question has been given in ICI study material. Got this point? So this point you understood. Can you say when this situation arises, means formation of subsidiary? So can you say formation of subsidiary is an example of what? Business combination. And that only we have done in consolidation chapter. The starting point was what? Ind AS 103 only. On the date of acquisition, what we have applied? Ind AS 103 only. So formation of subsidiary is an example of business combination. That was only consolidation chapter. Correct? Means this part already we are comfortable now. Formation of subsidiary we are comfortable now. Understood now? Then second is what? By acquiring directly business from acquiree. Means we'll directly acquire business from acquiree. Now when we acquire business of acquiree, it can be either one business or more business, but not all business. Or it can be acquisition of all business. So there can be 2 situations. Either by acquiring all business of acquiree. So when we acquire all business of acquiree, it means acquiree will be liquidated. Acquiree company will be liquidated. So when you acquire all business of that company, means that company has nothing now. So that company will be automatically liquidated. So that gives rise to 2 forms of restructuring known as amalgamation and absorption. There is one more form which you have done in Bachpan, external reconstruction. You remember external reconstruction? But normally they don't ask any question of external reconstruction, but that can be external reconstruction also. So amalgamation means what? When 2 companies join together to form a new company. So 2 companies which have been joined will be liquidated. So in this case 2 companies or more than 2 companies. 2 companies or more than 2 companies will be liquidated and they will become a new company. Means a new company will form to take over the business of liquidating company. Absorption means what? One company will absorb what? Another company. One company, existing company, will acquire the business of existing company, and that the company whose business is acquired will be liquidated. In external reconstruction, what happened? Only one company that will be liquidated and their business will be taken over by a new company. So only one company, that company will be liquidated and their business will be taken over by a new company. So this is known as what? All business combination. This was covered in AS 14. If you have done amalgamation in CA Inter, so in CA Inter only this was the scope. CA Inter mein only we have done this. Now, there may be a situation when they are acquiring only one or more but not all business. In that case, acquiring company is not liquidated. In that case, acquiring company is not liquidated. But if I am acquiring only one business, yeah, more than one business, but not all business, so that is also business combination. The best example from ICAI questions point of view is demerger. Only one question of demerger has been given. However, there can be some other form of restructuring, but no question of that nature has been given. So we will not discuss that. So demerger from examination point of view is an example of this particular case. In demerger, the acquiring company is not liquidated. Acquiring company is not liquidated. So from exam point of view, what are the scope? Either they will ask question of formation of subsidiary, or they will ask question of amalgamation, or absorption, or demerger. So there are 4 topics from exam point of view. From exam point of view, how many topics? 4 topics. 4 topics understood. Now coming to the accounting method. Now accounting method depends upon 2 situations. Whether business combination is under common control or business combination is not under common control. Business combination is under common control or business combination is not under common control. So what do you mean by under common control? To give a brief view, suppose just try to understand there is one parent company. They control what? X Limited and Y Limited. And X Limited absorb Y Limited. So it is a business combination. And let us assume business definition has been satisfied. Correct now. So X Limited absorb what? Y Limited. But they both company are under common control. P is what? Common controlling party. P is a common control party. So this become a business combination under common control. Business combination under common control. But if I say X, Y, and there is no common controlling party, there is no common controlling party, and X absorb Y, so that it become business combination not under common control. Not under common control. Understood this point? So whenever there is a business combination under common control, Ind AS 103 is not applicable. Ind AS 103 is not applicable. Then Appendix C to Ind AS 103 is applicable. What applicable? Appendix C to Ind AS 103 is applicable. Understood what I am saying? Whenever it is business combination not under common control, whenever it is business combination not under common control, then what is applicable? Ind AS 103 is applicable, and Ind AS 103 has prescribed which method? Acquisition method. Acquisition method. So Ind AS 103 has given which method, Bodo? Acquisition method. And Appendix C to Ind AS 103 has given which method? Pooling of interest method. Pooling of interest method. So we'll discuss one by one each method. Understood this point? Pooling of interest method. Now what is pooling of interest method? What is acquisition method? That is a point of discussion. Understood? So first, whenever questions come, so first you identify whether it is a business combination. Yes. Correct. Then identify whether it is business combination under common control or not under common control. If question is silent, what will you assume? Not under common control. How can we assume by our own it is under common control? So if question is silent, always it will be what? Not under common control. 90% time question will be silent. So if the question is silent, always assume not under common control. Means you are going to apply which method? Acquisition method. Now under business combination not under common control, it can be either reverse acquisition or simple acquisition. Simple acquisition means what? When legal acquirer and accounting acquirer are same. Legal acquirer and accounting acquirer are same. Reverse acquisition means what? When legal acquirer and accounting acquirer are not same. Now simple acquisition, this name has been given by me. Correct now. So simple acquisition, there is no such term under Ind AS 103. They have given only one term, reverse acquisition. Means which is not a reverse acquisition. This is the case. So you can add it is not a reverse acquisition. So in exam, don't say simple acquisition. They will say what is simple acquisition. Correct now. That for simplifying to understand, I have given one name, simple acquisition. So from my point of view, simple acquisition means what? When both means what? Legal acquirer and accounting acquirer are same. Reverse acquisition will be a different type of question. Means what we are going to study? First simple acquisition, then reverse acquisition, then business combination under common control. business combination under common control. Correct. This is the scope of this chapter from examination point of view. So let us first start with simple acquisition. Let us start with simple acquisition. So acquisition method, not a reverse acquisition, not a reverse acquisition. This is only one question, means they will, if they want to disturb you, they will disturb you in this question. Simple acquisition, because it's simple now, they will complicate it. Reverse acquisition and business combination under common control, lollipop question. Means in that they will not trouble you. Understood? If they want to trouble you, this type of question they will trouble you. So this will be thoda sa detailed discussion. Simple, therefore maja aayega. Understood? So simple acquisition means what? When legal acquirer and accounting acquirer are same. Understood? So from the question only you will understand it is a simple acquisition, because nothing will be given much about the accounting acquirer and legal acquirer. So from the question you will be able to understand it is a simple acquisition, because everything will be given that. Correct? Understood? Let me come to step by step. Then when I'll come to the question, I will say why it is a simple acquisition. First step number 1, calculation of PC. First step will be what? Calculation of PC here. Because without PC calculation we can't go. In consolidation chapter PC was given. In this chapter PC you need to calculate. The difference is that only. In consolidation chapter you remember cost price of investment was given. The PC was given. In consolidation chapter they used to trouble you sometime by not giving what? PC. So that only same thing. But here we'll do detailed discussion about calculation of PC. So calculation of PC already we have discussed in consolidation chapter some point, but here thoda some more discussion. First cash payment will be given. Correct. Then fair value of equity shares issued. Fair value of equity shares issued is number of equity shares issued multiplied by fair value of equity shares of acquirer company. Now number of equity shares issued if not given, that is number of equity shares of Acquiree multiplied by swap ratio, This I hope you have understood. Any doubt? No doubt? Correct. Then fair value of deferred consideration. Deferred consideration means which is paid after some time. So deferred consideration will be based on present value of future payment. Present value, the discounting rate will be given. You can find out present value of future payment. So present value of future payment. This also you can calculate. Fair value of contingent consideration. Now you know what is contingent consideration. The fair value of contingent consideration on the date of acquisition, normally they will give in exam. So fair value of contingent consideration will be given in the question. Fair value of contingent consideration will be given in the question. So that you can take on the date of acquisition. Everything we are doing on the date of acquisition. Then there is one special point, that fair value of replaced SBP award. Fair value of replaced SBP award. This I need to explain thoda sa. Correct. Now just try to understand what actually happened. You know about fair value of replaced SBP award? Suppose this is A limited, this is B limited, A limited absorb B limited. Now B limited is an acquiree. B limited is a acquiree, and B limited has given some SBP award. SBP award means what? ESOP, employee stock option or stock appreciation right, whatever. But we are right now discussing about ESOP, because when there is SAR is SBP liability. Liability will be automatically taken over at what? Fair value. But SBP means if I am saying ESOP, ESOP become SBP reserve. Reserve is not a liability. Reserve is not a liability. So we are discussing about equity settled SBP plan. Equity settled SBP plan. Correct. So suppose there was some SBP award of B, Acquiree. So they have given to their employee. Suppose vesting period was 5 years. Vesting period was 5 years. Right now expired period is 2 years. Means for 2 years they have already provided services to B limited. So remaining vesting period is how much? 3 years. Correct. Understood. And suppose fair value of this plan on date of acquisition. On the date of acquisition, not on grant date. Can you say they have already applied accounting treatment based on Ind AS 102 and already SBP reserve is coming in the balance sheet? Means in their balance sheet, SBP reserve is coming now. SBP reserve is coming as per which Ind AS? So that is based on fair value of plan based on which date? Grant date. Abhi right now I am asking fair value on the date of acquisition. So that will be given the question. Suppose they have given 500 lakhs. 500 lakhs. Understood? Now can you say because A limited absorb B limited, So now all the employee of B Limited will become employee of A Limited. For the remaining vesting period, but they will provide services to whom? A Limited. And now B Limited liquidated, even though they are providing services for entire vesting period, but whether B Limited will be able to allot the equity shares? No, because B Limited is liquidated. So because B Limited is liquidated, so of course this plan need to be replaced with the plan of what? A Limited. So A Limited will replace this plan with their plan. So this is known as replaced SBP award. Replaced SBP award. Now in that case, their vesting period may be different. Suppose their vesting period is 4 years. Out of 4 years, they have already provided services for how many years? So can I say expired period is 2 years and the remaining period is what? 2 years. Now just try to understand, for these 2 years, they have provided services to whom? B Limited. But who will allot equity shares? So can I say it is nothing but A Limited is paying on behalf of what? B Limited. Therefore, that will be included where? In PC. So for this period, this is a part of PC. So what our Ind AS 103 says that the fair value of replaced award will be attributable to pre-combination period and post-combination period. This become which period? So any amount attributable to pre-combination period will be included in PC, and any amount attributable to post-combination period will be recognized as an EB expense as per Ind AS 102, and that will be EB expense of which company? A Limited. So this is the subsequent accounting. Subsequent accounting is not applicable from this chapter point of view. We are doing whatever we are doing on the date of acquisition. The subsequent accounting they will not ask, but you don't know ICI. They may ask 2 marks MCQ question. What is the subsequent accounting? So of course that will be accounted as per Ind AS 102. So subsequent accounting as per respective Ind AS. Already we have done Ind AS 102. Apply that. So right now we are concentrated for pre-combination period. So what will be that amount attributable to pre-combination period that we are discussing? So what they are saying, suppose the fair value of SBP award, replace SBP award is 600 lakhs. So they have given one formula. I mean right now only you need to understand formula. Correct? So what is the formula to find out amount attributable to pre-combination period? The formula is a fair value of original plan. What is the original plan? B Limited means fair value of Acquiree plan. That is what? 500. Multiplied by expired period. What is the expired period? 2 years. Divided by what? Original vesting period. How much? 5 years. Or replace vesting period. How much? 4 years. Whichever is greater. This is the formula. Can you repeat with me? Formula. Fair value of original plan multiplied by expired period divided by or whichever is understood. Correct? Means can I say this amount how much coming? 500 into 2 divided by 5. How much it is coming? 200. Means out of 600 na. Out of 600 how much is attributable to pre-combination period? 200. Balance will be attributable to what? So normally student do mistake yahan par, balance part. They will say 500 minus 200, but this is not 500 minus 200. It is 600 minus 200. So balance 400 will be attributable to post combination period. This is 2 marks question, MCQs. So they will ask what is the amount attributable to post combination period. So your answer is what? 400. Understood what I am saying? But for this chapter, what is relevant? 200 is relevant. Understood? Correct? Have you understood? Bolo. Correct. Have you understood? Now this is the replaced award. Replace award you understood? So now I think you will understand this point. Fair value of replaced SBP award is equal to fair value of original award means Acquiree award. That will be given in the question. On the date of acquisition, they will confuse you by giving fair value of original plan on the date of on grant day also. That is not relevant. Fair value of Acquiree award on the date of acquisition. Everything on the date of acquisition. Multiply by, divide by replaced vesting period or original vesting period, whichever is greater. Of course, you can calculate it. This becomes the total PC. Up to this, any doubt? No doubt. This all have been asked in exam. Means this all are important. So this whatever we have discussed, cash payment, equity shares, deferred consideration, contingent consideration, replace SBP, all have been asked in exam. So these all are important. Okay. But one point has not been asked till now. Ki suppose sir SBP award is not replaced, then whether it will be included in PC. Means suppose this is the case. A limited, B limited. Quite possible B limited is not liquidated. If B limited is not liquidated, the question of replacement may not arise because B limited can allot equity shares. So in this case, same example if I will take, they have announced SBP award to their employee. Vesting period was 5 years, expired period was 2 years, and fair value on the date was 500 lakh. But it was not replaced. But the can I say employee will now become the employee of A limited, but not replaced. Why not replaced? Because B limited can allot the equity shares on exercise day. The replacement was not required. Replacement was not required. But now employee will provide services to whom? Can you see it is quite possible in case of what? Subsidiary company. Formation of subsidiary company. Quite possible in case of when Acquiree company is not liquidated. When Acquiree company is not liquidated. In that case, what they want to say, in this case also, the fair value of this fair value now, this will be allocated in two parts, pre and this till now not asked. Okay. So amount attributable to pre-combination period will be fair value of original plan multiplied by expired period divided by original vesting period or modified vesting period. The plan may be modified. Modification we have done now. It can be modified but not replaced. Modified vesting period. Understood? Modified vesting period, not replaced. Modified vesting period, whichever is greater. Whichever is greater. Now you only say this amount attributable to pre-combination period will be transferred to which account? This will be classified as NCI. NCI. This will be classified as NCI. NCI means just right. This now employee is nothing but equity share. It will become what? Equity holder, and that equity holder is not held by parent company. Means the B limited will allot equity shares to whom? Employee, and that equity shares are not held by parent company. So that will be classified as what? NCI. And this will be again recognized as what? EB expense for the remaining vesting period by parent company, by acquirer company. Understood? This is not yet asked. But 2 marks question can be asked from this also. Not yet asked. Understood? So in this case, whatever amount attributable to pre-combination period will be classified as what? NCI. Will be classified as what? NCI. Understood? In that replaced part, that will be included where? PC. Here it will be classified as NCI. NCI is not PC, but will be considered for calculation of goodwill or gain on bargain purchase. Are you able to understand? Till now this point has not been asked, but can be asked or not? Can be asked. So be careful. Be careful. Chalega. Abhi right now we are discussing what? Fair value of PC. So only we have considered what? Replace SBF. Now this become total PC. But sometime what happen? Because we have done business combination transaction, there may be some more transaction negotiated along with our business combination transaction. For example, right now, suppose we negotiated that I will teach you, you will learn from me. This is one transaction. But what happened? Quite possible that I am also the vendor of mobile. Means I sell mobile also. Correct now? So you say, sir, because I am learning from you, I will purchase mobile from you. I said, okay, purchase mobile from me. So the total consideration was, suppose, 20,000 for teaching as well as what? Mobile. So batao, what is the purchase consideration from your point for teaching? For only learning. This is total consideration now. So you will bifurcate now. Ki how much for teaching and how much for mobile. You need to bifurcate. Correct now. Same thing यहाँ पर कि whenever we do transaction of business combination, negotiation of business combination, sometime some more transaction may be also negotiated, which is not a part of business combination transaction. But total payment, this is the total payment, may be inclusive of that transaction. So you need to separate that. You need to separate that because right now we are doing only business combination transaction, not any separate transaction. So what our Ind AS 103 says that also do adjustment for a separate transaction which is not a part of business combination transaction. Do plus minus what? Adjustment for separate transaction which is not a part of business combination transaction. Till now this part has not been asked. But it is my 100% belief, if they want to complicate, they will ask this. Because this is a very important point of business combination chapter. Till now not asked. No question in ICS that good question has not been given. Small illustration has been given. Chalega. So if you know you can do it. If you know you can do it now, so what can be that separate transaction from examination point of view? So there can be some receivable due to pre-combination contract. Ki suppose acquirer company has done some transaction, sale transaction with acquiring company. So there was some receivable. There was some receivable in the books of what? Acquirer company, and there was some payable in the books of acquiring company. Are you able to understand? Let me explain. Suppose this is acquirer, this is acquiree. Chalega? ER means what? E means what? Now before business combination, they have done some credit sales. So there was rupees 1 lakh receivable. There was rupees 1 lakh payable. Now they have done business combination. And for business combination, the negotiation was 20 lakh. 20 lakh. But what acquirer will say, that 20 lakh is payable, but 1 lakh is receivable. Therefore, I will pay what? 19 lakh. An agreement has been designed only for what? 19 lakh. Correct only. And 19 lakh was paid in cash. 19 lakh was paid in cash. Now you are calculating PC. In agreement, what is cash payment? 19 lakh. So cash payment become 90 lakh. But what is PC? Now you know because I have written. But this will not be given in exam na. They will say cash payment how much? They will say receivable is adjusted while calculating what? PC. They will give that type of information. So you will do plus what? 1 lakh receivable. Plus 1 lakh receivable. So your PC become what? 20 lakh. And receivable will be settled as per respective Ind AS. So that will be also settled. But as per respective Ind AS na. Respective Ind AS means Ind AS 109. Are you able to understand? Are you able to understand? Means it is quite possible that they have done settlement of this only on 80,000. Means 1 lakh was settled in 80,000. Are you able to understand? Settlement was done in 18,000, but on 19 lakh, what will PC? PC will what? 1 lakh was settled in 80,000 and that was adjusted with what? PC. So you will do plus 1 lakh 80,000. 80,000. So you will do 80,000, 80,000 you will do. Correct now. So your PC will become 19 lakh 80,000 and receivable settlement will be 1 lakh 80,000, 20,000 will be loss. 20,000 loss, that will be transferred to what? Profit and loss account. Understood? Have you understood? This type of transaction till now not asked. Till now not asked, but can be asked or not. Have you understood? But if asked, you can't say out of book. You can't say out of book now. Because out of it is from the syllabus only, from the syllabus. Chalega? Have you understood? Can I proceed? Now you will say whether plus ki minus. Suppose there was some payable. अच्छा लिखा हुआ है यहाँ पर plus minus. चलो ठीक है. But suppose there was some payable. Means payable by whom? Acquirer to acquiree. Then what you will do? This receivable was what? Add the payable what? Less. So you will do less payable due to pre-combination contract. Understood? Now sometime what happened? This was the pre-combination contract. Sometime what happened while negotiating with the business combination transaction, they will do some transaction for post-combination period. Suppose there was one director who is also shareholder, major shareholder, who was the director of the company, and they want to retain the director for the remaining 5 years. Because the director was professional person, if he will go, then who will take care of the business? So they want to retain the director, means they want to retain the employee. So they will pay some amount to him for retention, and suppose they paid 5 lakh for retaining him for the next 5 years. So whatever 5 lakh is paid, whether it is paid for business combination or post services, post employee benefit services, so that should be separated and will be accounted as per Ind AS 19 during the next 5 years. During the next 5 years now, it is not a part of PC, it is not a part of PC. So what you will do? If that is paid, less payment due to post combination services of employee. Post combination services of employee. Understood? Correct. One more transaction which they may ask. Suppose there are some liquidation expenses. Now liquidation expense, I think in amalgamation chapter you have done liquidation expense of transfer company paid or reimbursed by transferee company. You remember? So suppose there was some liquidation expense of Acquiree, but they have done negotiation in such way, don't worry, acquirer will pay. So if acquirer is paying liquidation expense of Acquiree, whether it is a part of PC, it is not a part of PC, it is simply an expense. I am paying your expense, so now it becomes my expense, but it is not a part of purchase consideration. It is not a part of purchase consideration. Therefore, that also be less payment of liquidation expense of Acquiree, and this will be charged to profit and loss account as an expense. And after this adjustment, what is left? That become PC for business combination. PC for business combination. But can you say for this all they will inform you in question that this is already adjusted. So they will inform you. So from the question only you will understand that this has been adjusted. This has been adjusted. Got this point? Have you understood? Any doubt? Now coming to contingent consideration, already we discussed some part of contingent consideration in consolidation chapter, but again here because this is actually a discussion of Ind AS 103. Already we discussed that contingent consideration can be either settled in cash or can be settled in equity shares. If equity share, it can be variable number, it can be fixed number. So whenever cash settable and cash settlement of variable number of equity share, it will be classified as financial liability. Otherwise, it will be classified as equity. So whenever it is classified as equity, no subsequent measurement. But if it is classified as financial liability, it will measure at FBTPL. Any changes in fair value will be transferred to profit and loss account. So initial recognition will be done at fair value. Subsequent recognition will be done at fair value. If the fair value increases, loss. If fair value decreases, then gain. This is very important. Normally they may ask a question of 2 marks in this. Correct? And if they have given equity, then say no subsequent measurement and nothing will be transferred to PL. And can you say on settlement, whatever will be adjusted there, that will remain in equity only. When you are giving equity share, so whatever difference, that will be adjusted in equity only. Chalega. This also you have understood. Now, this is very important point also from PC calculation. Payment to employee equity shareholders. Payment to employee equity shareholders. Means there are some equity shareholders who may be employees also, who may be directors also. Directors are employee, na? So payment to employee equity shareholders. Now payment to non-employee equity share, no doubt. Whatever you are paying to non-employee equity shareholders, that will be always included in PC. Whatever you are paying to non-employee equity shareholders, that is payment of PC only, no doubt. But payment to employee equity shareholder, doubt will come whether it is in the capacity of employee or whether it is in the capacity of owner. The doubt will come now. So whenever some payment is done to employee equity shareholders, just first find out whether it is a fixed payment. If it is fixed payment, it is always a part of PC. Fixed payment done, it is a part of PC. But if it is contingent payment means the contingency is that there is some condition need to be satisfied. Condition need to be satisfied. Correct now. So if it is contingent payment, what our Ind AS 103 says that if that contingent payment can be forfeited if employee terminate. If employee leave the job, so that will be forfeited, means it is in the capacity of what? Just 1 second. Contingent payment can be forfeited if the employee terminated. So it is in the capacity of owner or employee? Employee. Therefore, it is not a part of PC. So forfeited if employee leave, not included in PC, but cannot be forfeited even though employee leave, means it is in the capacity of what? Owner. Therefore, it will be included in PC. Very important from exam point of view. Understood this point? Have you understood this point? Understood the point? So whatever payment to non-employee shareholders will be always included in PC. Whatever payment to employee shareholders, be careful. Fixed payment will be included in PC. Contingent payment, if forfeited, if employee terminate, it is not a part of PC. If cannot be forfeited, even though employee terminated, will be a part of PC. Understood? Correct. Then there are some notes which are also very important. Any direct cost related to acquisition of acquirer company. Any direct cost related to acquisition of acquirer company. For example, due diligence cost, accounting cost, legal and professional cost, finder fee cost. These are the acquisition cost of what? acquirer. So this will be charged to profit and loss account as an expense and will not be included in PC. Will not be included in PC. Recognized as an expense, not included in PC. Cost of issuing equity shares. Now, of course, whenever we are giving PC, PC can be in the form of equity shares. So, of course, there will be cost of issuing equity shares or any other securities. So, whether that will be included in PC? No, that will be also not included in PC. So, that will not be a part of PC. However, their accounting will be as per Ind AS 32. The accounting will be as per Ind AS 32. Means this is nothing but transaction cost. Transaction cost will be deducted from equity or deducted from liability. So this will be considered transaction cost, and transaction cost will be deducted from equity but not a part of PC. It is not a part of PC. So their accounting will be done as per Ind AS 32. This same part is asked in one of the question of Ind AS 36. Ind AS 36 means what? Impairment. So there they have asked a CGU. CGU was a subsidiary. So first we need to calculate PC in that. First we need to find out goodwill in that. So in that these two information was given for calculation PC. So whether you will include? No. So this is bekar information, bekar means bakwas information. So sometime what happen, a specific question come and they have given this information and this is actually of no use, but in exam some information given, you will use it. Bola re. Normally it happens because some information is given, so you will be stuck now. Why this is given? And by mistake, yeah, by default we use it. By default we use it. Understood? So this will not be included in PC. However, accounting treatment is what? Direct acquisition cost will be charged to profit and loss account as an expense, and cost of issuing equity shares or other security will be deducted from, don't charge it to PL account, deducted from respective equity and securities. Chalega? Yes sir, yes sir. This was step number 1. Step number 1, any doubt? Step number 1. Can you say if step number 1 is wrong? Now whatever you are doing, bekar. So be careful with PC only. I will say twice check. Twice check. Don't be in hurry. Because step number 1 is wrong. Now whatever you are doing will be affected by that. Chalega? The second step is what? Calculation of fair value of INA. Fair value of INA. INA means including goodwill, excluding goodwill. Excluding. So always excluding goodwill. And calculation of deferred tax. Normally in this chapter they will ask deferred tax calculation. However, we have understood in consolidation chapter also deferred tax calculation. Correct? Now, so what is the form? What is the format? I have designed the format in such a way that you can calculate fair value of INA and deferred tax in one working note. IC has used 2 working note. I am using 1 working note. This will save our time. This will save our time. So first write down fair value. Then write down tax base. Tax base will be given in the question. If not given, then we'll assume it is equal to carrying amount of INA. Carrying amount of INA. And the difference will be temporary difference. Okay. So asset, write down all fair value, all asset, whatever has been acquired. Then tax base information given. So write down, otherwise take carrying amount. Less liability, the fair value will be given. Write down all liabilities, fair value, whatever is taken. And then tax base will be given. If not given, take carrying amount of INA. Can I say the difference? This will be total fair value of INA. This is a total tax base of INA. And this difference will be either taxable temporary difference or it will be deductible temporary difference. Taxable means what? When fair value is more than tax base. Deductible means what? When fair value is less than tax base. So always compare these two. And this will be what? Either taxable. So taxable means when fair value is more than tax base. Deductible means when fair value is less than tax base. If taxable, so what you will calculate? DTL. DTL will be plus ki minus in INA. DTL will reduce INA na. So less DTL. Less DTL. So DTL will be what? Taxable temporary difference multiplied by rate of tax. So taxable temporary difference multiplied by rate of tax means this amount. This is taxable temporary difference multiplied by rate of tax. Multiplied by rate of tax. Or if it is DTA, then what you will do? Add. So add either DTL or DTA. Huh? Both will not come. So this is or, huh? So DTA means what? Deductible temporary difference multiplied by rate of tax. Understood? So can you say we are here to calculate this only fair value by INA after deferred tax adjustment? Fair value by INA after deferred tax adjustment. Correct. Means whenever tax rate is given, even though question is silent, we need to calculate what? Deferred tax. If tax rate is not given, means don't calculate deferred tax. So deferred tax will be calculated only when tax rate is given. You can't assume tax rate by your own. If tax rate is not given, means don't calculate deferred tax. I think super easy. Super easy. In this normally student do mistake where in calculating what fair value by name only. In calculating fair value by name. Understood? What mistake you can do, I will explain. But have you understood? Now some general assumption. If the fair value of INA is not given, then assume what? Equals to carrying amount of INA. If the tax base of INA is not given, then assume what? Carrying amount of INA. Means if fair value is not given, tax base is not given, so both are equal. No difference. But they will give some information. Chalega. These are general assumption, so we'll take that. Now, special attention. This is special attention. Listen carefully. Because even though I will not explain, you will understand whatever solution is given in ICI study material. Even though I don't discuss, but doubt will come in exam hall, because that time you are doing by your own. Na? So listen carefully. Not important if you are reading ICI solution, because the doubt will not come. Doubt will come when you are attempting the question by your own. And you attempt the question by your own only in exam. Bolna re. Before exam, you refer what? ICI solution. If you are not able to understand, you refer what? And you will say, Acha, I know everything. That is only default. What happened now? What we happen whenever we are trying a question, we try, we stuck, and we refer solution. And when we refer solution, we understand, and we think that we have understood. But actually, you have not understood, because you have not identified your mistake. So first, I will say, first do full, then refer, then identify where you have done mistake, and then ask one question why you have done that mistake, and write down somewhere what mistake you have done, because that mistake will be only repeated in exam. In exam, when you are doing for the first time, the doubt will not come, because you have never identified your mistake. This is actually lacking at CA final study. The difference between CA intern and CA final is this. In CA final, normally we refer IC solution, and from my point of view, CA final student can under any question without understanding concept. Can understand any solution without understanding concept. Am I right or not? Suppose you are doing Ind AS 16 question, PP, any question solution you can understand, even though you don't know the concept. That much power do you have. So which solution will have no doubt, but in exam we don't have, and that is only lacking. Lacking here. You think that you have understood, but actually you have not understood. So only one rule is what? Do by your own, identify mistake, write down somewhere, and then try to analyze that. If you can do that, this much time you have, CA exam, CA final exam is easy. Only you need to identify your mistake. That job I am doing for you. I am here for that reason, to identify your mistake. In financial instrument I have done, in consolidation I have done, now I am doing where? In business combination. Correct? So my role is that only, to inform you what mistake you can do. Chalega? Now, listen carefully. This point, I am asking some question. First question, whenever question comes, first ask one question, whether DTA or DTL is given in the balance sheet of Acquiree. First ask one question to yourself, whether DTA or DTL is given in the balance sheet of Acquiree. If the answer is no, don't read. What does it mean? It means what? There is no difference between carrying amount and tax base. Very good, excellent. It means what? Tax base of INA is equal to carrying amount of INA. Now, if you are calculating deferred tax due to business combination as per Ind AS 12, then in that case, always what you will assume? Ki carrying amount is equal to, tax base is equal to carrying amount of INA. So this assumption will prevail now. This assumption will prevail. Bolna yes or no? So in this, so always this assumption will apply. Got this point? First point you understood? Second point. This point you understood. Second point. If the DT or DTL is given in the balance sheet of Acquiree, what does it mean? Tax base of INA is not equal to carrying amount of INA. Understood? So here tax base of INA is not equal to carrying amount of INA. It means can the tax base must be given in the question. If not given, the question is wrong. Am I right or not? Bolna re. Are you able to understand? Have you understood? So in this case, if the tax base of INA is given, means question is correct. Are you able to feel me? The tax base will be given. I am given. Thank you very much. Thank you very much. In that case, when you calculate asset, if the tax base of INA is given, so when you write down all asset, we have written all asset. So this all asset will be including DT of Acquiree, ki will be excluding DT of Acquiree. Including ki excluding? Excluding. This liability will be including DTL or excluding DTL? Excluding DTL. 100% correct. 100% correct. So here, वही लिखा है मैंने, that only I have written, कि asset excluding DTA. Be careful in calculation. Here you will do mistake in exam because you write down total asset. Be careful. Asset excluding DTA, liability excluding DTL. So INA, the fair value and the tax base of INA will be excluding DTA and DTL. Now on that, calculate DTA and DTL. The difference means the formula become what? Write down asset excluding DTA, liability excluding DTL. Find out the total fair value, total tax base, then find out the taxable or deductible temporary difference, then calculate what? DT and DTL. Understood? Means in this whatever DT or DTL you have calculated, so now whatever DTA or DTL you have calculated, this is the DT or DTL of which company? Acquirer ki Acquiree? Of Acquiree. Yes or no? Bola re. Means in the CBS means what? Balance sheet, consolidated balance sheet. What will come? Can I say DTA or DTL of acquirer will come at carrying amount, plus you will do what? DTA or DTL of Acquiree, this whatever you have calculated, this will come in CBS now. What about DT and DTL appearing in the balance sheet of Acquiree? Whether that will be added? No, that will not be added. That you ignore. Because this is new DTA, new DTL. Chalega? Have you understood? Have you understood? One second. From the beginning. Okay? Look, what happened? There are two types of students. One who have already understood everything previously. One who are trying to understand right now. So I am repeating for those students who are trying to understand for the first time. For them I am repeating. Chalega? So once again, react with me. I am assuming that you know Ind AS 12, huh? That assumption I have taken. So you know taxable, you know deductible, you know tax base, you know carrying amount, that you know. Yes or no? If you don't know that, then I can't help you right now. Right now I can't help you. Okay? So one second. Whenever questions come for business combination and DT and DTL, they have given tax rate. First ask one question. Is DT and DTL given in the question in the balance sheet of Acquiree? If no, means tax base of INA and carrying amount of INA of Acquiree company is same. Then always this assumption will prevail and they will not give tax base because tax base will be always equal to what? Carrying amount. That becomes simplest question. Everyone will do correct in that. Understood? Then ask question if that is not applicable, whether DT and DTL is given in the balance sheet of Acquiree. If yes, so one thing is clear that tax base is not equal to carrying amount of INA. In that case, of course, tax base will be given in the question. So tax base is given, identify the tax base given in the question. So of course you will take tax base information from the question, additional information. Then you will write down all asset excluding DTA, fair value and tax base. Okay. All liability excluding DTL, fair value and tax base. Then find out taxable, deductible. On that calculate DTA or DTL as per the rate of tax given. Now in balance sheet, you write down the book value of DT and DTL of acquirer. And the whatever DT and DTL you have calculated, that will be added. Means in the balance sheet, DT and DTL, whatever is appearing in the balance sheet of Acquiree, that will not come. That will not come. Because that you have not considered only. Because here written all asset excluding what? So that is not acquired only. Chalega. But now this is the part, because all the question has been given of this nature. Actually, all question, whether it is consolidation chapter, in consolidation chapter, actually I have not stressed in this point. We have done without understanding that. In exam, doubt will come when you are not conceptually strong. Now, you only say, if this is the situation, DT and DTL is given the balance sheet, and the tax base is not given the question, can I say it is a wrong question? Bolo yes or no? 1 second. If DT and DTL is given in the balance sheet of Acquiree, and the tax base information is not given, bolo it is a wrong question or not? Can you assume tax base is equal to carrying amount? So it is a wrong question, na? 100% wrong question. Are bolna re? 100% wrong question. Means they are playing with our emotions now. Those who are conceptually strong, they will die. Those who are conceptually strong, they will die. Yes or no? Because you will die. Arey bhai, what is this? If you are not conceptually strong, you will be saved. Understand what I am saying? 100% wrong question. Na? Arey, they tax base, you are not given tax base. What is this? So in that case, there is one shortcut. Shortcut is what? I mean, right now, I will not explain the derivation of shortcut, because derivation of shortcut will take more time. That I will not say. So in that, there is one shortcut method which ICI is using, so we will also use that. Because ICI is using, therefore we are using. Understood? The shortcut is what? Take all asset including what? DTA. This is bakwas. Bakwas. But this is shortcut and answer will be correct. Understood what I am saying? In this case, you will take all asset including what? DTA. All liability including what? DTL. Then the fair value and tax base of INA including what? DTA. Now, in this, whatever DT or DTL you are calculating, now in balance sheet, what will come? DTA or DTL of carrying amount of Acquiree will come. Carrying amount of acquirer will come. Then carrying amount of DTA and DTL of Acquiree will also come. And whatever you have calculated, that will also come. Means that whatever you have calculated for Acquiree, that will also come. This all three will come in what? Balance sheet. This all three will come in the balance sheet. This shortcut, and eventually your answer will be correct. Eventually your answer will be correct. Understood what will come in the balance sheet? Means both carrying amount will come, and whatever you have calculated, that will also come, because you have taken including na. So both carrying amount of DT and DTL of Acquiree will come, carrying amount of DT and DTL of Acquiree will come, and whatever you have calculated, that will also come. So that will be, eventually the answer will come, because this is shortcut method. Have you understood this point? Have you understood this point? Why I am explaining? Because if you are conceptually strong, and if you prefer this, in exam will stuck, you will say a tax base is not given, will take including ke excluding, you will die. Because most of the question of Ind AS 12 we do in this way. In Ind AS 12 we will do in this way. But in business combination we do in this way, because all question of this nature has been given in ICS study material. Understood? Have you understood? Have you understood? Chalega, can we proceed? Can we proceed? So this also done. So I think special attention, this point I have explained you, and I hope you have understood my emotion. Now there are some special points of INA. INA means what? This INA. Normally if you have taken wrong fair value, yeah, you have not taken any INA, means any asset, any liability you have not taken, this working note is not correct. If this working note is correct, then whatever now you are doing, that is incorrect. Because fair value INA should be correct. Now, so suppose you have not taken one asset, you have taken wrong amount, game is over. Game is over. Understood? So be careful. Special attention. First, contingent liability of Acquiree. Already I have explained in consolidation chapter कि contingent liability of Acquiree will be recognized, will not be recognized in the books of acquirer. Will be recognized, will not be recognized. You remember one question we have done for provision. Last question, consolidation. Provision, which was a contingent liability of Acquiree, which become provision in the books of, because fair value was given. So what Ind AS 103 says that any contingent liability of Acquiree will be assumed will be assumed, means will be recognized in the books of acquirer if two conditions are satisfied. There must be present obligation arising from past event and fair value can be measured reliably. And fair value can be measured reliably. However, as per Ind AS 37, there are three conditions. You know three conditions? First is what? First is what? Present obligation arising from past event. Second is what? Outflow of resource which is required to settle the obligation is probable. Means that condition is missing. Means even though outflow is not probable, you can recognize now. In this chapter, you can recognize if the fair value is given. So they will confuse you by giving outflow is not probable. Then also recognize it. So I will say whenever fair value is given, recognize it. If fair value is not given, don't recognize it. Correct? So yes, recognize as provision means liability in the books of acquirer if fair value of such liability is given in the question. First point, understood? Have you understood? Correct? Have you understood this point? Yes, sir. Non-current asset classified as held for sale. So non-current asset classified as held for sale of Acquiree. Now all recognition we are doing at fair value. All recognition we are doing at fair value. But Ind AS 105 says that non-current asset classified as held for sale or disposal group classified as held for sale will be measured at carrying amount or fair value less cost of disposal. Here it is fair value. There they are saying fair value less cost of disposal, which will be lower. So our Ind AS 103 says it will not be recognized at fair value. It will be recognized as per Ind AS 105. Means lower of carrying amount and fair value less cost of disposal. Means in exam they will give you fair value and they will give you fair value less cost of disposal. Or they will say as per the carrying amount, because can I say Acquiree company is already applied Ind AS 105. If Acquiree company is already applied Ind AS 105, means carrying amount is equal to what? Carrying amount of fair value less cost of disposal, whichever lower, so you will recognize it carrying amount only now. Even though fair value is given, the fair value information for this is not at all relevant. Fair value information is not at all relevant. Understood? To recognize in the books of acquirer as per Ind AS 105, that is lower of carrying amount and fair value less cost of disposal. CD means what? Cost of disposal. Will not be recognized at fair value. Just write down one point. If Acquiree has already applied Ind AS 105, if Acquiree company has already applied Ind AS 105, so recognize that what? Carrying amount. Understood now? If Acquiree company has already applied Ind AS 105 and they will already apply, they will apply now. So if Acquiree company has already applied Ind AS 105, then recognize that carrying amount, because that carrying amount will be lower of that too. Lower of that too. Only one question has been given of this nature, but that question is not yet asked in exam. Not yet asked in exam. Then cash and cash equivalent. But the cash and cash equivalent, whether that will have fair value? No. So cash and cash equivalent will be always recognized at what? Carrying amount. Not to confuse you, they will give what? Fair value. Only to confuse you. They are playing with your. In exam, believe me, even though you know, even I am also writing with that pressure, 3 hours pressure, believe me that I know, use pressure. Why the pressure comes, you know? Not because of us. We have done studies, we are confident, but due to a lot of expectation from our relatives and parents. Itna expectation na, they think we are superhero. So much expectation, this time to you will pakka pass na re. Why you have doubt? Means everyone will say this time. So expectations, lot of expectation from us na, because they think that we are superhero. So we are superhero, enjoy na. Superhero, heroine. Are you able to say? Because of that reason, expectation, because of that expectation, we suffer in exam. I will say delete that expectation. Ignore that. Don't listen. Don't listen. Close yourself for 2 months, last 2 months. Closed. Close yourself in an empty room. Don't talk with anyone. Isolate yourself. Isolate yourself. You will become CA. This is only the case, I will say. Isolate yourself. I remember my days when I was doing CA final, we were 5 students. Out of that, 1 student was not doing CA, 4 students were doing CA. We were all isolated for last 2.5 months. We were not discussing anything. What you have done, what you have not done, that is your case. We used to only discuss whenever we have doubts. No discussion. We used to help each other, but no discussion. How much you have studied? That is fear. You have done this much. I have not done. This is fear, na? That is his life, his capacity, he can do. I will do as per my capacity, na? I can study for 6 hours. I will study for 6 hours. He can study for 24 hours. Let him study. But 6 hours I will pass. That much confidence you should have. Because you have passed all your examination, prior examination by studying only with 6 marks, na? CA Inter, if you pass with 6 hours, so this exam also you will pass. I am not saying study for 6 hours, huh? If you think you can pass, study for 6 hours, but don't think about others. Because they will give you what? I am studying for 18 hours. 6 into 3 times. So you will get 3 times more marks. ऐसा नहीं होता है. If he is studying for 18 hours, now 12 hours he is wasting. Think in that way, na? And 12 hours you are sleeping. मजा आ रहा है. So think in that way. I am not saying study for 6 hours. I used to study for 16 hours. That was my capacity. You study for 15 hours. You study for 12 hours. You study for 10 hours. But in 10 hours you should pass. That much confidence you should have. And if that much confidence you don't have, then increase the hour. Then increase the hour. If you are thinking that I can't study, I can't pass in 10 hours, then you have 24 hours now. So why you are studying for 10 hours? Then that is your mistake. Yes or no? Normally 1 minute, because this today last day, I'll just say you one thing. Last day. Today thoda sa I'll be with you to develop your mindset. Suppose, right now, suppose you have not started any revision. Okay, na? Let us assume you have only done classes, you have not started your revision. Right now 2.5 months is left. 2.5 months. This will, based on your strategy right now, it might happen you have done one time revision also. I don't know your case right now. So 2.5 months means how many days it is? 60 plus 15, 75 days you have. Okay. Now FR, you know, it requires 150 hours. Let us assume you are writing both group, 6 subject, and AFM suppose 150 hours is required. I am writing essay. It may be 200 hours also. I don't know. Audit 100 hours, DT 150 hours, IDT 100 hours, IBS तो 50 hours चलेगा. Total how much? How much? 700 hours. Correct? Is 700 hours? ठीक. Now you have 75 days. ठीक. Suppose you are supposed to do one revision full. So 700 divided by 75. How many hours per day? It means 10 hours to minimum you need to study. But sir, one more revision is required now. One more revision is required. So you will say, Acha. So this will become 75 hours. This will become 50 hours. This will become 50 hours. This will become 75 hours. This will become 50 hours. This, I don't know. Second revision not required. IBS हो जाएगा रे. IBS में क्या है? What is the total? Total is what? 300. Total is what? 1000. It means 1000 hours you require. You know 1000 hours required na? You know 1000 hours required? बोलना yes or no? तुम बताओ 1000 hours divided by 70. How many hours? So it means 13 hours required. Now you are studying for 8 hours. Nah sir, we'll study 8 hours. Sir, we'll sleep. Then sleep. Then why you are thinking you will pass? Then to it is, I will say, no, मतलब क्या है ये? You are only saying sir 1000 hours required ना, and now you are not studying for 13 hours. Whose mistake? ICI mistake? Parents mistake? Relative mistake? Friend mistake? Your mistake. So that you need to plan. You can't say no sir. Now what you do? You set your hours per day. Sir, I will study 10 hours per day. But what is this? Why you are fixing that? First identify how many hours. Then fix that strategy. And can I say in 24 hours, you can easily study 16 hours per day if you have intention to pass. If you do not have intention, so nothing will come. If you have intention to pass, you can study for 16 hours per day. If you want to pass in this attempt, then you can study. I will say either study in this attempt or study for entire life. What do you want to do? To study for 24 hours? मजाक कर रहे हैं. But if you sleep for 4 hours, you are not going to die. Will you die? Will you die? In 2.5 months, if you study only for sleep for only 4 hours, will you die? If you die, then sleep. And if you want to pass, don't sleep. Because once you become CA, then what will come? Money will come, then enjoy your life. Just try this, all you need to think. Study. All are studying. You are not an exception. You are not an exception. I have also studied. Because of that reason I am here. Whether without study I came here. Anyone who is chartered accountant, if he is saying that he is not studied, he is making fool of you. Without study, so he can't become CA. There is no chamatkar. There is no chamatkar. Understood? So you need to study. And this 2.5 months, you need to be very much effective. Highest level effective. And one more thing. Out of these 75 days, 10 days will be your abnormal loss. मान के चलो. Fever, high fever, marriage, not your marriage, others' marriage. You need to do, you bound to go. You have no other case. So 10 days might be abnormal loss. That you keep in your mind. 10 days might be abnormal loss. If happened, to make a provision for that. It is quite possible. Think about that also. It might happen you got fever now. Now fever, so we can't be effective. So quite possible we got fever. We are human. This is a human body. 5 days high fever, you can't study, you can't concentrate. So make a strategy for that also. This is only a chartered accountant because we know Ind AS 37. Because we know Ind AS 10, event occurring after reporting date. We know everything now. So make a provision for that. Understood? And then study. Then study. Only to explain some motivation. Ki yes, it is required and 100% we are capable of becoming CA at this attempt because you have passed CA inter examination. So there is no doubt about your capability. There is no doubt about your capability. You can crack any exam. Means you can crack UPSC exam if you have an intention to pass UPSC exam. But intention. What Google Baba says, Google Baba, you know na? If you search CA is complicated exam or easy exam, they will say what? Complicated exam. So you are giving that exam, so you should have be proud of yourself, na? Ki we are writing that exam, that too at CA final stage. Out of 1000 students, only 10% student will come at CA final level. It is mazak thoda na hai. Out of 1000 students, 100, only 10% student will reach to CA final stage. So this is not majak. This is not a joke. Means you have high level of potential. High level of potential. Correct? Understood? So only identify your potential and identify your weakness. Work on that. Work on that. Chalo. Now cash and cash equivalent will be recognized at carrying amount. Fair value information is not at all relevant. Be careful. Be careful. Indemnification asset. One indemnification asset means what? Do you know about indemnification asset? Now, whenever we acquire contingent liability of what? Acquiree. So, contingent liability has been acquired at current fair value. So, suppose current fair value is 100 crore. But quite possibly it is settled at 150 crore. So, that will be loss of what? Acquirer. Because that is your liability. Your liability now. So right now the fair value is what? 100 crore. But can be settled at 150 crore. So therefore, one indemnification will be given by acquiree to acquirer. In case of extra payment, we will bear the loss. It means there is a right to receive some amount. The right to receive some amount from whom? Acquiree. That become an indemnification asset of acquirer. That become an indemnification asset of acquirer. For this information will be given the question and the fair value of indemnification asset will be given in the question. Nothing to worry. Means that indemnification asset will be recognized as an asset in the books of acquirer at fair value, whatever given in the question. Whatever given in the question. So will be recognized at fair value on the date of acquisition. Correct. However, this fair value cannot exceed the fair value of liability assumed. Means if the liability assumed is 100 crore, so you can't recognize indemnification asset more than what? 100 crore. So be careful about that point. However, fair value, this fair value should not exceed the fair value of liability assumed. Okay, indemnification asset is also understood. In-house research and development project. Till now they have not asked this point, but I am 100% confident sometime they will ask this point. In-house research and development project of Acquiree. Now suppose any research project is going on in the books of Acquiree. So as per Ind AS 38 it will not be recognized in the books of Acquiree because that will not be the recognition criteria as per Ind AS 38. But what Ind AS 103 says that any asset which will meet the definition of intangible asset, even though it does not meet recognition criteria, will be recognized in the books of acquirer. Means it need to satisfy only what? Definition, not recognition criteria, not recognition criteria. So can you say any research project will always meet the definition of intangible asset because that are identifiable. That are identifiable. If they are identifiable, it will meet the definition of intangible asset. So what Ind AS 103 says that in-house research and development project will be recognized in the books of acquirer at fair value, even though it was not recognized in the books of Acquiree. Even though it was not recognized in the books of Acquiree. Be careful. Will meet the definition of intangible asset, will be recognized at fair value, even if not recognized in the books of Acquiree. Correct. So suppose on the date of acquisition, the fair value was 100 crore. So we recognize that what? 100 crore. Means one asset will come in-house research and development project as an asset in the books of acquirer at 100 crore. Okay. Now suppose subsequently, means after date of acquisition, now acquirer will incur some expenditure. So they have incurred expenditure, research expenditure 20 crore and development expenditure 50 crore. But what will be the accounting treatment of this in the books of acquirer? So in the books of acquirer, now they will apply Ind AS 38. So this research expenditure will be charged to profit and loss account, and this development expenditure will be recognized when recognition criteria is satisfied as an intangible asset. Means for this apply what? Ind AS 38. So subsequent accounting will be as per Ind AS 38. Chalega? Yes sir. But subsequent accounting is not relevant for this chapter. May be relevant for 2 marks MCQ questions. Chalega? Yes sir. Now assembled skilled workforce. Can you say whenever we acquire business, we also acquired skilled workforce? Now one doubt will come whether skilled workforce, because you will do payment for skilled workforce. You will do some payment for skilled workforce. So in question they will say that for skilled workforce they have done this much payment, or they will give the fair value of skilled workforce. Whether that skilled workforce will be recognized as an intangible asset? Bola no, because that will not meet the definition of intangible asset because they are not identifiable. They are not identifiable. So will not be the definition of intangible asset, will not be recognized even though fair value is given in the question. Even though fair value is given in the question. Then customer and subscription list. So customer and subscription list of Acquiree will be recognized as an intangible asset because will meet the definition of intangible asset. So will meet the definition of intangible asset and will be recognized at fair value. Reacquired right. This is very important. Till now not asked, but one illustration has been given for this. So 100% probable reacquired right. Do you know about reacquired right? Do you know about reacquired right? You don't know? So I need to explain this. Reacquired right means what? Suppose there is one company, A Limited, yeah, Haldiram. You know Haldiram? Everyone know na? Haldiram. Now Haldiram now give their franchisee to others. So suppose there is one company X Limited who has taken the franchisee of Haldiram. So of course they will pay some amount to Haldiram. Initial amount, suppose they paid 20 lakh to acquire that franchisee. So this franchisee will become intangible asset in the books of this company. So this 20 lakh will become intangible asset. Now this 20 lakh will be recognized in the books of Haldiram as per Ind AS 115. So that will become their revenue that they will account for as per Ind AS 115. So we are not discussing about Haldiram right now. We are discussing about X Limited. Correct. Now suppose this right was given for 15 years. This right was given for 15 years. 5 year expired. 5 year expired. 5 year expired. Now what happened? After 5 years, what Haldiram means this company seen that they are doing good business. They are doing good business in the name of Haldiram. So they will become more greedy. So they will try to acquire what? So they will acquire this company. So if they will acquire this company, so with all assets, this asset will be also acquired. Means this intangible asset was the right given by Haldiram to X Limited. Now their own right they have acquired. So that become reacquired right. Reacquired right. Understood the term? Reacquired right. Now the question is that whether in the books of Haldiram this reacquired right will be recognized as an intangible asset, their own right. Well, yes, because that also have some fair value. So that reacquired right will be recognized in the books of acquirer at fair value on the date of acquisition. This is first point understood. First point, simple. Reacquired right will be recognized as an intangible asset in the books of acquirer at fair value on the date of acquisition. Okay, subsequently, that will be amortized as per the requirement of Ind AS 38 during the remaining contractual life. So remaining contractual life is 10 years. So it will be subsequently amortized during the remaining contractual life. This point also you have understood. Now what Ind AS 103 says that because this was a pre-existing right, there was a pre-contract and that contract is cancelled. It was a pre-existing contract now. Means there was some contract done before business combination. So there is some pre-existing relationship and that contract is cancelled. So there is some gain or loss on the cancellation of the contract. That gain or loss on cancellation contract is a separate transaction which is not a business combination transaction. Therefore should be adjusted with the amount of PC. Therefore should be adjusted with the amount of PC. So how to find out that gain or loss on cancellation of this contract, that we are discussing. Understood? How to calculate gain or loss on cancellation of the contract, that we are discussing. Till now not asked, can be asked in exam. So now you will be able to understand what they have written. It will be recognized as an intangible asset at fair value on the date of acquisition. Intangible asset on the date of acquisition. Subsequently will be amortized during the remaining contractual period. Gain or loss on settlement will be adjusted with PC as a separate transaction. As a separate transaction. It will be lower of these two amounts. It will be lower of these two amounts. Correct? Point number is what? Carrying amount as per balance sheet of Acquiree. That will be given in the question. So carrying amount of that intangible asset in the books of Acquiree. Minus fair value, that will be also given. So carrying amount minus fair value. B is settlement. Given that the contract is cancelled, Haldiram will pay compensation to this much to X Limited. That is known as settlement price paid. That will be also given in the question. Correct? So carrying amount minus fair value. B is settlement price paid. Whichever is lower will become gain or loss on cancellation. If the lower amount is positive, if the lower amount is positive, it means loss. If the lower amount is negative, then it is what? Gain. Understood? Normally it will come positive also, but it is quite possible it come negative. Negative will come when carrying amount is more than fair value. If carrying amount is more than fair value, it becomes negative. Then lower will be negative only. So if negative is there, gain, positive is there, then loss. So if this lower amount, I am saying lower amount is positive, it means what? Loss. If lower amount is negative, then gain. Correct? So how to adjust? So whatever PC you have calculated, loss will be deducted. Whatever PC you have calculated as per step number 1, as per step number 1, from the deduct what? Loss on settlement and add what? Gain on settlement. Understood? This loss or gain will be transferred separately to profit and loss account. This will be transferred separately to profit and loss account. Adjustment you understood? Batao. What will be the gain or loss on settlement? A is what? Carrying amount minus fair value. B is what? Settlement price paid. Whichever is lower. If the amount lower is positive, then negative, then so that will be adjusted with PC. So in PC, loss will be deducted. Loss will be deducted. loss will be deducted and gain will be added. Gain will be added. So this become PC for business combination. This become PC for business combination. Understood? So loss will be deducted. Gain will be added. This to you need to memorize. Understood? Chalega? Have you understood? Okay, sir? Yes, sir. Now, last point is lease. This lease after Ind AS 116 till now not asked in exam. However, before Ind AS 116, one question was there with lease, but now that question become not relevant because Ind AS 116 now has been changed. ROU asset came now. So after the introduction of Ind AS 116, they have not created any question with lease, but 100% they may ask. Correct? Now, there are two cases. Case one, if the acquiree is a lessee. If the acquiree is a lessee. If acquiree is a lessee, this is only important from exam point of view. Acquiree is a lessee. So in this case, first you need to ask one question. Is the lease is a short-term lease or lease of low value asset on the date of acquisition? On the date of acquisition. Means short-term lease means if the remaining lease time is 12 months or less than 12 months from the date of acquisition, then it becomes short-term lease. Correct? Lease of low value asset they will say in exam. So is the lease is a short-term lease or lease of low value asset on the date of acquisition? If yes, then no treatment. Then no ROU asset, no lease liability will come in the books of acquirer. No treatment. Ignore that entire transaction on the date of acquisition. Understood? No treatment. Subsequently, the lease payment will be recognized as an expense over the lease term. That is subsequent accounting. But on the date of acquisition, neither ROU asset will come nor lease liability will come. But of course, they will not ask this question, they will ask this only. It is not a short-term lease, it is not a lease of low value asset. Then you need to recognize lease liability. So lease liability will be equal to present value of remaining lease payment. Present value of remaining lease payment discounted at the discount rate given in the question. Whatever discount rate is given in the question that you take. Okay. So present value of remaining lease payment on the date of acquisition, and ROU asset will be equal to what? Lease liability. ROU asset will be equal to lease liability. Understood? Means both amount will be same. So ROU asset will come with the same amount. Lease liability will come with the same amount. Understood? Simple. Simple. If the acquiree is a lessor, now in the books of lessor it can be either operating lease, it can be finance lease. If it is an operating lease, then can I say underlying asset will come? Underlying asset will be recognized at fair value. Underlying asset will be recognized at fair value. But if it is a finance lease, then underlying asset will not come. Then lease receivable will come. Then lease receivable will be recognized at present value of remaining lease payment, discounted by using whatever discount rate is given. So recognize lease receivable at present value of remaining lease payment on the date of acquisition. However, they will not ask this. From my point of view, they will ask this only. Understood? This is 100% expected. They can add this point in any question. Chalega. With this, we completed step number 2. Abhi step number 2 hua. Means I am covering all the points. I am covering all the points of all the questions, and whatever not asked, that also I am covering. Step number 1 was what? Calculation of PC. Step number 2 is what? Fair value of INA plus DT and DTL calculation. Okay. Now step number 3 is measurement of NCI. This to already we have understood. Where? Same thing, copy paste. That is copy paste. 2 method. First preference is what? Fair value method. Second preference is what? Proportionate share in INA method. If fair value of NCI is not given or cannot be calculated, use what? Proportionate share in INA method. No discussion required. Can we move? Can we move? Yes, sir. Step number 4 also similar. If step acquisition, we need to find out fair value of previously held equity interest in case of step acquisition. Already done. So we'll find out fair value of previously held equity interest will be equal to number of equity shares acquired by parent company before date of acquisition, multiply by fair value of equity shares of subsidiary company on the date of acquisition. This becomes fair value. Compare with carrying amount. This will be remeasurement gain and loss, will be transferred to PL or OCI. If question is silent, and PL. Same to same. Now calculations goodwill. Same formula. This was the only formula in consolidation chapter na. Fair value of consideration paid, fair value of previously held equity interest, fair value of NCI or Pasina method, fair value of INA, this is goodwill or gain on bargain purchase. Correct. Now this gain on bargain purchase, till now we have not discussed much, but with MCQ question now this also can be asked. What Ind AS 103 says, if I will explain with my notes, because with 2 marks question that is important. What Ind AS 103 says that whenever there is a gain on bargain purchase, so there are 2 accounting treatment for that. 2 accounting treatment. There are 2 accounting treatment, 2 different situations. But bargain purchase means what? Bargaining has been done. When bargaining is possible, when the other party is under financial stress, when the other party is under financial difficulty, then only bargaining is possible now. Means we do bargaining with weak people, which will not do bargaining with strong people now. For example, you went to purchase vegetable in Reliance Smart, so you will not do bargaining. Whether you will do bargaining in Reliance Smart or any supermarket, you will do bargaining. You will pay whatever is fixed price, but you will go to vendor, street vendor then. Indian na, everyone do or not? You will do bargaining because we know they are weak people. So normally bargaining is possible when we know the financial difficulty of other party. So that in that case bargaining is possible. So what Ind AS 103 says that, is there any evidence of bargain purchase? Means whether the acquiree is under the compulsion of sale, whether they are under financial difficulty. Well, if there is evidence, then the gain on bargain purchase will be transferred to capital reserve, but through OCI. Through OCI. Understood? So in that case, gain will be recognized in OCI and accumulated in separate component of equity, and that is capital reserve. But if there is no evidence of bargain purchase, then one doubt will come, so how gain is coming? So in that case, Ind AS 103 say that then do remeasurement of fair value of INA, fair value of PC, fair value of NCI. It might happen that you have done some mistake in calculation of that. So do remeasurement. But after remeasurement, still gain is coming. Then that gain will be directly transferred to what? Capital reserve. Then that gain will be directly transferred to capital reserve. Understood? So if gain on bargain purchase still exists after remeasurement, then such gain will be recognized directly in capital reserve. But ultimate effect in balance sheet is where? Capital reserve. Now, if they ask you only balance sheet, so this question become important for MCQs. MCQs में this type of question can be asked. They will say whether it will be transferred through OCI or directly to capital reserve. So depends upon situation. Depends upon situation. Understood? Yes, sir. With this we completed this. Now I have given one full journal entry, taking all question into consideration. If you can understand this journal entry, your balance sheet will always tally. Your balance sheet will always tally. Okay. Now try to understand. Can you say all asset will come at which value? If the fair value is not given, then at what? Carrying amount. But that carrying amount is deemed fair value. That carrying amount is deemed fair value. Chalega? Understood? This journal entry in the books of acquirer. Asset of acquiree. Yeah? Then indemnification asset may come at what? Fair value. At fair value. In-house research and development may come at what? Fair value. These are the assets which are not recognized in the books of acquiree, but will come in the books of acquirer. It might be missed in the balance sheet. Understood what I am saying? It might be missed while doing balance sheet, so be careful. Then customer and subscription list at what? Fair value. Reacquired right on fair value. Now whenever reacquired right, so there will be some loss on cancellation. Loss on cancellation will be transferred to what? PL. So loss on settlement will be transferred to PL as per working note. As per working note. See me देखे में gain on settlement. So if gain on settlement, so write down 2 gain on. What is this? I am not written. Okay. Gain on settlement will come in credit side. Gain on settlement will come in credit side. Loss will be debited. Gain will be credited. I have not written gain, but gain should also come. Chalega? Understood? But I hope you have understood. Normally in exam loss will come. I know. Loss will only come. Understood is fine. So these 2 points you have understood. New point. Loss will be transferred to what? And it is already adjusted with what? PC. Already adjusted with PC. Understood? Have you understood? Then non-current asset classified as held for sale at carrying amount or fair value less cost of disposal, whichever is lower. Understood? ROU asset will come at present value of lease payment. Present value of lease payment. Cash and cash equivalent will come at carrying amount. DTA will come as per working note. However, you have understood that one shortcut wala method, then DTA books wala carrying amount will also come, and whatever you have calculated that will also come. Already I have explained that point. Understood this point? To be careful about that special point. Chalega? Yes sir. Goodwill will come as per working note, and remeasurement loss of previously held equity interest will be transferred to what? PL. Remeasurement loss of previously held equity interest will be transferred to PL. I think all debit side you have understood. All debit side you have understood. Bolo yes or no? Now come to credit side. Gain on bargain purchase will be transferred to capital reserve as per working note, means either goodwill or gain on bargain purchase. Liability, all liability at, if the fair value is not given, then that is deemed fair value. Provision means contingent liability of Acquiree will now become provision. Contingent liability of Acquiree will now become provision. At what amount? Fair value. DTA will come as per working note. But special point you have understood. Correct. Then NCI will come as per working note. Investment previously held equity interest will be now eliminated, will be closed, will be cancelled at carrying amount. Correct. Remeasurement gain will be transferred to PL as per working note. Understood? Yes sir. Then these all are PC. These all are what? PC adjustment. Cash and bank, reduce cash and bank from balance sheet. Equity share capital and securities premium will come with a fair value of equity shares issued. Number of equity shares multiplied by nominal value, and the balancing figure will be transferred to. Normally, I have seen students do mistake यहाँ पर. They will not write securities premium. Be careful about that. Correct. Then deferred liability will come. Deferred liability will be either non-financial liability, means financial liability either current or non-current, depending upon situation. Then contingent consideration will come. It can be financial liability, it can be equity, depending upon situation. If question is silent, always liability. If question is silent, then liability. But it can be equity, it can be liability. If equity, then so under other equity. Then last, SBP reserve. What is this? SBP reserve is what? Replaced SBP award. So that will be accounted as what? SBP reserve. Whatever amount you have included in what? PC. If you have understood this journal entry, balance sheet will always tell you. Because the balance sheet of Acquiree incorporate this. Only one journal entry. I have, for your understanding, I have prepared balance sheet also. Understood? Means Acquiree, all will come at book value. Normally what mistake we do, I am just saying. Acquiree will come with this journal entry amount. Batao. PP, it will be book value plus fair value. Correct. Goodwill, normally I have seen a student do mistake. They will not take this book value. This book value will come now. They will always take working note amount. I don't know why. Sometime nahi chalta. Correct. So book value plus what? Working note. Understood? Other intangible asset, in-house research and development. This will be the nil now. Because in their balance nothing will come. So this will be what? At fair value. Reacquired right at fair value. Customer lease at fair value. Indemnification asset at fair value. These all are intangible assets. ROU asset will be book value plus fair value. DTA will be book value plus working note, but special point. So it can be book value plus working note. Book value plus working note. Special point. Investment, book value plus fair value. All investment. Okay, sir. Okay. Inventory, okay, book value plus fair value. Trade receivable, book value plus fair value. Cash and cash equivalent, normally student do mistake. They forget to deduct PC point. PC has been paid in cash. So book value minus what? PC plus carrying amount. Plus carrying amount. Are you able to understand? This will help you at the time of revision. Correct? Then equity share capital, normally student do mistake. They will forget to take this PC properly. And what they will take this also. It is book value plus PC plus nil na. Acquiree equity share capital will not come. However, here they will not do mistake. Here in reserve and surplus they will do mistake. Most of the students do mistake. So it is book value plus PC securities premium, but nil na. This will not come. Securities premium of Acquiree company will not come. Reserve and surplus of Acquiree company will not come. Okay. So book value plus PC. PC means what? That securities premium. Okay. Retained earning, it is book value plus minus gain or loss, whatever we have calculated. Gain or loss on remeasurement, gain or loss on settlement, that will be adjusted. So book value plus gain or plus minus gain or loss plus nil. Nil na. Then SBP reserve, book value plus PC, whatever we have done SBP reserve, plus nil. SBP reserve of Acquiree will not come. Capital reserve, it will be book value as plus working note. Working note means gain on bargain purchase. Capital reserve will come, but as per working note, as per working note. Are you able to understand? Other reserve, it will be book value plus nil. Have you understood the entire point? Reserve and surplus. Reserve and surplus, it is an area where student do mistake. Understood? NCI will be as per working note. NCI will be as per working note. Non-current liability and current liability, you will not do mistake much. It will be book value plus fair value. Lease liability will be book value plus fair value. Fair value means present value of lease payment. Okay. Deferred liability will be PC. PC amount will come. Deferred consideration. Here it will be nil. Correct. Contingent consideration PC plus nil, because here it will be nil only. DTA, it will be book value plus working note, but a special point is there. Borrowing, book value plus fair value. Trade payable, book value plus fair value. Provision, book value plus fair value. Provision means one contingent liability assumed. Here also student do mistake. Contingent liability assumed. So here it was nil. Here it will be only fair value. Taken at fair value. Understood? So if you have understood this, balance sheet will tell you. Balance sheet will tell you. Got this point? So with this, we have completed all the discussion. Now I'll like to take one question, good question. Directly a good question, which was asked in exam. Okay. However, there are 3 questions of this nature given. I can't take all the 3 questions. I'll take one question which was asked in exam. Chalega? And that was a good question, therefore I am taking that. This question, the draft balance sheet of Swan Limited and Duck Limited. This was an exam question. This question was what? There were 2 questions in ICS study method. They have combined the 2 questions and make 1 question. Means this is a combination of 2 questions of ICS study method. Swan Limited, Duck Limited, PP, investment, inventory, financial asset, trade receivable, cash and cash equivalent, other current asset, share capital. They have given Swan Limited rupees 10 each. This is rupees 10 each. This is 100 each. Be careful about this. Financial liability, long-term provision, deferred tax. Oh, deferred tax is given in the balance sheet of? Means nothing has been given where? Means one thing is clear, that carrying amount and tax base are same. This means that only now. Correct? Then they are given this. Okay, chalega. On 1st April 2023, Swan Limited acquired 80% equity shares of Duck Limited. Swan Limited agreed to pay to each shareholders of Duck Limited 20 rupees per equity share in cash, 20 rupees per equity share in cash, and to issue 5 equity shares of rupees 10 each of Swan Limited in lieu of every 6 shares held by the shareholders of Duck Limited. So what is the swap ratio? 5/6. The fair value of shares of Swan Limited is 100 rupees per share on the date of acquisition. Swan Limited also agreed to pay an additional consideration being higher of rupees 90 lakh and 30% of any excess profit in the first year after acquisition of Duck Limited, after acquisition over Duck Limited profit in the preceding 12 months made by Duck Limited. The additional amount will be due in 3 years post the date of acquisition. So additional consideration is payable after how many years? 3 years. Duck Limited earned 30 lakh profit in the preceding year and expected to earn 40 lakh in the financial year 23-24. Have you understood this point? I think because you have done this point now, so you have understood this point. But let me explain. Ki what they are saying, ki additional payment will be higher of what? Point number A, 90 lakh. Point number B is what? 30% of excess profit. Excess profit. Excess profit, na? Correct. Means in this case, can I say there can be 3 situations. Either both are same, then 90 lakh is payable, or A is less than what? Sorry, A is more than B, then also 90 lakh is payable. Or third, A is less than B, then also 90 lakh is payable. Means in any situation 90 lakh is the amount payable in cash. So 90 lakh become deferred consideration. But in the third situation, some excess consideration can be there, that become contingent consideration. So can I say this has 2 parts. One is deferred consideration, one is contingent consideration. Correct. Now contingent consideration will depend upon what is the probability of profit in future. They have given expected profit is what? 40 lakh. And preceding year profit is what? 30 lakh. So on that basis 40 minus 30 is become 10. 10 into 30% how much? 3, which is less than what? So it means, can I say the contingent consideration is not probable? If contingent consideration is not probable and they are not given fair value, it means what? Ignore that. Ignore that. Then ignore that. So if the contingent consideration is not probable and they have not given fair value on the date of acquisition, means ignore that. Means we'll assume fair value of the contingent consideration on the date of acquisition is nil. On the date of acquisition is nil. Understood? So I hope you understood this point. So 90 lakh is payable after how many years? 3 years. Then the fair value exercise resulted in the following. What they have given? What was the question number? This one. Now fair value exercise, they have given fair value of property, plant and equipment and investment. So they have given 2 fair value, PP 1200 lakh and investment 300 lakh. Duck Limited own a popular brand name that meet the recognition criteria for intangible asset under Ind AS 103. Independent valuer have attributed a fair value of 250 lakh for the brand. However, the brand does not have any cost for the tax purpose and no tax deduction are available for the same. It means, can I say 250 lakh become what? Fair value. So this brand will be recognized at fair value and the tax base will be equal to what? This point they have given for tax base. So however, the brand does not have any cost for the tax purpose, and no tax deduction are available for the same. It means, can I say ki no amortization for this? No, because they have no cost, so no amortization for this. But can I say it will be taxable only when it will be sold? It will be taxable whenever it is sold. So right now, can I say tax base will be equal to 0. Tax base will be equal to 0. Understood this point? Correct. So tax base will be 0 because right now the cost price is what? 0 in the books of what? Acquiree. In the books of Acquiree. Following in the statement of contingent liability of Duck Limited as on 1st April 2020. The contingent liability is given. Lawsuit filed by a customer for a claim of 20 lakh. Fair value is given. So this will be recognized as provision at what amount? 5 lakh. Sorry, 5 lakh. Understood? So this will now become provision in the books of acquirer. Even though Ind AS 37 condition is not satisfied. So they have given it is not probable that outflow of resource embodying economic benefit required to settle the case. This is bakwas point. Not relevant. Now they have given any amount which would be paid in respect of lawsuit will be tax deductible. Means it will be tax deductible only when the amount is paid. So right now the tax base is what? 0. Tax base is 0. So this is all information they have given for tax base. Then income tax demand of 70 lakh raised by tax authority Duck Limited has challenged the demand in the High Court. So fair value is given. So this will be now recognized as provision in the balance sheet of acquirer at 20 lakh. It is not probable. So this point is also not relevant. But in this question, in this point, you can see no information about tax base is given. So what will be the tax base? Tax base will be what? Now, why 20 lakh? Why 20 lakh? As per? Why tax base is equal to carrying amount? Huh? No, that is not a case. You are saying 20 lakh correct, but in the now, can you say income tax is permanently disallowed under Income Tax Act? Income tax is permanently disallowed under Income Tax Act. If it is permanently disallowed, it is an item of permanent difference. If you remember AS 22, so any item of permanent difference, no deferred tax. Any item of permanent difference, no deferred tax. So as per Ind AS 12, they have not defined permanent difference, but there is one shortcut. If there is any item of permanent difference, always tax base will be equal to carrying amount. Because if the tax base is different from carrying amount, then there will be some difference and that will become taxable or deductible. So I am just giving one shortcut. If any item is of permanent difference, always tax base will be equal to what? Carrying amount. This is shortcut I am saying from examination point of view. So this income tax is an item of permanent difference. It is an item of permanent difference. So whenever there is any item of permanent difference, tax base will be always equal to carrying amount, because we don't calculate any deferred tax on that. We don't calculate any deferred tax on that, and therefore this will be equal to what? 20 lakh. This will be always equal to 20 lakh. Understood? This point have you understood? Yes, sir. Can you say apart from this, all the assets and liability for which balance sheet information is given, tax base will be equal to carrying amount, because there was no DTA, there was no DTL in the balance sheet. Understood? Yes, sir. Then Duck Limited has certain equity settled share based payment original award which were replaced by new award issued by Swan Limited. As per terms of original award, the vesting period was 5 years, and as of the acquisition date, employee of Duck Limited had already served 2 years of services. So what is the expired period? What was the original vesting period? As per the new award, the vesting period has been reduced to 1 year from 1 year from acquisition date. Means the remaining period was 2 years, that was reduced to 1 year. Means the total vesting period become how much? 3 plus, means out of 5 how much was expired? 2. 3 may say 1 reduced, means 2 was left. Means the remaining period was reduced to 2 years. Expired period is 2 years. So total vesting period become what? 4 years. So can you say replace vesting period will be now 4 years? Replace vesting period will be 4 years. Understood this point? The fair value of award on acquisition date, original award is 12 lakh, new award is 18 lakh. So what is the amount attributable to pre-combination period? You do 12 lakh multiplied by 2 divided by 5 or 4, whichever is greater. 5 or 4, whichever is greater. So it is coming how much? How much? 4.8. So out of 18 lakh, how much belong to pre? What is the balance? Balance was 13 point. So this belong to what? Post combination period. So this will be included in PC. What will do about 13.2? Nothing, because they have not asked about subsequent accounting. So you can calculate, but there is no accounting treatment of this, because this will be accounted as expense during post combination period, not on the date of acquisition. So this is not relevant, I will say. This is not relevant. Chalega. Further, Swan Limited has also agreed to pay one of the founder shareholder of Duck Limited, shareholders of Duck Limited, a sum of 15 lakh, provided he stay with the company for 2 years after acquisition. तो बताओ, it is a contingent payment or fixed payment? It is paid to employees, shareholders ना, contingent payment or fixed payment? Whether it will be forfeited if you leave the job, yes, so it will not be included in PC. So this part is not relevant for PC. All point whatever I have discussed, that is only applied, correct? So this point is not at all relevant for PC calculation, not at all relevant for PC calculation. But one doubt will come, कि Swan Limited has also agreed to pay. Now whether this 15 lakh is paid or not paid? Not paid. Agreed to pay means can till now not paid. If paid, to some journal entry will come, but not yet paid, so no journal entry. If suppose paid, so this will become prepaid EB expense. Then it will become prepaid EB expense account debit to bank. If paid, but not paid, so no journal entry. Not paid to no journal entry. Suppose paid, so it will become prepaid EB expense. Prepaid EB expense. Understood what I am saying? Yes, sir. The acquisition cost of Swan Limited is 26 lakh. Whether it will be included in PC? Acquisition cost of Swan Limited is what? 26 lakh. Whether it will be included in PC? It will be charged to PL as an expense. Applicable tax at 30% for DT and DTL. Assume 10% per annum. Discount rate. This is for deferred consideration. Deferred consideration. Also assume, unless stated otherwise, all items have a fair value and tax base equal to carrying amount. Thank you very much. Even though not given, we'll assume that only. Even though not given, we'll assume that only. You are required to prepare opening consolidated balance sheet. Now you already say, from exam point of view, this question comes for 15 marks. It is not complicated. It's not complicated, and we should expect this type of questions. I will see in CA Inter amalgamation chapter also you have done this type of questions. थोड़ा सा advanced level. This SBP award, this advanced. But if you know everything, provided you are not doing calculation mistake, this is simple question. And the time constraint, how much time you are taking. For that, your hand should match with your mind. Means as your hand should work with your mind. Mind is fast, but hand is not fast. Hand is fast, but mind is not fast. Accident hota. So your mind and hand should work together. Should work together. Can you help me? Fast. I will explain only. You want me to do or explanation? Explanation. तो बड़ा पहले PC calculate कर लेते. I have the answer, I think so. It is 86. चलो, I will show with the answer only to save your time. This is the question. So calculation of PC. First they have given cash payment. Cash payment, what they have given? 20 rupees per share. 20 rupees per share. How much shares they have acquired? 80% of? 80% of what? What is the total number of shares? 900. 900 divided by 100 means 9 lakh. 9 lakh na. So 80% of 9 lakh. So what is the total number of shares acquired? 80% of 9 lakh. Multiplied by what? 20 rupees per share. So this becomes total cash payment 144 lakh. Understood? Then fair value equity share issued. So once again 80% of 9 lakh. So this much shares acquired. What is the swap ratio given? 5/6. What is the fair value of shares given of acquirer company? 100. So this becomes total number of shares. Also identify this total number of shares issued. Means first calculate this one. Total number of shares issued. How much? 6 lakh multiplied by what? Fair value. So this becomes 600. Can you say out of this 6 into 10 will be nominal value and 6 into 90 will be what? Securities premium. That is also required to be understood in balance sheet. In balance sheet. So always first calculate 6, then multiply with fair value so that you can understand what is nominal value and what is the premium amount. Understood this point? Correct. Then fair value of deferred consideration 90 lakh. Discount rate was 10%. Payable after how many years? 3 years. So we have done 0.751. This also you can calculate. This also you can calculate. Fair value of contingent consideration in this question, it is nil. It is nil. Then fair value replace SBP already we calculate 4.8. 4.8. This become total PC. Now whenever this type of question, always think about one journal entry. What is the effect of this where in balancing? So if you pass journal entry, investment in subsidiary company account in SFS, separate financial statement, cash will be reduced by 144. Equity share capital will come how much? 60. Securities premium will be how much? 540. Financial liability means deferred consideration will be how much? 67.5. And SBP reserve will come how much? 4.8. So this effect need to be given in consolidated balance sheet. Consolidated balance sheet. Then calculation of DT and DTL. So guys, we will find out fair value of all assets. Now we know that only for two assets they have given what? Means I have done one shortcut in my class. You can do individual asset also. That is better. I will say individual asset you do because they will give marks on individual asset also. In class I have done one shortcut. The total asset you can find out. The total asset was 2680 given. 2680 given. Then minus the carrying amount of PP and investment. Because for that fair value is given. So I have deducted carrying amount of PP and carrying amount of investment. Understood what I am saying? Then add fair value of what? Achha, carrying amount of PP is how much given? Carrying amount of PP? 1000. So deduct. And fair value is given how much? 1200. Correct. Carrying amount of investment given how much? And what is the fair value given? And there is one brand also. Carrying amount is 0, but fair value is given how much? So that I have added. Fair value, brand we have added. So this shortcut I have added. This become total fair value of all assets. Total fair value of all assets. In exam, please do individually. Please do. Please don't do shortcut. They will also give shortcut marks. Always do individual asset. Okay, sir? Correct. Then the carrying amount is 2680 only. Carrying amount is 2680. Now total liability, the fair value, because total liability I have taken, so it is what? Equal to what? Fair value is equal to carrying amount. So 1360, this is also 1360. But there were two more contingent liability which was assumed. Contingent liability which we assumed. So provision for legal suit was what? 5 lakh. And provision for income tax was how much? 20 lakh. That fair value is given. Tax base of this was nil. Tax base of this was nil and tax base of this was 20 lakh. Already we calculated. For brand also the tax base was nil. So therefore this become what? Equal to carrying amount. For brand the tax base was nil. Understood? This become the total fair value. This is total tax base. This become taxable temporary difference. On this we calculated DTL 505 into 30% minus 151.5. This become fair value of INA after DTL. After DTL. This become fair value of INA. Understood? One mistake, this is wrong. Be careful. Therefore, write down individual asset. In exam, don't do shortcut because high chance of mistake in shortcut. In shortcut, high level of concentration required. And don't do. They will not give marks also in this. They will, if they 2 marks is there, they will give half marks for this. Chalega? Understood? Then calculation of goodwill or gain on bargain purchase. So fair value of PC already calculated for 80%. How much we calculated? 81.639. 42 it is coming. Some approximation difference किया होगा. चलो 816.39 or 42. Understood? And then value of NCI, Pasina method or fair value method. If nothing is given, then proportionate share in INA. Nothing was given. We have done 20% of what? This amount. Normally here also student do mistake. They calculate on this amount. If they are doing 2 working note, इसलिए never do 2 working note, do 1 working note. And always calculate on 1653. 1653. Understood? Then fair value of minus this amount. Minus this become gain on bargain purchase will be transferred to capital reserve. Now you can prepare balance sheet. For this question 50 marks, but I don't think it is complicated question. And similar question was there in ICS study material when this question was asked. Correct? But when this question was asked, most of the students said complicated question. Time was more. So that was lack of practice, I will say. You have a lack of practice means you can't write everything in exam. So it means you need to practice how to write. How to write. What happened now? In CA Inter, if you remember CA Inter days, you used to go to classroom. Correct now? Most of the teacher in CA, including me, will give everything in writing. And what we write, you also used to write. Whatever we used to solve, you used to also solve. We used to write everything. Even though if you say some bakwas thing, that also used to write. Yaad karo CA Inter days. In CA final, most of the notes are given in what? Handwritten. In class. Most of the faculty has converted their notes to handwritten notes. Means you are not writing, you are not solving. Even though, and if teacher is not solving, so you will never solve. Even though teacher is writing, you will not write because solution is there. And we'll give the PDF of what? Class notes. In Google Drive, what happened? We'll give you the class note PDF. You don't write only. Most of the student will not write. Means writing practice gone. This is oral exam or writing exam. There also difficulty. Your hand will not work. You will not be able to understand how to start. You know the solution, but you are not able to write. Write. Writing will only give marks. Writing will only give marks. Okay. This also you have understood. Done. So question was easy. Now let us come to the second point of this chapter. So can I say simple acquisition you have understood? All steps I have explained. Now come to reverse acquisition. Arey yaar. Today I need to complete that also. 1 minute. I'll give break. Chalo. 10-minute break. Now, can we start? Now, hello, audible? Now, one clarification before I start a new concept, that this format I have just given for explanation. In exam, don't do acquirer, acquiree separately, okay? Write down only total. In exam, write down total. Don't make in 3 column, okay? This is only for explanation. In exam, don't do in this way, okay? Only write down total column. Understood? Have you understood? Don't do in this way, okay? Once again, I am saying don't do in this way. Because balance sheet is never prepared in this way. You are preparing balance sheet as per presentation. So once again, this is only for explanation. In exam, only write down total column. For this, you can prepare notes to account if you want to prepare. Understood? Okay? Yes, sir. Now let us come to next point. Now whatever points are there, balance concept, from exam point of view, if I will teach to the extent of ICI question, it is very easy. Only need to understand the questions and the concept. And from my point of view, they will not create new question on that. If they will create new question, they will create new question for first part only. Understood? From my point, means this is my expectation. It might change also, okay. But I know ICI very much. So for balance part now, if they will ask question, they will only ask the similar question given in ICI study material. Correct? Understood? So reverse acquisition, they have given 2 questions, and on that basis of 2 questions they will ask in exam. 1 question is already asked, 1 question till now not asked in exam. Got this? Now when I say reverse acquisition, you have understood that accounting acquirer and accounting acquiree are not same. Whenever in question of fair value, both the companies are given. I am just giving indication. Whenever in question fair value of INA, both the companies are given, it means it is indication, it is a question of what? Reverse acquisition. Understood what I am saying? Whenever in question the fair value of both the company, legal acquirer and legal acquiree is given, it is an indication that it is a question of reverse acquisition. It means in that first step will be identification of accounting acquirer. Identification of accounting acquirer. Now, there are 2 types of questions. Either it will be a question of absorption, or it will be a question of amalgamation. If it is a question of absorption, how to identify accounting acquirer? Either they will give you information directly in the given question ki these are accounting acquirer. If direct information given, thank you very much, then to no calculation required. But if direct information not given, then we to identify. How to identify that I am explaining. How to identify that I am explaining. Understood? Are you able to understand what I am saying? Suppose in the question given ki in the question is given A Limited acquire B Limited, but the shareholders of B Limited dominate the board of directors of what? Combined into new company. So in that case, what happened? It is understood B Limited is what? Accounting acquirer. If that information given, direct information given, there is no need to identify. It is already given in the question. So if not given the question, how to identify that I am saying. So if not given the question, in case of absorption, first you will find out number of shares issued to the owner of legal acquiree. Means number of shares legally issued. Means A Limited absorb B Limited. So how many shares A Limited will issue to the owner of B Limited? So that will be what? Number of shares of legal acquiree. That will be given in the balance sheet. Multiply by swap ratio. Multiply by swap ratio. Are you able to understand what I am saying? Or if swap ratio is not given, sometimes swap ratio is not given, then number of shares of legal acquiree multiply by fair value of shares of legal acquiree. Fair value of shares of legal acquiree divided by fair value of shares of legal acquirer. Understood? If swap ratio is given, the first preference. If swap ratio is not given, then second preference. Understood? Have you understood? So what is the formula? Swap ratio given, the number of shares of legal acquiree multiply by swap ratio. If not given, the number of shares of legal acquiree multiply by fair value of shares of legal acquiree divided by fair value of shares of legal acquirer. So this will be the number of shares which will be issued to whom? to the owner of legal acquiree, to the owner of legal acquiree. And can you see in this will add number of shares already held by the owner of legal acquirer, already held by the owner of legal acquirer. So this becomes the total number of shares in combined entity. This will be the total number of shares in combined entity. Suppose this is 10,000 and this is 5,000. So this become what? 15,000. This become 15,000 now. So now we'll find out percentage of voting right based on the number of shares. So can you say this will do 10 by 15, this will do 5 by 15. So 10 by 15 means what? 66.67%. This will be 33.33%. Understood? In this, what is happening? The owner of legal acquiree is getting largest portion of voting right, and therefore they will be identified as what? Accounting acquirer. Even though they are legal acquiree, so it will be a case of what? Reverse acquisition. Understood? So this is the way to find out. So if the owner of legal acquiree, is receiving largest portion of voting right in the combined entity, then legal acquiree will be identified as accounting acquirer, and it will be case of what? Reverse acquisition. Understood? This calculation you can do by row. Okay. Then if it is a case of amalgamation, if it is a question of amalgamation, then how to find out? So in amalgamation, can I say they will give two company and two company become a new company. So A and B will be legal acquiree. In case of what? A and B become AB now. So this is legal acquirer and this both are what? Legal acquiree. So there are two legal acquiree. There are two legal acquiree in case of amalgamation. Are you able to understand? So we need to identify out of the two legal acquiree who is accounting acquirer and who is accounting acquiree. Means this is AB is the new company. This cannot be accounting acquirer. This cannot be accounting acquiree. Because new company cannot acquire anyone. New company cannot acquire anyone. In this, either A will be accounting acquirer or B will be accounting acquirer. So other will be accounting acquiree. Are you able to understand what I am saying? So in this case, because both are legal acquiree, so company A, company B write down. Then first write down the number of shares, their number of shares. Then multiply by fair value of their shares, fair value of their shares. This will be the fair value of business of their share, their company. So number of shares multiplied by fair value of their company shares. This will be total fair value business. Then divide by issue price of legal acquirer. Legal acquirer means AB company, AB Limited. So issue price of legal acquirer. Issue price of legal acquirer. If not given, then we will assume that issue price is equal to face value. Suppose they have not given कि legal acquirer is issuing shares at what price? It is not given. Then we will assume that shares are issued at par. The shares are issued at par. So if not given, assume face value. In one of the questions, face value was not given. Then assume rupees 10. Then assume rupees 10. Are you able to understand what I am saying? One second. Concentrate. Right now we are saying amalgamation. In amalgamation, what happened? Two company become a new company. So A and B will be legal acquiree and AB Limited will be what? Legal acquirer. But can you say out of A and B, one will be accounting acquirer, one will be accounting acquiree. Means legal acquirer is nothing. Legal acquirer is nothing. But first we need to find out what is the legal number of shares to be issued by AB Limited to the owner of A and B. To the owner of A and B. Understood this point? Are you able to understand? So first write down the number of shares of both the company. Multiply by fair value of shares of both the company. This will become fair value of business of both the companies. Sometimes fair value of business will be given in the question. Fair value of business means what? Fair value of business means what? Whether fair value of business and fair value of INA are same. No, fair value of business means including goodwill. Fair value of business, so that will be including goodwill. And fair value of INA means what? Excluding goodwill. So whenever they say fair value of entity or business, if they will say fair value of entity or fair value of business, that means it is including goodwill. So to find out number of shares, we want fair value of business. Understood? So fair value of business minus fair value of INA is nothing but goodwill. Understood? तो fair value of business and fair value of INA are two different terms. Fair value of business and fair value of INA are two different terms. Right now for number of shares we want fair value of business ki fair value of INA. Fair value of business. So it might happen they have given fair value of business only. If they have given fair value of business, so take directly. If not given, so what you will do? Number of shares multiply by fair value of that company shares. Understood? Are you able to understand? Once you got fair value business, then divide by issue price of legal acquirer who is issuing shares legally. So issue price of AB Limited, that will be given the question. If not given, then assume issued at par. If face value is also not given, assume rupees 10 or 100, whatever you want to assume. Whatever you want to assume. So this will be the number of shares to be issued by AB Limited to the owner of A and B company. Means this become the total number of shares in combined entity. This become total number of shares in AB Limited. AB Limited. Now find out percentage of voting right. Percentage of voting right. Percentage of voting right. Whoever is receiving largest portion of voting right, he become what? Accounting acquirer. Suppose this is 60%, this is 40%. So A become what? Accounting acquirer. B become what? Accounting acquiree. C, AB become what? Anda. AB is anda. AB is nothing na. AB is nothing. We want to find out accounting acquirer and accounting acquiree na. So AB is nothing. AB is only legal acquirer. AB is only legal acquirer. But for this chapter we want what? Accounting acquirer and accounting acquiree. Understood? Have you understood this point? So I think this point you have understood. It will be also a case of reverse acquisition. Amalgamation will be always a case of reverse acquisition. Because new company cannot be accounting acquirer. New company cannot be accounting acquirer. Understood? So amalgamation will be always a question of what? Reverse acquisition. But absorption can be or cannot be a reverse acquisition. So be careful about absorption. Be careful about absorption. Understood what I am saying? Whatever I am saying from examination point of view. Okay. Detail I am not going. Detail I am not going. Chalega? But if you understood all my emotions, all questions can be done. All questions with perfection will be done. Have you understood this? So once you have identified accounting acquirer, step number 2 is what? Calculation of PC. In this we call it calculation of effective PC. We call it what? Calculation of effective PCs. Okay. Now in this there are two situations. Situation 1, situation 2 from examination point of view. Situation 1 is what? You first see in the question what they have asked. Now, first see whether the fair value of shares of accounting acquirer and accounting acquiree has been given in the question. If the fair value of shares of accounting acquirer and accounting acquiree is given the question, it becomes first case. Situation number 1. If not given, then what need to be done? That we need to understand. So if the fair value of shares of accounting acquirer and accounting acquiree is given in the question, this becomes situation 1. This becomes situation 1. In that case, what we'll do? We'll assume that if accounting acquirer would have legally acquired accounting acquiree, how many shares would have been issued by accounting acquirer to the owner of accounting acquiree? Understood? Have you understood? One second. What happened? Ki A absorb B Limited, but B become accounting acquirer and A become accounting acquiree. So we'll assume if B would have legally acquired A, how many shares B would have issued to the owner of A? Ulta. Understood what I am saying? Are you able to understand? So we'll make one imaginary situation. We'll make a imaginary situation. Ki what if accounting acquirer legally acquired accounting acquiree, so how many shares accounting acquirer would have issued to the owner of accounting acquiree? Understood? English you are understanding? Bolna re? Are you able to understand? Yes sir. So number of shares that would be issued by accounting acquirer to the owner of accounting acquiree if accounting acquirer would have legally acquired accounting acquiree. This is a imaginary situation. Imaginary situation, correct? Legally this is not happening. Legally, so already we calculated in the step number 1 only. Are you able to understand? Correct. So in this case, first we'll find out number of shares of accounting acquiree. Accounting acquiree. Understood? That will be given in the balance sheet. Multiply by fair value of shares of accounting acquiree. That will be given in the question. Already situation number 1. This will become total fair value business of accounting acquiree. Fair value of business of accounting acquiree divided by fair value of shares of accounting acquirer. So can you see, if you divide by fair value of shares of accounting acquirer, this will be the number of shares that would be issued by accounting acquirer to accounting acquiree, to the owner of accounting acquiree, if they would have legally acquired what? Accounting acquiree. So this become effective number. This become effective number of shares to be issued. Effective, not actual. Legally not. This means a imaginary situation. This will be the number of shares that would be issued by accounting acquirer to the owner of accounting acquiree, but not legal number of shares. Understood this point? Have you understood this point? Bolo. Ek baar yes bolo, then only I will come. One more point. Financial instrument chapter and consolidation easy to teach in revision class. Business combination is not easy to teach in revision class. It can be only done when you have done that chapter perfectly. Otherwise, you will not be able to understand any of my emotions. Understand what I am saying? Business combination is difficult to teach in revision class. Dekho, I can teach, but I know if I am a student, I will not be able to understand anything. So I teach from a student point of view. Whether you can understand or you can't understand. And I don't delete much point because I know it is important. I will teach even though you don't understand, because I am not teaching from, I am teaching from all student point of view. If he or she can understand, I should teach na. Are bolna re? If suppose he can understand but you can't understand, so I can't skip na from his point of view. He will be at risk now. So I need to teach if one student can understand. Bolna yes or no? So that is my viewpoint. My viewpoint is that. Okay? So one second. Business combination is very difficult from revision point of view, from a teacher aspect. Consolidation chapter is easy to revise. Financial instrument chapter is easy to revise. All chapters are easy to revise. But this chapter, believe me, is easy to teach in regular class. Difficult to teach in revision class. Understood? Correct. So one second. One second. If you are not able to understand, raise your hand. I will 1 second teach. Understood? 1 second. Have you understood step number 1? There are only 2 questions, believe me. I am doing from exam point of view. If that question comes, you should do perfect 15 out of 15 or 14 out of 14. Maza tab aaya. If you are getting 14 out of 14 with that question, then that is what some job na. So, and I know out of that 2 questions, 1 question will come. So let us make it perfect. Let us make it perfect. 1 second. Have you understood step number 1? What was step number 1? Identification of accounting acquirer. Once you have identified that, we'll go to step number 2, calculation of effective PC. So effective PC, there are 2 situations from exam point of view. Whether the fair value of shares of accounting acquirer and accounting acquiree is given the question. If given, then situation 1. In that case, you will find out how many shares accounting acquirer would have issued to the owner of accounting acquiree if accounting acquirer would have legally acquired accounting acquiree. Correct. So first you will find out number of shares of accounting acquiree, that will be given in the balance sheet. Multiply by fair value of shares of accounting acquiree, that will be given in the question. That become total fair value business of accounting acquiree, you can find out. Divided by fair value of shares of accounting acquirer, that will be given the question. This become number of shares that should be issued to the accounting acquirer, to the owner of accounting acquiree. So this is effective number of shares. Effective number of shares. And can you see, if you have calculated effective number of shares multiplied by what? Fair value of shares of accounting acquirer, that is effective PC. That is the effective PC. Ultimately, this amount, sunna, everyone, this amount and this amount will be same. Bole yes or no? If you are good in mathematics. Bolo. Because this will be, can you say, have you understood this point? This amount and this amount will be same. because this will be kata kata. You have done na. यहाँ पर D means, if I will show you, suppose this is 1000, number of share is 10,000. This is 20. This become what? 2 lakh. Divided by suppose 25. How much it is coming? How much is coming? 2 lakh divided by 25? 8,000. 8,000 into what? 25 na? How much? So always this then this will be same. देखो same आया. But then also you can't stop यहाँ पर हाँ. Working note. You will do this much. Means you need to calculate effective number of PC. Effective number of share that will be issued. So you can't stop यहाँ पर. But always this 2 lakh and this 2 lakh will be same. Have you understood this point? Have you understood this point? चलेगा? Now understood. This is situation number 1. Understood. In this case, legal number of shares issued and the effective number of shares to be issued will not be same. Legal number of shares which is already issued by A to B will not be equal to that will be issued by B to A, of course. Yes or no? Legally, who is issuing? Legal acquirer will issue to what? Legal acquiree. But effectively, who is issuing? Accounting acquirer is issuing to whom? Accounting acquirer. Both will not be same. Both will not be same, na? Understood? Okay. Now, situation number 2. If the fair value of shares of both the company is not given, if that is not given, then question will say require, then in that case question will say calculate requisite number of shares. Requisite number of shares. Requisite means what? Minimum. Minimum number of shares. Don't issue unnecessary higher number of shares. So whenever what is not given? Fair value of shares of both the companies are not given. Yeah, one of the companies are not given. And the question has said calculate requisite number of shares to be issued. Requisite number of shares to be issued. Understood? In this case, how to calculate? First, we'll find out number of shares of accounting acquirer. Number of shares of accounting acquirer. Acquirer means what is in the balance sheet of accounting acquirer. Now, already we calculate their voting right as per step number 1. Voting right is calculated now. Means this much share is for suppose 60% voting right. Suppose accounting acquirer 60% voting right in combined entity. So 60% already we calculated. Means this much share they are holding for how many voting right? 60%. Now we'll find out what is the voting right of accounting acquiree. So their voting right is 40%. So if this is 60%, so how much is 40%? Are you getting? So suppose this is 10,000. For how many percentage? 60%. So for 40%, what will be the share to be issued to the accounting acquiree? 10,000 divided by 60 into 40. How much? 6 667. Chalo, theek hai, okay. But don't take fractional amount. Understood? So 667. So this become what? Effective number of shares that will be issued by accounting acquirer to the owner of accounting acquiree. Correct? Multiply by fair value of equity shares of accounting acquirer. Fair value of equity shares of accounting acquirer. But fair value will not be given the question. Fair value will not be given the question. So we'll find out fair value business that will be given the question. So fair value business of accounting acquirer divided by their number of shares will be what? So this will be calculated indirectly. Fair value of business divided by total number of shares. Correct. This fair value is nothing but intrinsic value. बचपन में क्या ना intrinsic value in amalgamation chapter. Intrinsic value of shares. In amalgamation chapter you have done intrinsic value of shares. You have done or not? Yes, forgotten. Intrinsic value of shares in amalgamation chapter. Achha, how to calculate intrinsic value of shares, that also you know. So can you say we'll take all asset at which value? Book value, fair value. Fair value. This is fair value na. So why will take book value? Apply common sense. Acha, all asset will be including goodwill, excluding goodwill. Including goodwill, excluding goodwill. Including, because value of business na, fair value of business. Understood? So this will be including goodwill. Including goodwill at which value? Minus all liability at which value? This is the fair value of business. So suppose they have not given business, so you can find out now. You can find out. Divided by what? Number of equity shares. This becomes fair value of shares. So if not given, you can calculate. If not given, you can calculate. Understood? So fair value business divided by total number of shares. This becomes the fair value. This becomes the fair value equity shares of accounting acquire. Multiply this karo. This becomes effective PC. Effective PC. Have you understood? This much. This much you understood. So step number 2 done. How to calculate effective PC? What is step number 3? Calculation of goodwill or gain or bargain purchase. So calculation of goodwill. So it is fair value of effective PC. Whatever we have calculated in step number 2. Minus fair value of INA of accounting acquiring. INA batao, including, excluding. What? Goodwill. Excluding goodwill. Be careful. This fair value of INA excluding goodwill. So this will be goodwill or gain on bargain purchase. Now prepare balance sheet. Now prepare balance sheet. Okay. Understood? Now balance sheet what? Accounting acquirer. Accounting acquiring. In exam, please don't do in this way. Write on total. Please. Okay. Now can you say accounting acquirer will come all book value? All book value. So accounting acquirer, every information will come at book value. But accounting acquirer will not come at book value. So non-current asset will come at book fair value. If fair value is not given, then assume what? Book value. But that is deemed fair value. Understood? So all asset will come at what? Fair value. Goodwill as per working note. As per previous working note. Correct. Current asset is fair value. Equity share capital, can you say PC amount? PC amount. PC means which amount? This amount. PC, effective PC, whatever you have calculated. Correct. Securities premium, can you say PC amount? Means some portion nominal value, some portion securities premium will come. Are you able to understand? Correct. Non-current liability, sorry. Other reserve will not come. Other reserve will not come. Any other reserve or accounting inquiry will not come. Okay. Capital reserve will come in case of gain on bargain purchase. Capital reserve will come in case of gain on bargain purchase. Correct. Non-current liability at fair value, current liability at fair value. Balance tallied. Super easiest question. Super to super easy question. 2 questions is given. I'll do both the question if you permit me. If you permit me. Chalega? But very fast. I will take not more than 10 to 15 minutes. Chalo. Because I know if they will ask that question only. First question is what? This question. Question 23. On September 30, 2001, entity A issued 2.5 shares in exchange for each ordinary shares of entity B. What is given? Swap ratio is given. All the entities B shareholders exchange their shares in entity B. Therefore, entity A issued 150 ordinary shares in exchange of 60 ordinary shares of entity B. If this is given, this is not given, then also we can calculate. Means what they have in 60 into 2.5 divided by 1 is will come 150. Even though not given, we can calculate now. Understood? The fair value of each ordinary shares of entity B is 40. Fair value is given. Fair value is given. The quoted market price of entity A is given. Fair value of both companies is given. The fair value of entity A identifiable assets and liability are the same as the carrying amount except the fair value of entity A non-current asset at 30th September 2001, which is 1500. Well, apart from non-current asset, all fair value is equal to carrying amount. Only non-current asset fair value is given 150. Now you can see in this case, A absorb what? B. A has absorbed what? B. So who is accounting acquirer? Legal acquirer. A. Who is legal acquiree? But they have given fair value of INA of what? A. So it is an indication, it is a question of what? Reverse acquisition. Step 1 what? Identification of accounting acquirer. Indication mila. So if they have given fair value of INA of accounting acquirer, it means it is a question of what? It means it is a question of reverse acquisition. Or they have given both fair value, it means indication it is a question, it may be a question of what? So always do step number 1, but if they have given only fair value of INA of accounting acquiree, then it is not a question of what? Reverse acquisition. It means it is a question of simple acquisition. Understood? This is indication in exam. Indication in exam. Have you understood this point? Correct. The statement is given, this you can read, then prepare CBS. Then in this question they have also asked calculate EPS. EPS I will solve separately. Means they have asked you to calculate EPS as per Ind AS 33. EPS as per Ind AS 33. Batao. First step will be what? First. Step number 1 is what? Identification of accounting acquirer. Okay. So number of shares to be issued to the owner of B na? Who is accounting acquiree? X or Y? What? B. But what is the number of shares? 60. Swap ratio is given 2.5. 150. Number of shares already held by A is how much? Already held in the balance sheet of A. How much? Already held in the balance sheet of A? 100. Total is what? 250. Find out voting right. 150 divided by 250. 60 and 40. Who is getting largest voting right? So B become what? But it is an accounting acquirer. It is a case of reverse acquisition. Identification of accounting acquirer done. Then step number 2 is what? Calculation of effective PC. Calculation of effective PC. So we will say number of shares that would be issued by B to the owner of A if B would legally acquire what? A. So batao, what is the number of shares of A? 100. What is the fair value of shares of A? What is the fair value of shares of B? So what is the effective number of shares that would be issued? 40. What is the fair value of shares of accounting acquirer? So what is the effective PC? But this and this will be same always. Then also calculate in this way. Don't do shortcut. Don't do shortcut. So 1600 effective PC. Effective PC. Correct. Now we'll calculate PC, goodwill or gain or bargain purchase. What is the effective PC? What is the INA? INA. But what is the non-current asset? Fair value is given. What is the current asset? Not given. Take carrying amount. Of which company? A or B? Who is accounting acquiree? A. So give me the current asset of A. What is the non-current liability? What is the current liability? So minus. What is this? 2000 minus 700. 1000. So what is goodwill? 300. Understood? Correct? 300. Now prepare balance sheet. Prepare balance sheet. Batao. You write down non-current asset, book value plus fair value. Give me the total. Book value of which company? B. Fair value of which company? A. Book value of which company? Book value of which company? Fair value of which company? Understood? Batao. Can you give me the total non-current asset? 4000 total na. Then goodwill will come. Goodwill is how much? 300. Then current asset, can you give me book value plus fair value? Book value of B, fair value of A. How much? 1000. Total you will do, I will do. Total is 6000. Then equity share capital. But book value plus PC, effective PC. Book value is what? Book value of B. B book value is what? 600 plus PC how much? How much? 2000 200. Then reserve and surplus, what is given? Retained earning. Retained earning, book value plus nil. Dangerous, huh? Dangerous. In exam, be careful, huh? Book value plus nil. How much? 1,400. Correct. Then non-current liability, book value plus fair value, 1,500. Then current liability, book value plus fair value, total will match. How much minute we have taken? In bad handwriting, 5 minutes, 7 minutes, 8 minutes. Good handwriting, 15 minutes. Yes or no? And if you are taking this question 25 minutes, 30 minutes, it means not good. So it should be so much efficient that simple question you can do very fast. And worst question give more time. In simple question, don't be slow. Do very fast. What happens in exam? Simple question we simple question very fast. Worst question you think much na. In this question, if you know everything, what to think? Nothing to think. Balance it, tell it. And for bad handwriting, no marks deduction. ICI will not deduct marks for bad handwriting. If you are not writing in presentable way, means in format, they will deduct marks. Handwriting, they will not give an extra marks for good handwriting. No deduction for bad handwriting. Even though you are doing spelling mistake now, no marks deducted because they also don't know spelling. We see are not good in English, huh? We see are not good in English. Correct? So they also don't know spelling. Even though you are writing shortcut, means you are not writing full, they will not deduct marks. But my suggestion, in balance sheet, write down full. Working note, you can use shortcut. But my suggestion, even though they don't deduct, but don't take risk. My type of teacher will deduct. My type of teacher, I will deduct. I don't know about them. In balance sheet, don't use short form. If time constant, then use short form now. Suppose you have only 2 minute rep. Can you write them full? Then do fast. Let them deduct. But they will give some marks now. What is required? Smart work is required. How much to write, decide on that day. How much to write, decide on that day. Depending upon time. So you need to be smart. How much should write, how much you should not write, that will be decided on that day. You can't do pre-planning for that. Understood? Chalega? Yes, sir. Done. One more question is there. Achha, in this question, one more point. Samajhna. This is conceptual point. In this case, batao, what is the legal number of shares issued by A to B? 150. Legal number of shares. And what is the legal number of shares held by A? 100. Means this become what? Total 250. 250. What is the face value? Face value is what? Nominal value is what? 10. So can you say it should come 2500 now? This will not match. Because in this case, legal number of shares will not match with effective number of shares. Correct? Therefore, don't do anything, leave like this. You can see one note has been given by ICS solution. The amount recognized as issued equity interest in CFS is determined by adding issued equity of legal subsidiary immediately before the business combination and the fair value of consideration effectively transferred. However, the equity structure appearing in CFS, the number and time of equity interest must reflect the equity structure of legal parent, including equity interest issued by legal parent to effect the combination. So they have given one word note for this, that this will never match. But as per the compliance of Companies Act, it should match. So abhi ICI is not clear ki what to do about that. Understood? To leave as it is, even though that will not match. Understood? Don't do any adjustment for this. So it will not match because effective PC and legal number of shares are different. Understood? Have you understood this point? Correct? So we are doing as per ICI solution only. We are doing as per ICI solution. Second question, one more question which is asked in exam, which is already asked in exam. One question is there, AX and BX. Is that question AX, BX? This question. Question 21. AX and BX amalgamated on and from 1st Jan. Amalgamation case, it will be always a reverse acquisition. It will be always a reverse acquisition. A new company ABX was formed to take over the business of existing company. You can see balance sheet has been given. ABC issued requisite number of shares. Oh, requisite number of shares. Understood? This is situation 2. Situation 2. Got this point? To discharge the claim of equity shares of holders of transfer a company. Prepare notes showing PC and discharge thereof and draft balance sheet of ABX. Assume that both entities are under common control. This case number A is not abhi out of topic. Means they have given 2 cases in this. We are doing case number B. So case number A, to business combination under common control, that we are not doing right now. Case number B is what? When business combination is not under common control, it becomes a case of reverse acquisition. And they are given, assuming BX is what? Larger. And their management will take the control of what? Entity. It means BX is what? Accounting acquirer, and AX is what? Accounting acquiree. Given in the question, thank you very much. Given in the question, thank you very much. Understood? Correct. If not given, then we have to find out. Then we can find out by applying step number 1. Then they have given fair value of net asset, fixed asset, fair value, inventory, fair value business. Oh, fair value business means what? Including, excluding? Including goodwill. Be careful. This is not fair value of INA, this is fair value business. Fair value of business. Understood? Understood this point? Chalega? Yes, sir. Now let us do. Now, can you say, suppose they have not given identification of accounting acquirer. So let us identify. So step number 1. AX, BX. But can you give me the number of shares? Number of shares? But a fair value is not given. So can you say we can start with the fair value business? What is the fair value business? 11,000 and this becomes the fair value business divided by issue price of what is the ABX na? New company. Whether issue price given? Not given. So we'll assume what? At par. We'll assume at par. Face value is given of ABX. ABX not given na. So in this question, face value of ABX is also not given. So this is issue price of which company? ABX. Legal acquirer. Legal acquirer. So we'll assume, let us assume face value is equal to 10. ICI has also assumed without informing. So if you are reading ICI solution, you will think this is the face value of which company? AXBX. That is not correct. This is the issue price of which company? ABX. That is not given. Take face value of which company? ABX. That is not given. Assume what? 10 rupees or 100 rupees, whatever you want. We'll assume 10 as per ICI. Okay. So what is the number of shares that would be issued? 1100 and 1400. Correct. But what is the voting right? This total is what? 2500. Voting right? 44% and so who is getting largest portion of voting right? BX. Therefore, BX is a accounting acquirer. Reverse acquisition. This will be the always reverse acquisition. Now, we'll find out effective PC. But in this case, fair value is not given. Fair value is not given. So first, we'll find out what? We are here to find out requisite because there is a requisite number of shares. So first, can you give me what is the number of shares of BX? 700. For how much voting right? 56 voting, 56% now. What is the voting right of AX? So if 700 is for 56, so how much is for 44? So you'll do 700 divided by into what? So 550. 550. Can you say in this case this is only legal number of shares to be issued? Because they have asked calculate requisite number of shares to be issued. तो requisite number of share to be issued will be 700 and 550. 700 and 550 to maintain the same voting right. To maintain the same voting right. So in this case, requisite number of shares and legal number of shares will be same. Are you able to understand what I am saying? This point? Have you understood this point? So what is the number of shares issued to the owner of BX? 700. What is the number of shares to be issued to the owner of AX? 550. Now you need to give me effective PC will be 550 multiplied by fair value of shares of which company? Fair value of shares of which company? BX, AX? BX. So can you find out fair value shares of BX? They have given fair value business of which company? They have given BX how much? 14,000 divided by their number of shares. So 14,000 divided by how much? 7. What is the fair value? 20. So 550 into 20 how much? 1100. 11,000. Means ultimately it is coming equal to what? But then also calculation required. If you are doing shortcut 0 marks, don't be smart यहाँ पर. Understood? It will come always this. I also know this. It will come this. But that is without calculation. You need to show everything. So this become what? PC, effective PC. And because this is only number of share to be issued. So case 20, 10 is nominal value and 10 is what? Premium. 10 is nominal value and 10 is premium. Now prepare the balance sheet. You can do. Find out pehले goodwill. Goodwill again that you can find out. Effective PC is how much? 11,000. Now you add on INA excluding goodwill. So you can add on all INA. But the PP how much? Fair value is given 9,500. Inventory fair value is given 200. Balance all will come at carrying amount. Can you give me fast? What you have given? Inventory is 1,300 now. Inventory I ask. Inventory is what? These two fair value is given. Other will come at carrying amount. Can you give me other fast? Give me total now, other asset. Total. Apart from PP inventory, give me all other asset at carrying amount. $3,000. Can you give me all liability at carrying amount? All liability at carrying amount. Can you give me INA? 10,000. So goodwill is 900. Goodwill is 900. Now you can do the balance sheet. Book value plus fair value. Book value plus fair value. Understand? Means just try to understand. Everyone. This too you have understood. Calculation part you understood. Balance sheet now you can prepare. Balance sheet is very easy. Book value plus fair value. Book value of which company? And fair value of which company? AX. Balance is super easy. Super duper easy. Correct? You can't expect this type of question. Means when this type of question will come, I will say how they are asking 14 marks question for this. This should be 8 marks, 9 marks question at CA final level. Okay? Understood? But they are asking this type of questions. Why they are asking? Because they know that you are not practicing, you are not revising. So if you are not revising, this question is difficult. If you are not revising. Now one more point. Here AX sunna, AX, BX become ABX. So actually this is liquidated. This is also liquidated. So in the eyes of law, we can prepare books of account of which company? Means actually we are preparing balance sheet of which company? ABX. But from the point of view of what? BX. So it is balance sheet of ABX only. But from the point of view of BX. Correct? Similarly, in the last question, A acquired B. Means A limited absorbed B. But B was what? Accounting acquirer. And A was accounting acquiree. But this was the liquidated. This is liquidated now. So बताओ, in the eyes of law, you are preparing balance sheet of which company? So balance sheet of legal acquirer, but from the point of view of what? B. from the point of view. So in the solution, they are not writing in this way. Practically we do in this way. Ki balance sheet of A, but from the point of view of what? B. But in ICA solution, they are not writing in this way. I don't know why. They are saying balance sheet of B only. But actually balance sheet of B is not practically possible. B to liquidated. In the eyes of law, A is existing now. So legally we are preparing balance sheet of which company? A. But from the point of view of B. Understood? Have you understood? So don't be confused with this. Don't be confused with this particular concept. Got this point? So this also completed. I hope you have understood. So this, if you revise this now, you will be able to understand what to do before exam. All points I have covered. Then concept number 3 is business combination under common control. Only one question has been given, that too not asked. This part has not been asked in exam till now. But what is not asked, that become more important. Business combination under common control. I hope you have understood the meaning, to you have understood. Whenever business combination is there and one company is controlling before and after business combination, ultimately controlled by the same party, so that become business combination under common control. Correct. So in this appendix C to Ind AS 103 will be applied. Appendix C means pooling of interest method. Now pooling of interest method, what they say, ki all asset, all liability will be incorporated at book value. Means all asset, all liability will be recognized, incorporated at book value. Understood? And all the reserve and surplus of transfer company will be also maintained. And the identification will not be altered. It means general reserve will become general reserve, PL will become PL, retained earning will become retained earning, securities premium will become securities premium. Means identification of reserve and surplus we cannot alter. So reserve and surplus of transfer company will be also maintained. Understood? And any difference between PC and share capital of transfer company will be transferred to capital reserve. Means simple, but any difference in the journal entry will be transferred to capital reserve. Means capital reserve can have debit balance also. Capital reserve may have debit balance also. Means in this case, no goodwill, no gain on bargain purchase. Only difference will be transferred to what? Capital reserve. This is 3 simple steps. 3 points. Means with journal entry, if I say, the journal entry is what? Journal. All asset at what value? All liability of what value? All asset of which company? Transferor company. In this case, acquiree is known as transferor, acquirer is known as transferee. In this case, okay. So all asset of transferor company at book value, all liability of transferor company at book value, or reserve and surplus at book value, equity share capital and securities premium will come as PC. Whatever PC is there. So any difference will be transferred to what? Capital reserve. Means this capital reserve you can calculate in this way. So PC minus share capital of transfer company is what? Capital reserve. So this difference will be what? Capital reserve. Correct. Now coming to how to do in exam. So step number 1 is calculation of PC. Now in this also situation 1, situation 2. First situation, where if swap ratio of fair value of equity shares of transfer company is given, both the companies are given. If swap ratio is given or the fair value of both the companies are given, then PC will be calculated in this way. The fair value of equity shares issued to the owner of transfer company, number of shares to be issued multiplied by fair value of equity shares of transferee company. Now number of shares to be issued, if the swap ratio is given, then number of shares of transfer company multiplied by swap ratio. If swap ratio is not given, then fair value of equity shares of both the company will be given. Then number of shares of transfer company multiplied by fair value of equity shares of transfer company divided by fair value of equity shares of transfer company. This way we can find out. In all questions we are doing this only. This when fair value, either swap ratio or fair value is given. So this is the way to calculate PC. Understood? Correct? But sometime in the question, which is the only one question given, in that fair value was not given, swap ratio was not given. In that how to calculate? Means swap ratio is not given and fair value of shares is also not given. Correct? So in that case, if swap ratio or the fair value is not given, This na. If the swap ratio and fair value of both the companies, fair value of shares of both the companies are not given, and question require what? A requisite number of shares. Once again, requisite means what? Minimum number of shares. In this case, how to find out? What is the concept? First, we'll take book value of net asset of transfer company, because we are recording at what? Book value. So we'll take book value, not fair value. Book value of net asset of transfer company. So when A Limited absorb B Limited, so there is one transfer company. There is one transfer company now. But AB become A and B become AB. So there are two transfer company. So if there are two transfer company, so both transfer company will come. Understood? If it is a question of amalgamation, so there are two transfer company. In case of absorption, there is one transfer company. So book value of net asset of all transfer company, I can say in this way. Less reserve of transfer company to be maintained. Because we are here to maintain reserve and surplus. So all the reserve and surplus which are supposed to maintain, deduct kar do. So okay, net asset means total equity. Total equity na. Out of this total equity, deduct what? Reserve to be maintained. Means this become total equity required. Total equity required divided by issue price of transferee company. Issue price of transferee company. Which company? But if issue price is not given, then face value. If face value is not given, then assume 10. Understood what I am saying? So issue price of transferee company, if not given, assume face value. This will be the number of equity shares issued to whom? To whom? To transfer company. If there is only one transfer company, then okay, all the equity shares are issued to the owner of that transfer company. But if there are two transfer company, so then it should be allocated to the owner of what? Both transfer company. It should be allocated to the owner of both transfer company. Understood? So this should be allocated. I am here to explain this only, how to allocate. How to allocate. Understood what I am saying? Suppose in the last question, AX, BX become ABX. So this become two transfer company na. So you need to find out the total number of shares which are to be issued by ABX to AX and BX. How much will be given to AX and how much will be given to BX. Correct. Now you only say this should be allocated in the ratio of book value of net asset, in the ratio of fair value of net asset. Means book value of net asset of both company, ki fair value of net asset of both company. Book value of net asset of both the company. ICI is also doing that. But correct is fair value of net asset. Concept is that, but will follow what? ICI. Will follow what? ICI. We are giving exam what? ICI. I can give you my concept if you want. Correct is fair value only. Till now they have not done correction in that. Once corrected, I will teach what? Fair value by name. Understood? I can give you the concept regarding that if you want. Because what happened in exam, both will be given. Book value will be given, fair value will be given. Then you will be confused. So as per ICI, what they are doing? Allocation in the ratio of book value. As per me, it is what? Fair value. But in exam, both will be given. You will be confused now. If I will not discuss right now. Yes or no? Because both given, then you are confused. So just try to understand, everyone. Suppose we both are under same control. Choro. But can I say, Abhi, I have absorbed you. So it means I am taking all your asset, all your liability. So whatever assets and liability I have given, for that I will issue equity shares. So equity share, whatever I am issuing, that will be based on the fair value of shares or book value of shares. Fair value of shares now, as per current market price. It means PC is based on fair value ki book value. Fair value. It means can I say whatever consideration I am paying, that is based on fair value of net asset. And if you understand what was situation number 1, I have taken what? Fair value of equity shares. Means PC is based on fair value of equity shares. So when I am saying total number of equity shares, that should be allocated based on book value of net asset or fair value of net asset? Fair value of net asset. But ICI is doing wrong in this. which I don't understand why they are doing wrong, will follow wrong only. Correct? So yaad karo, in this situation, because this question is not yet asked, will be definitely asked in one of the attempt. In one of the attempt, they will definitely ask. I don't know which attempt. So will be allocated to the owner of transfer company in the ratio of what? Book value of net asset of transferor company. This is as per ICI. Chalega. Okay, so once you have allocate, the balance is very easy. Book value plus book value, book value plus book value, book value plus book value. Equity share capital will be what? Book value plus PC. Simplest balance sheet, because everything is coming at book value. Reserve and surplus also what? Book value plus book value. In this case, reserve and surplus of transfer company will also come. Understood? Have you understood? Correct. So simplest balance sheet. Only one question we have, that is AX and BX wala question. I will explain with the question only. That AX and BX one question was there na? The second situation. What was the question number? And that similar question they will ask. Even though they create a new question, you will be able to do it if you have understood my emotions. Understood? 20? This question. So question already we have read. Only situation number A we are doing, assuming both the entities are under common control. So but first you will find out what, because here both companies are transfer company now. So can you give me AX, BX total? Can you give me total net book value of net asset? Net asset means all asset minus all liability. You are giving total or separate? Total 18,000. This is net asset. Net asset or asset. Then reserve to maintain total, reserve and surplus. So what is the total equity? Minus करना रे, minus. This is the total equity, 13,000. Okay, shortcut is what? Take equity share capital. This shortcut. This is concept. This I am teaching as per pooling of interest method. This is concept. Shortcut is what? Take total equity share capital of AX and BX. That will be always 13,000. That is shortcut. You can apply shortcut exam because ICA is also doing shortcut. But this is concept. Now you are able to understand why we are deducting reserve and surplus, because they are supposed to be maintained. That are supposed to be maintained. Are you able to understand? So I am teaching as per concept. Shortcut is what? 6,000 plus. That also you can do because ICA is also doing in that way. Then but divide by what? Issue price ki face value. No. Issue price ki face value. Issue price. But issue price is not given, you will take what? Face value. Face value is also not given, you will take what? This is assumption. But issue price may be 15 or so. Then divide by 15. Then divide by 15. So 10. So how many shares? This will be allocated in this ratio. This you have not given to me. In the ratio this na. Book value of net asset. Therefore I was demanding both. So allocate karo 1300. What is the ratio? AX how much? BX how much? 9,000, 9,750 and 9050, 700. Allocate karo. Eight, 6 to 7 and 6 to 7, 6 to 7, 0.5. You are dividing 13,000. So 6 to 7 na, approximately. It cannot be in fraction. 6, 7, 2. 6, 7, 3 kar do. Total is 1300 na. So capital will be into 10, that is 6270 and 6730. Understood? Now balance sheet will be very easy. Balance sheet kya hoga batao? Balance sheet will be, can you say this plus this plus this, all plus na. Equity share capital also total will come 13,000. But this will be different. Number of shares will be different. But total will be 13,000 only. This will be this plus this will be this plus this will be plus this. Therefore, they are not asking this question. But if asked, this is a difficult question. If you are not revising. Simplest, once you have done revision, if you know. But difficult, if you have forgotten, then what you will do, you will forget now. Pulling of interest matter is gone out of your mind, then you will not be able to do it. Revise. One attempt pakka they will ask. I don't know which attempt. Chalega. So business combination under common control also done from my point of view. From exam point of view. Chalega. Now last concept number 4. They have given 2 questions on this. We'll take 1 question. Demerger. Now demerger means what? Demerger means what? There is one company having multiple business. Suppose business 1, business 2. In this now one business will be transferred to new company. A new company is formed and business 2 will be transferred. So can you say this company become acquiree and this company become acquirer? So who will pay PC? Means suppose this is A, B. Now say who will pay PC? To whom? But in this case, PC is paid by B, not to A. PC is paid to the equity shareholders of what? A. So this become demerger. So whenever PC is discharged to the equity shareholders of demerged company, this is known as demerged company. This is known as demerger. This is known as resultant company in this case. This is known as demerger. So indication is what? Whenever PC is discharged to whom? Shareholders. It is a case of what? Demerger. Indication. Indication understood? Indication. Now, this too you have understood. Now, this demerger can be of 2 types. If I say in this way, this was demerged company and this is what? Resultant company. And there was one Mr. X who was controlling this company 70%. They were holding 70% shares of A Limited. Now, after demerger, can you say this B Limited will also issue shares to whom? 70%. Proportionately only. They will issue shares proportionately. Means they will issue 70% of their shares to whom? Mr. X. So it is become business combination under common control. Business combination under common control. Understood? So in the books of this company will apply Ind AS 103 ki appendix C to Ind AS 103. In the books of acquirer means B Limited will apply Ind AS 103 acquisition method ki appendix C to Ind AS 103 pooling of interest method. This is business combination under common control na. Abhi to we have done which method? Will apply pooling of interest method. Pooling of interest method. But if I say in this way, this was one company which was demerger and there were no shareholders who were controlling what? Means there are many shareholders but no shareholder holding more than what? So no control was there. Quite possible. It is not controlled by any entity, not controlled by any individual. So in this case also proportionate shares will be given. It means no shareholders is controlling this also. So it means before and after business combination there is no common controlling party and therefore this will become business combination not under common control. So in this case which Ind AS will be applicable? Acquisition method will be applicable as per Ind AS 103. Understood? Correct. Now they have given 2 questions in ICI material. In one question they have mentioned कि there was common control party. So that becomes this question. One question they have not mentioned कि whether there was any common controlling party or there was no common controlling party. So what will you assume? Means from your point of view, what is the better assumption? No common control party, but in that question also ICI is assuming common controlling party. From my point of view, it should be business combination not under common control, but ICI is doing solution as per common control party. So it means I will just give you 3 cases from examination point of view. Correct. Suppose demerger question came. Demerger question asks, if they said common controlling party, they have given, then so it is business combination under common control. Then no doubt. Now, if they have not given, no common controlling party. Understood? In this there are 2 cases. From exam point of view, as per ICI assumption, if they have given all asset and liability are taken over at book value, then we'll assume what? It is business combination under common control. In that question it was given. But suppose they have given, now a new question is framed, suppose, and they have given all assets and liabilities are taken over at what? Fair value. Then can you assume this? Then so it will be what? Business combination not under common control. Till now no question of this nature, but if you know, you can do it. So I will just explain you journal entry, and believe me, only one journal entry is there. If suppose they ask, you should be able to do it. However, both the question they have done in this way. So higher chance is this only. One time they have asked this question, that was the first attempt of Ind AS, May 2018. After that this question was never asked because they understood super easy question. But now it is long gap now. So can be asked. May 2018, after that never asked in exam. So can be asked. Can be asked. But see, super easy. What happened? It becomes difficult when we don't revise. When we don't revise. Got this point? Have you understood? Can I say in this case demerged company is not liquidated? Means Acquiree is not liquidated. So therefore they will also pass, they will also ask you to journal entry in the books of demerged company, means Acquiree company also. So in this case you need to understand journal entry in both Acquiree and acquirer, transferee and transferer. Chalega? So what will be journal entry? So very simple journal entry. Now, if demerger is business combination under common control, that you can identify now. If there is one common controlling party, so it means what? Business combination under common control. If they have not given any common controlling party, just see all assets are liability are transferred at book value. If yes, so it is assumed to be what? Business combination under common control. Otherwise assume what? Business combination not under common control. So in the books of demerged company, can I say that business is transferred? So for that business, liability will be de-recognized, asset will be de-recognized. So will de-recognize at carrying amount ki book value? Will de-recognize at carrying amount or book value? Book value. So liability will be debited, which is going out. That business is transferred now. So all the liability of that business will be de-recognized. All the asset of that business will be de-recognized. To asset what? Book value. And again nothing is receivable because PC is discharged to whom? Shareholders. Nothing is receivable. So there is nothing receivable. So all asset will be de-recognized, all liability will be de-recognized at carrying amount, and the difference will be transferred to capital reserve. Difference will be transferred to capital reserve. So any difference will be transferred to what? Capital reserve. Understood? Now in the books of resultant company, pooling of interest method. Pooling of interest method. So all asset will come at which value? Book value. All liability will come at which value? Book value. And PC will be as per the information. It can be at premium. So whatever equity share issued at par, yeah, at premium as per the information given in the question, but the difference will be transferred where? Under pooling of interest method? Capital reserve. The difference will be transferred to capital reserve. Any difference will be transferred to capital reserve. So both will be transferred to what? Capital reserve. Only one journal entry. Now can't you prepare balance sheet of both company? They will ask balance sheet both company after demerger. So one after giving this effect, one after giving this effect. This is the totally new company. So this asset will come, this liability will come, this equity security will come, and balance will tally. So two balance sheet you are supposed to prepare. It is time consuming. Two balance sheet now. So two balance will take more time, but simple question. Understood? Correct. Understood. Case number 2. If demerger is business combination not under common control. Same journal entry in the books of demerged company. Liability will recognize at what? To asset what? Correct. But difference will be transferred to now retained earning. Difference will be transferred to retained earning, not to capital reserve. So this retained earning, why? Because this will be considered gain or loss on sale of disposal asset. Disposal group. You know Ind AS 105 disposal group. So this is sale of disposal group. So any gain or loss will be transferred to what? PL, and from PL it will be transferred to what? Retained earning. Understood? So any difference will be transferred to what? Retained earning. Understood? However, the conceptually, if you say though there is some more discussion, I don't want to go to concept. I don't want to go to concept right now, because concept will take 1 hour. Why retained earning, if you ask me? So this is totally conceptual discussion. Understood? Okay. In the books of resultant company, acquisition method, Ind AS 103 applicable. So batao, all assets will come at what? Fair value. All liability will come at what? Fair value. Equity share capital premium will come as per PC. Any difference will go where? Goodwill or gain on bargain purchase. So goodwill or gain on bargain purchase. Acquisition method. Now can't you prepare two balance sheet? Yes, we can prepare two balance sheet. We can prepare two balance sheet. So again, this is also simple from exam point of view. Only remember, if it is not under common control, so this difference will be transferred to what? And this difference will transfer to what? So this is thoda sa more interesting, which they are not asking. This is simple. Both difference transfer to what? Capital reserve. One doubt will come in exam, because this is which method? Pooling of interest method. Under pooling of interest method, reserve and surplus of transfer company is maintained. But who is transferor? This is transfer company. This is transfer company. But you can see I have not written reserve and surplus. But that doubt will come in exam when you are doing by your own. Are bolna re? Reserve and surplus, one note I have given. Reserve and surplus of transfer company will not be maintained in the books of transfer company. Of course, you will ask me why. You will ask me why now. So reserve and surplus will not be maintained. Why? Just try to understand. In this case, whether transfer company is liquidated, so already reserve and surplus are maintained. Now if you are maintaining here, it is 2 time maintenance now. You are maintaining how many times? That is logically wrong now. In that case, the transfer means when acquiree is liquidated, transfer company is liquidated, then our Ind AS is saying, appendix is saying ki reserve and surplus need to be maintained. But now that is not liquidated. The shareholders of that company now become the shareholders of that company. So let it be there only. Correct now. So if it is already maintained yahan par, there is no need to maintain yahan par. If you are maintaining again, so you are maintaining reserve and surplus twice. That is practically wrong. So in this case, be careful. Reserve and surplus of transfer company will not be maintained. Will not be maintained. Here you can do mistake. Even the lollipop question, but you can do mistake. Chalega. So I identified where you can do mistake. Now we'll take only one question to explain the business combination under common control, means demerger under common control. Only one question I have. The maxi mini company, which question? This question. Now, 19. I have taken some other question. Enterprise
has two divisions, laptop and mobile. Understood? Means they one company Enterprise Limited. Division laptop has been making constant profit, where division mobile has been suffering from losses. On 31st March 2002, division wise draft balance is given, laptop, mobile. So you can see all asset, all liability has been given division wise and total wise. Correct. Now just try to understand, to confuse you, what they have given. They have given also share capital and surplus division wise. You only say you have done segment reporting. You have done operating segment. Whether equity share capital and reserve and surplus, whether it can be segment wise, it will be entity wise. So this they have given only to confuse you. It will be always what? Entity wise. Reserve and surplus cannot be allocated segment wise. It is impossible. They have given only to confuse you, so that you do mistake. Understood? So this, if given, ignore. If given, ignore. This information totally ignore. Totally ignore. Understood is fine? Correct? Have you understood this point? Yes, sir. Now, division mobiles along with the assets and liability was sold for 25 crore. This is what? PC. To Turnaround Limited. This is a new company form, resultant company. A new company who allotted 1 crore equity shares of rupees 10 is at a premium of rupees 15 per share. So PC is given to the members. To the members means what? To the members of Enterprise Limited. To the shareholders of, means PC is discharged to whom? Enterprise Limited, to the shareholders of Enterprise Limited. Therefore, it is a question of what? Demerger. It is a question of demerger. Understood? Correct? Okay. In the proportion of their shareholding in the company, means in the proportionate number. One of the member of E Limited was holding 52% shareholding of the company, means that member was able to control. Now they will also get 52% of T Limited, and therefore this become business combination under common control. So this is the correct question. Means this is demerger under common control. Means we'll apply in the books of T Limited, Turnaround Limited, we'll apply which method? Pooling of interest method. Past journal entry in the books of E Limited. Correct now. Prepare balance sheet of E Limited, prepare balance sheet of T Limited. We'll pass journal entry in both company. So in this company, पहले E Limited, बताओ. This all will be de-recognized at book value. तो कहने loan fund will be de-recognized at carrying amount. Current liability will be de-recognized at carrying amount. Provision for depreciation means accumulated depreciation will de-recognized at carrying amount. Property, plant and equipment at carrying amount. Current asset at carrying amount. Difference will be transferred where? Capital reserve. Done. Correct. Now can you give me journal entry in the books of T Limited? बताओ. बताओ. Property, plant and equipment will come at which amount? How much? It will be 500 minus 400. Very good. 100. 100. Carrying amount 100. Okay. Then current asset will come at which amount? 500. To loan fund will come at which amount? 300. To current liability will come at which amount? To PC, equity share capital at which amount? Nominal value. Issued 15 crore na. What was the PC? 25 crore. Out of that, what is the nominal value? 10 crore. Securities premium how much? 15 crore. Difference will be transferred where? Capital reserve is coming what? Negative or positive? I think negative will come. How much capital reserve? 125. Only one journal entry. Super easy na. Acha, will you maintain reserve and surplus of transfer company? No. You can see we have not maintained because it is already maintained in the balance sheet of transfer company. Don't maintain. Don't maintain. Now we can prepare balance sheet na re. इसमें क्या है? Balance is very easy. Means this is only now laptop division and this will become what? Mobile division. Be careful about reserve and surplus. Be careful about reserve and surplus. Understood? So I will say the question cannot be simple than this, but then also in exam if you don't revise, this is complicated question. If you don't revise. So with this we have covered all concepts of what? Concept over. Concept over. Only one point is left, business definition. Business definition is now important due to MCQs. Due to MCQs. Previously I used to say they don't have scope only. I used to say, now though it is important. Everything is important due to MCQs. And dhire dhire they will increase the level of MCQs. Slowly, slowly. Not suddenly. Slowly, slowly. You know, all international exam is in the form of MCQs format. All international exam. And MCQs are more difficult than subjective exam. Because when I say MCQs, so it means conceptual knowledge. When I say subjective exam means practice knowledge. Only the question whatever given that you practice, that question will come. So conceptual understanding if you don't have, you will not click in MCQs. Therefore this 30 marks is very easy to score if they are not asking conceptual question. Direct question they are asking, they're very easy. But once they start asking conceptual question, then it will become difficult. So pass as soon as possible. Because slowly, slowly they will increase the level of MCQs. That is 100% pakka. And this time the last attempt, why the result was high, you know. Because 6 paper into 30 marks, how much? 180 marks was MCQs. And first exam MCQs were easy. I think most of the student has got 70% out of this. Most of the student. So 180 into 70% how much? Means 120 so they have scored. 3 marks na. Abhi it was easy. I don't know about other paper but FR was easy. Because that was leaked na. That information came to us. Now you will get MCQs also. Now in every exam we can see MCQs. But the last exam I don't know about other paper. But whatever I have understood from the student, they said comfortable sir. They said like that. Okay, na. So 120, what is the total marks you need to score? 150 plus 150, 300. Out of 300, how much you have already scored? So 180 is left. Now out of how much marks? 600 minus 180. How much? How much? 420. Out of 420, you need to score only 180. So 180 divided by 420, how much percentage? Only 42% you need to score. This time the result was high because of this reason. Because most of the student has scored high in what? MCQs. This was not by default. 35% was not CA Foundation 15% Ray. ICI has not changed. ICI is ICI only. But this time they can't deduct marks na. MCQs में deduct नहीं किया ना. तो CA Inter, CA Final both what? High result because of simple MCQs. In second attempt, November attempt also simple is going to come. But dhire 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 they will increase the level. Pass as soon as possible. Give thoda sa extra effort. If you are studying for 10 hours, study for 12 hours. If you are studying for 12 hours, study for 14 hours. If you are studying 14 hours, study for 16 hours. You will not die. You will not die. Extra effort. You know, if last attempt, I don't know whether this is your first attempt or second or third or multiple, but last attempt, if you scored, suppose if you were this 50% required, and suppose you scored 45%, or you scored 30%. So 45 to 50, only 5% effort more is required. Think about that. If you will give same effort, it is not going to increase. If you are thinking, sir, last whatever I have done, that only I will do, what is the use? You will give some extra effort na. Give extra effort. Correct? And if it is 30%, you want to make it 50%. Try to understand, you need to increase by 20% effort. To try to increase your efforts. Don't say, ki, sir, last we have studied, we don't have passed. Now we will study that much only I will pass. That is not correct. And normally students, what they do? Whatever they have done last, they do that only. Understood? Increase your effort. Increase your preparation. Increase your ability. Increase your potential. You have the potential but you don't know. You have read Ramayana, or you have seen Ramayana? Hanuman? You all know Hanuman? Hanuman, when he went to Sri Lanka, correct na, to meet Sita. So before going to Sri Lanka, he was not knowing his power, that he can jump that sea. So he was not knowing about his ability. So because he was not knowing his ability, he was not thinking to jump. He was not thinking to jump. So he said, how can I go there? I am only a monkey. How can I go? Understood now? Are you? So he was not thinking to jump. And he was silent. No, I can't go. I can't go. Because he was having that potential, but he was not knowing about that potential. Right now also you have a potential to pass. You have potential to become CA because already you have passed CA, but you are not knowing that. You don't know about your ability. Nobody is informing you, and you are also not thinking about that. You based on others, because others has taken multiple attempts, you will think that you will also take a multiple attempt. Don't think about others. Think about your potential. Then somebody has informed him, you have the great power. You have great power. You have been already given some vardhan. You have that power. So when he was realized that yes, I have power, he jumped and he jumped. And he crossed. Same thing. You have a power to become CA. You have an ability. I am saying. You all have a power to become CA. Not only pass with very good marks. And if you are writing both group, you have power to score rank also. Think about that. Think about your ability. Think about potential. Think about that, you will cross that. So till you think, you will not do. Till you think about your ability, you will not attempt that. Think now once, yes, I can score 90% in FR. Think like this. Bolo, yes, I can score 90%. Then you will study for 90%. Otherwise, you are studying for 50%. Then you study for 90%. Once you start studying for 90%, believe me, no one can stop you to become CA. Even Lord Krishna will come now. He will say pass. He will not fail you. Even God will not stop you. That is only required. That is only required. So first try to imagine your ability. Everything depends upon your intention, ability. Correct? And if you are an average student now, you could have not passed CA Inter. So if you are thinking you are an average student, that is also a mistake. So are you thinking you are an average student? Are you thinking you are an average student? No, passing CA Inter is not a joke, Ray. Passing CA Inter is a joke. So you are not an average student. You are an exceptional student. I will not say extraordinary because extraordinary has deleted from Ind AS. So you are what? Exceptional student. And for exceptional, separate disclosures are required. So once you become CA, you will be recognized by entire society. And already CA final is also, you have got that recognition. Correct now? But then also, one attempt is left. 1 point is left. Cross it. Cross it. Think now. Feel like that, yes, you have given exam, pass. What is coming in your mind? Think that moment, you have given exam and pass. That moment. That happiness in the face of your parents. Think about that, energy will come. Automatically energy will come. If you are feeling sleepy, you will not sleep. If you are feeling tired, you will not get tiredness. If you are feeling hungry, you will not go to eat. Correct now? If that is coming in your mind, that is only required. That is only required. I'll just give one example. There are how many cricket players in India? N number of players. With IPL, there are many players. Bolna rahi. Everyone is earning na, good amount, but everyone is not Virat Kohli. Everyone is not Rohit Sharma. Everyone is not Dhoni. Yes or no? Everyone is not Bumrah. These are exceptional. They are doing day-night hard work. They have not become that great player without hard working. Everyone is doing hard work, but not at that level. You want that. You want to make millions out of what? This market. You are here to earn what? Crores na? Bolna re. So that extra effort is required. That extra effort is required. So think about that. Believe me, you will not feel sleep. You will not feel tiredness. And you study and you will think that, acha, you have studied 16 hours and you are not hungry. That will come to your mind. And once you are thinking you are hungry, means you are not thinking about that. Understood na? Normally when I teach na, I don't always think, means I am not hungry. In class, I am never hungry. Once I will go to out of the class, I will be hungry. Means I can teach 8 hours without eating. Because I am there to teach. I am there to perform. I want that you spread my name. Spread my name to all persons. That is my desire na. Are bolna re. So I am here to give my 100%, 1000% effort. That should be you. You should not also ask demand break. Once you are asking break, means I will say, yaar, you are thinking about that hungerness. Why you are thinking, re? Entire life you will eat only na. Are bolna re. Entire life you will eat or not? Entire life after becoming CA, you will go to 5-star hotel, 7-star hotel, every hotel you go. Yes or no? You will go to what? America, and there also you will eat. But right now don't eat. I am not saying don't eat. Eat baba, but you should not feel for that food. That feeling should not come. That I am saying. If that is there, 100% no one can stop you in becoming CA. No one can stop you. Chalega. Now, I think this business combination is over. Now, of course, we need to start by which chapter? 1 and 5. But one more question. This is favorite question of the institute, which have been asked. I'll take 1 or 2 questions, then I'll wind up. And business definition. This is a favorite question. This is to matlab pakka expected. On 1st April 2006, company PQR has acquired 30%. Means what? Significant influence of the voting ordinary shares of company XYZ for rupees 8,000 crore. Means the cost price. PQR account is investment using equity method, means Ind AS 28. Ind AS 28. As prescribed under Ind AS 28, investment in associate and joint venture at 31st March 2017, means year end. PQR recognized their share of net asset changes using equity accounting. So they have recognized share of profit or loss. What is journal entry for this? Batao. As per Ind AS 28, investment account debit to sharing profit, and sharing profit will be transferred to PL. So this will be transferred retained earning. Correct. Then share in exchange difference in OCI. But this will be what? Journal entry. Investment account debit to share in OCI, and share in OCI will be transferred to OCI, and from OCI it will be transferred to other component of equity. So this is known as FCTR, foreign currency translation reserve. Foreign currency translation reserve as per Ind AS 21. Then share of revaluation reserve. So this will be also transferred to revaluation surplus. So what is the carrying amount at year end? It will become 8,000 plus this plus this plus this. That will become 8850. 8850. The carrying amount of investment is given. Now on 1st April, they have acquired remaining shares also, 70%. So this becomes a step acquisition. Step acquisition. This becomes a step acquisition. Correct. For rupees 25,000 crore. This become PC. They have given fair value of 30%. Previously held equity interest 9,000. They have given fair value of INA given 30,000. Step acquisition question. So the journal entry is very simple. What journal entry will do? Batao. INA account debit how much? 30,000 na? 30,000. To cash how much paid? For how many percentage? To investment de-recognize. So what is the carrying amount? 8850. And what is the fair value? Gain is what? So that gain will be transferred to remeasurement gain. Transfer to what? PL. So what is the gain? 150. Gain is 150. The difference will be goodwill or? So what is goodwill? What is gain? Goodwill is how much? So 4,000 debit na. So goodwill is 4,000. This is very simple. Now what Ind AS 28 says, there is one more point. Intensely under Ind AS 28 I have not explained this intensely because I was knowing I will do this question. Ind AS 28 says that whenever you discontinue equity method, so there is a discontinuation of equity method. Now you will apply Ind AS 103 now. So this is known as discontinuation of equity method. So whenever you discontinue equity method, so any OCI component, whatever you have recognized initially will be now de-recognized as per respective Ind AS. So there are two OCI components, one is FCTR, one is revaluation surplus. So as per Ind AS 21, FCTR will be reclassified to PL. And as per Ind AS 16, revaluation surplus will be transferred to retained earning. This is a reclassification journey. And similar point we have done in loss of control also. I have explained that point there also. Similar point was there in loss of control in consolidation chapter. You remember? One question also we have done there, loss of control. So two more journal entry. FCTR will be reclassified from OCI to PL. How much FCTR? It is given na 100. And revaluation reserve will be directly closed by transfer to retained earning. That is how much? 50. So what is the total gain? Okay, this is one remeasurement gain and this is the total gain transfer to PL is what? 250 become total gain which will be transferred to PL. So this question is a favorite question of institute, can be asked again in exam. Ind AS 28 linked with Ind AS 103. Chalega. This is one question. Then I think most of the question, yeah, one more question which is newly inserted till now not asked. This also I will explain. Simple question, but this question, expected question, because initially there was some mistake, now they have rectified the mistake, so now high chance of this question may come. Now what is the concept? Whenever you acquired any joint operation, not joint venture, joint operation, you understood? Now joint operation, and that joint operation constitute a business. That joint operation constitute a business. What our Ind AS 103 says that, then accounting will be done as per Ind AS 103. To the extent of interest acquired. Means suppose we both together form a joint venture, a joint operation. My investment is 20%, your investment is 80%. We are both party having joint control. So my interest become 20%, your interest become 80%, but we form one joint operation which constitute a business as per definition given by Ind AS 103. Correct now? Then in that case, to the extent of 20%, I will recognize all asset, all liability in my books to the extent of 20%, and we recognize goodwill and gain to the extent of 20% in my books, and you recognize to the extent of 80%, and you recognize goodwill and gain or bargain purchase to the extent of 80% in your books. This is the concept. Concept you understood? Correct. Now second, suppose initially I acquired 20%, you acquire 80%. Understood? Now suppose you purchase from me 20% again. Understood? So once again you purchase 20% from me. So now once again you will apply Ind AS 103 to the extent of 20%. To the extent of 20%. Automatically 80% plus 20%. Now in your books it will become what? 100%. Understood? Concept you understood? Now let us understand 26 question. Company X is engaged in the business of exploration and development of oil and gas blocks. Means they are producing what? Some blocks for oil and gas. Company X currently hold participating interest in the below mentioned producing blocks and follow. So Company X 30%. There are two more company Y and Z 60% and 10%. Total become 100%. The name of the block was AWM. Okay. For the above block, Company XYZ has entered into unincorporated joint arrangement. Oh, but the unincorporated, it will be joint operation or joint venture. Always joint operation means the concept. If it is joint venture, then Ind AS 103 is not applicable. Joint operation, Ind AS 103 will be applicable. Till now this question has not been asked, which is recently given in one of the RTP. Company Y was the operator of block, means all the business, all the transaction was done by one of the working partner. Suppose this was a working partner and others were sleeping partner. Correct? company X and Z are the joint operator. Company Y incur all the expenditure on behalf of joint venture. Wrongly drafted, this will be joint operation. Means they have rectified, but they have not rectified fully. This will be joint operation, joint venture. But chalo, theek hai, we'll understand the emotions of the question. Sometimes we need to understand the emotions of the question. Don't fight with the question. Don't fight with the question. Okay? This is joint operation only. And raise cash call to the company X and company Z at each month in respect of their share of expenditure incurred in the joint operation. All the manpower and requisite facility machinery owned by joint venture are thereby owned by all joint operation. Means can joint operator, we are having right to asset and obligation for liability. It means it is what joint operation. For past few months due to liquidity issue, company Z defaulted. This is one low. They have done default. Financial performance of company Z has not been improved in subsequent month. Therefore, company Z had decided to withdraw participating interest right from block AWM and enter to a sale agreement with company X and company Y. So what they have done? Company Z have sold their participating interest. What was their interest? So they have sold 10% to whom? X and Y. As per terms of agreement dated 31st May 2001, company X will receive 33.33% of 10% and company Y receive 66.67% of 10% of the participating interest right owned by company Z. But this question we are doing from company X point of view or company Y point of view? Because they started with what? Company X. So we are doing from company X point of view, not from company's Y point of view. So company X acquired how much percentage? 33.33% of 10% of which company? Company Z. Company X is required to pay 1 lakh. So 1 lakh become what? PC. Against 33.33%. Why they have not given for company Y? Because this question is not for company Y. Now this para is important. After signing of sale agreement, operator company Y approached the government of India for modification of PSC production sharing contract, that is removal of company Z from PSC, and the government has approved this sanction. Government approval for this modification is essential. Means without government approval, whether this sale agreement was effective? No. It means what is the date of acquisition now in this? Date of acquisition will be 31st May ki 30th June. 30th June, because can you say approval was required, and without approval this sale agreement cannot be done. So can you say for business combination, the date of acquisition as per Ind AS 103 will be the effective date when the control is obtained. Effective date when the control is obtained. The control was obtained on which date? On 30th June. Now to confuse you, they have given 2 balance of X, 2 balance sheet of Z. Why they have not given Y? Not required. If given, also leave it. Correct. So they have given 2 dates, but of which date is important? So this is bakwas. This is bakwas. Only this is relevant. This is relevant. Understood. Now they have given all asset, all liability. They have given. Now they have given fair value of PP and development capital WIP owned by company Z is 5 lakh and 2 lakh. Means they have given fair value of 2 asset. This is 5 lakh. And development, this is what? 2 na? 2 lakh given. Okay. Fair value of all other assets and liability acquired are assumed to be at their carrying amount. Thank you very much. Even though not given, we'll assume carrying amount only. Except cash. Yes sir, we know except cash and cash equivalent. Cash and cash equivalent of company Z are not to be acquired by company X. So that is not taken over. Cash and cash equivalent are not taken over. To leave it. You are not supposed to take it. Chalega. Tax rate. Oh, tax rate given why? DT and DTL. Now you know DT and DTL, correct? As per Ind AS 111. Ind AS 111 means joint arrangement. It is a joint operation. Arey haan re, pata hai. Whereby every operator record their share. This to we know na. Why they are mentioning? Chalo theek hai. Determine whether the above falls under business. This you can explain only when you know the business definition. So of course it will satisfy business definition, which I will do after this. You can conclude by writing the definition of business and some point whatever I will say. And conclude yes, it is a business. Okay? It is not asset acquisition. Concluded. Then what is the date of acquisition? Already we have understood 38 June. Past journal entry and plus. These two are from my point of view. The journal entry is what? Sunna. Can you say all asset will come? Of which company? This company? All asset. Excluding what? Cash and bank will not come. This will not come na. Cut do. All asset will come at fair value ki carrying amount. All asset will come at fair value or carrying amount. We are applying Ind AS 103. Fair value, if fair value is not given, then so this will come at 5, this will come at 20,000, this will come at 50,000, this will come at 30,000, this will come at 1 lakh, this will come at 50. But how much percentage? 33.33% of this amount, because this represents 10% of joint operation. So 33.33%. Acha, 33.33% and 1/3 are same or not? But if you do Sunna, 20,000 cut 33.33% is how much? This na. This is coming 33.33%. And 1/3 is coming how much? No. Different will come. अरे यार क्या कर रहे हो तू? 20,000 into 33.33%. It is coming 6666 ना, 667 ना, ठीक है. And 20,000 divided by 3, how much coming? अरे same coming. What is coming same? अच्छा, give me for this amount. चलो ठीक है, this is coming same. Give me for 2 lakh. Give me for 2 lakh. (33.33%) how much? 66. And what is 1/3? This is coming now. Both are same or not? Both are same. Approximately same na. Understood? Now, if you write this is also correct. If you write this is also correct. But ICI is ICI. They may deduct this. Why bolo? They have given 33.33%. Don't do 1/3. Dekho, they have a right to deduct marks because you are not following the information. You want to challenge. You want to go to what Supreme Court go. Nothing will happen. Don't take risk. If they have given 33.33%, use 33.33%. Dekho, of course, I will check. I will not deduct marks. 90% CE will not deduct marks, but 10% who have taken multiple attempts, na, you can't. And normally they check as per ICI solution. And ICI has done what? That only. So I am saying don't take risk. Don't take risk. So can you say, I am now saying PP will come 1/3. ROE will come 1/3. This all will come at 1/3. Similarly, all will come at 1/3 except deferred tax liability for this one working note. Cash and cash equivalent paid. PC is what? 1 lakh. This will come. PC paid. Correct. But it means if you calculate DTA DTL, solution done. Now DTA DTL what? Fair value minus tax base. Tax base will be equal to what? Carrying amount. The difference will be either taxable or deductible. Taxable temporary when DTA will come, you can calculate. So only one journal entry. Now this incorporate this journal entry in the balance sheet of what? You will add in this now. Add in this and the balance sheet will be prepared. So only one journal entry, one working note and one balance sheet. You will get what? 14 marks for this. And write down some theoretical part for business definition and what? Date of acquisition. Understood? Easy question, must do question, 100% expected in exam. 100% because it was asked when? It was given in what? November 2021. Till now not asked in exam. I think all points now you can do. Balance all question you can do. Balance all question you can do. Okay. But please, I'll give break. Don't worry. Itna motivation diya rahe. Okay. Now there is one concept of measurement period. Measurement period. Do you know about measurement period? Measurement period? You don't know na? Important for 2 marks question and also important for 14 marks question. What happens sometime? You suppose this is 31st March and before 31st March on 15 March there was a business combination. So whether it is practically possible to measure all the asset on 31st March, it will take some time. And can you say, suppose this is the date of approval. So it is quite possible before approval of financial statement we are not getting valuation report. So it is accounting of business combination cannot be done because we need to measure fair value of asset, fair value of liability, fair value of NCI, fair value previously had equity interest and fair value PC. All are to be measured. It will take some time. Therefore, Ind AS 103 has given one relaxation. What Ind AS 103 says that if you are not able to do proper accounting, do one provisional accounting and record all assets and liability on provisional basis and calculate goodwill on provisional basis. That is known as provisional accounting. And they will give you 1 year. How many years? That will be measurement period. They will give you 1 year from the date of acquisition. So from the date of acquisition, 12 months they will provide. This is known as measurement period. This is known as measurement period. How many years they will give you? 1 year. From which date? Date of acquisition. Correct. Now during measurement period, can you see you can obtain new information? New information. Now there are two types of information. One information which is related to facts and circumstances existed on the date of what? Acquisition. Means some information you got which is related to the date of acquisition. There will be some information which is related to facts and circumstances after the date of acquisition. After the date of acquisition. For example, you acquired one debtor and debtor become insolvent before date of acquisition. So that will come here. But debtor become insolvent after the date of acquisition, that become here. So but for business combination accounting, which information is relevant? A or B? A. So this will not be considered for business combination accounting. This will be accounted on subsequent basis as per respective Ind AS. But can you say any new information which you obtained during measurement period which relate to the condition existing on the date of acquisition, for that some adjustment is required on the date of acquisition or not? So for that, what our Ind AS 103 says that we'll do retrospective accounting. We'll do retrospective accounting. So retrospective accounting will do. Retrospective accounting means what? We restate previous year figure in current year financial statement. Means we'll not do accounting in previous year. Previous year financial statement is already prepared, already finalized. So retrospective accounting means what? We'll do adjustment in previous year figure in current year financial statement. That become retrospective accounting. Means we restate previous year figure in current year financial statement. Means just try to understand. Suppose you have recorded one property, plant and equipment at 10 lakh and the date of acquisition was 1/1/2023. Understood? And this is your 31st March and this is your current year. At this point of time, you got one information. This is not 10 lakh, this is 12 lakh. Means the new information you obtained, 10 lakh is not 10 lakh. 10 lakh is what? 12 lakh. So can you say we'll do retrospective accounting for this? Correct. It means can you say you need to increase PP by how much? 2 lakh. Correct. PP will be increased by 2 lakh on which date? On 1/1/2023. Correct. Now, if NCI is measured by fair value method, the NCI will not be affected. If NCI is measured by Pasina method, then NCI will be affected. The 2 NCI will come. NCI will also increase now. If by Pasina method, suppose 20% is NCI, so 20% of 2 lakh, how much? And balance will be adjusted where? In goodwill. 1 lakh. So this will be your journal entry. In Pasina method, in fair value method, what is journal entry? PP how much? And goodwill how much? 2 lakh. Understood? One more journal entry will come. Can you see in your previous year you have charged depreciation on 10 lakh for how many months? 3 months. But you should charge on how many, what amount? 12 lakh. So there will be some additional depreciation for 3 months on 2 lakh. On 2 lakh. So that also you can calculate as per the information given. To one more journal entry. Depreciation account debit to property, plant and equipment. Suppose they have given 2 lakh and suppose the rate of depreciation is 10% and suppose for 3 months. So you can calculate it. You can calculate it. Understood? So these two effects will be given in what? Previous year figure of current year financial statement. That is known as retrospective restatement. Retrospective restatement. Understood this point? So what they will do? Either they will ask the same point in the full-fledged question, or they will ask 2 marks question MCQs. Ki what is the adjustment required during measurement period? During measurement period. Understood? Have you understood? Chalo. Now let us come to fast business combination definition. Business. Business means what? Business means what? A business is an integrated set of activities and assets. Means you have acquired some asset with integrated set of activities. Activities means some process. Of course, can I say when you acquire business, so asset will be acquired with some process. With some process. So it is a integrated, means related to each other. Assets are related to each other. Suppose this classroom is one business. So if you want this entire business, so you will acquire all the assets now. Because all are integrated. This mic is integrated with this PC, PC is integrated with laptop, laptop is required, camera, camera required, AC, AC required, furniture, furniture required, bench, bench required. Everything is integrated. Without bench, you will not sit now. The bench is also required. So integrated set of assets and liability. Integrated set of activities and assets, which are capable of being conducted and managed. Which are capable of being conducted and managed. Who will conduct, who will manage? Set of employee. Means employees also required. Which employee? Skilled employee. You can see technical employee will come, who will set up everything, because without employee we can't work. Without employee we can't work. So that technical employee is required, skilled employee is required. So that is capable of being conducted and managed for the purpose of generating revenue. For the purpose of generating revenue. So of course we are generating revenue here. We are here to do business only now. For the purpose of generating revenue. So either from providing goods and services to customer, or from generating investment income, or from generating any other income from ordinary activities. Any other income from ordinary activities. Means simple word, this is what output. This is output. Output means what? Revenue. This is what? Input. And this is what? Process. So it means for business 3 elements are required. Input, process, output. And when process is applied on input, that must be capable of generating output. Means output is not required on date of acquisition. If they are capable of generating output in future, then also it is a business. For example, you acquired one startup business. So right now they are not generating output, but that is capable of generating output. Therefore it will be also known as what? Business. For 3 things are required: input, process and output. Any process applied on input which are capable of generating output will be a business. Will be a business. Now to identify business, they have given some simplified test. Simplified test, because can I say input, output, process, can I say it become detailed analysis? So what they have given, they have said ki apply some simple test. If the test is satisfied, means it is not a business. If test is not satisfied, then go for what? Detailed guidelines. Detailed guidelines. So this is known as what? Optional test, concentration test to permit simplified assessment whether an acquired set of activities and assets is not a business. So that is an optional. Entity may either opt or they may not opt it. So this test is optional test, which is known as concentration test, which is known as what? Concentration test. So what? First thing, does the entity want to apply concentration test? If no, then consider general guidelines. Correct. If they want to apply concentration test, yes. If the test is passed, it is not a business. If the test is not passed, then go to what? General guidelines. The test is not passed, then go to what? General guidelines. Means if you are applying concentration test and test is satisfied, means it is not a, then it means it is an asset acquisition. If the test is not satisfied, then apply general guidelines. So what is general guideline? That also we need to understand. First, what is concentration test? What they want to say? Ki suppose you have paid PC 1000. PC is what? 1000. And you have acquired group of assets. Out of that you acquired one building. And the fair value building is 900. So can you say whatever PC you have paid is concentrated to single asset? So it means it is an asset acquisition. Means whatever you are paying only for one asset. So it is an asset acquisition. Correct? Or you are acquiring similar asset, building, 3 building. And the total fair value is 900. So it is what? Group of similar asset. So what they are saying, whenever purchase consideration is concentrated either to single asset or group of similar asset, it will not be a business, it will be an asset acquisition. This is simplified test. This is simplified test. So what they are saying, concentration test is satisfied if substantially all the fair value of gross asset acquired is concentrated in a single identifiable asset or a group of similar identifiable asset. Now only you need to understand how to calculate all the fair value of gross asset acquired. Means this is important from MCQ's point of view. Means this I am doing for 2 marks. How many marks? 2 marks. Means they will ask you what is the gross value of all asset acquired. So how to calculate this? The formula is what? First find out fair value of consideration paid. That will be given in the question. Fair value of any NCI. That will be given in the question. Fair value of previously held equity interest. That will be given in the question. This become total PC for 100%. From this minus fair value of liability assumed. All the liability. Plus what? Fair value of the liability assumed. You will add what? Fair value of liability assumed, but excluding DTL. Because DTL is an imaginary asset. DTL is an imaginary asset. Excluding what? DTL. From this you deduct 3 assets. Cash and cash equivalent, deferred tax asset, and goodwill resulting from DT. This you can ignore because that they will not ask. That you ignore. Cash and cash equivalent and deferred tax asset. So this becomes fair value of gross asset acquired. This is the formula. Formula is what? Batao? First, fair value of consideration paid, fair value of NCI, plus fair value of previously held equity interest, plus fair value of liability assumed, excluding DTL. From this minus 2 assets, cash and cash equivalent and DTA. This will be fair value of gross asset acquired. Now compare with single asset or group of similar asset. If that is substantially concentrated in single or group of similar asset, then it means it is an asset acquisition. Substantially here means 90% or more than 90%. Substantially here means what? 90% or more than 90%. Understood? For that reason, I have taken only 2 marks question so that you can understand if this question comes. This is taken from some other book. Entity hold 20% interest in entity B. No, this is a question of ICS study matter, I think so. Subsequently, entity A further acquire 50% share in entity B, 300 crore. This is PC. The fair value asset acquired and liability assumed 1000 crore building, 200 cash and cash equivalent, financial liability DTL. Examining the above transaction is an asset or business combination. Batao. First, you'll find out fair value of gross asset acquired. That will be equal to what? Fair value of PC. PC is how much? What is the fair value of NCI? 20%. 20% of what? One thing is missing in this question. Write down fair value. One thing is missing. Fair value of entity A is equal to 400. This is missing. So fair value of entity A is what? 400 crore. Fair value of entity will be given. Entity means business. Correct. So बताओ NCI will be what? 400 का 20%. How much? 80. This was how much percentage? 50% they acquired. This is fair value previously held equity interest. What is NCI? 50 plus 20, 30, 70 and 30% will be NCI. So 400 का 30% how much? 120. Total is what? 500 become this. From this you will add all liability assumed. So what is the liability assumed? Financial liability, but you will not take what? DTL. So 800 you will add. From this you will minus what? Cash and cash equivalent. What is the cash and cash equivalent? 200. Minus 200, how much it is coming? 1100. Now what is the building? 1000. 1000 divided by 1100, how much percentage? 90. So it is what? Substantially covering a single identifiable asset. Therefore, it is an asset acquisition. This is not a business acquisition. This type of question can be asked for 2 marks. Or they will ask you to only calculate fair value of gross asset acquired. Fair value of gross asset acquired. For 2 marks question can be asked. Chalega. Or they will ask 4 marks question, identify and then do journal entry. Asset acquisition, you know what is the journal entry now. Chalega. Correct. Now, coming to other part of this definition. Whenever you apply general guidelines, it means you need to identify input, process and output. Normally, input, process, output will be there in the question. But only you need to identify whether the process is substantive. If the process is substantive, then it becomes business acquisition. Correct? So, input, process and output. This you read by your own. is the acquired process is substantive? This is important. So I'll give you simple information. Whenever we acquire any process, whether it is substantive or not substantive, depending on whether you are acquiring employee or not. For example, if you want to acquire my business, so my business can be run by my technical employee. Correct now? So can you see, you can use my process when you acquire my employee now. So what they are saying, if the input include skilled workforce, the process is substantive. Process is substantive. Understood? So whenever in the question it is given, we have also acquired skilled workforce, it means process is substantive, and the acquisition will be business acquisition from exam point of view. So they have given only that if the set of activities and asset does not have output on acquisition date, means right now they are not producing output. They are capable of generating output, but on acquisition date there is no output. Chalega. In that case, what they are saying, process is critical. Process must be critical, means essential, and the input acquired include both organized skilled workforce and other input that organized workforce could develop or convert into output. So in simple word, process must be critical and the input include organized skilled workforce, then the process will be substantive. Second, if the set of activities and the asset has output on acquisition date, so they have given two conditions, any one condition satisfied, it will be substantive. Correct? Second, process is critical and the input acquired include what? Organized skill for same definition. Same now. In this case also process will be substantive. But last one, they say keep the process is unique. Unique means very rare. Means you cannot develop that process by your own. That is very unique and cannot be replaced by other process. So it is very unique. It is very unique, very rare. Even though you don't acquire what? The skilled workforce, it will be what? Substantive. So in this case, if the process is considered unique or scarce or cannot be replaced without significant cost, so even though you don't acquire what? Skilled workforce, the process will be substantive. So be careful about this. Till now, no question has been given or not asked about this, but can be asked. Therefore, I have done it. Okay, chalega. In simple word, what I say, process, even in a question it is given, they have acquired skilled workforce, it will be always business. But if they have not given about workforce, see whether process is unique. If process is unique, even though they are not acquiring what? Skilled workforce, it will be what? Substantive process, and the acquisition will be what? Business acquisition. If the process is not substantive, then it is not a business acquisition, then it will be a asset acquisition. Understood? My job done. We'll take a break, lunch break. Break will be for how many minutes? 30 minutes. Chalega? 30-minute break, okay? So we'll have around, chalo, we'll meet at 2:30, 40 minutes. 2:30, we'll have around how many hours? 6 up to 6, how many hours? हो जाएगा. Revenue recognition हो जाएगा. अच्छा, what happened? Whatever balance chapter, already in my YouTube it is uploaded for May 2024. If you want to revise, you can revise from there. One more thing, in my Telegram, in my YouTube channel, there is one link given for mentorship, where already 400 students are registered. There I am giving free mentorship, no charges for that. Correct? If you want to join that group. Till your exam, I will be available for you. But message in that group, I don't see personal message. I don't reply also. If you message in that group, then only I will reply. Correct? Suppose you are not able to concentrate, you want to talk to me, I am available for you. Just say, sir, I want to talk to, I will only give you time, I will talk to you. Correct? Understood? Unnecessary, don't call me because I will be in class. I will be in class. Understood? And if you message me personally, I don't see personal message because there will be a lot of message. So in group that you are message, so of course I will see it now. I am bound to see it. I am bound to see it. So I will definitely reply. Any doubt is coming, which you are not able to clear with your friends, you can ask there. So within 1 hour, 2 hours, I will reply. Understood? So the mentorship group is given where? In my YouTube channel, in the video of description, there is one mentorship group you can download. Telegram channel, so I think already you have joined. Any updates will be given on that. Any updates will be given in that. Correct now? So I think that you have already joined. Okay? It might happen कि in some time I may announce some more revision classes for the chapter which I have not done. It might happen. Till now not planned. Till now not planned. If that is there, so I will update in Telegram channel only. I will update in Telegram channel. But focus on study. If you have already done, there is no need to see revision video. Revision video is only when you are stuck, when you are not able to recall any point. Then revision video is required. Revision video is only when you are not able to recall anything. When you are able to recall, why you are seeing revision video? Correct? Understood? Chalo. We'll take a break. After break, we'll complete Ind AS 115 also. People. Can we start once again, everyone? Yes, sir. So let us start the last chapter for this revision for this particular 3 days. Okay. I hope whatever we have done till now, whether it is financial instrument, consolidation, share-based payment and business combination, you have understood? Correct. So we'll take the revenue recognition. Before I start revenue recognition, this chapter from examination point of view, I will say that normally what happens in exam, they might create a new question on this. Correct. So when they are creating a new question, so of course in exam quite possible that you are not able to apply that. Correct. And if the same question is coming, so that will be easy. If the same question coming from the book, so that will be easy. Correct. Now then also, even though same question is coming, this chapter the solution depends upon the content of the Ind AS. Means in this chapter content is more important than question. Means if you remember the content, then only you can write. Content means the Ind AS content. So therefore you should focus on content much than what? Question. Because every question you can work out if you know the content. Correct. And of course, thus it is a lengthy chapter as per content is also concerned. So proper revision is required, and we don't know on which particular topic they will ask question. For which topic they are going to ask a question, that also we don't know. Correct. Now coming to the revenue recognition, let us revise and let us concentrate whether question may or may not come from that topic. Okay. So objective scope, so this you of course you know. This chapter is applicable to all revenue recognition until unless the revenue is covered in other Ind AS. For example, non-agriculture, non-contractual income. For example, agriculture we have done fair value gain and loss on initial and subsequent recognition. So that is covered under Ind AS 41, and that is non-contractual. Non-contractual income is not covered in this chapter because the title is what revenue from contract with customer. So any income arising from contract with customer will fall in this chapter. Correct. Then any revenue from lease contract will not be covered because for that Ind AS 116 we have. Any revenue from insurance contract will not be covered in this chapter because we have Ind AS 104, but that is not in our syllabus. Any revenue from financial instrument contract, for example, interest income, etc., that is covered under Ind AS 109. Any contract that are not with customer outside the scope of this chapter. So any contract you are doing with what? Non-customer, that is outside the scope of this chapter. This last point is important. Any non-monetary exchange between the entities in the same line of business, to facilitate sales to the customer, that is also outside the scope of this chapter because that non-monetary exchange will lacks commercial substance. So any exchange transaction which lacks commercial substance, normally if you remember under Ind AS 16 also, if you acquired any property, plant and equipment in exchange of any other asset and that lacks commercial substance, then the cost price of PP was equal to carrying amount of asset given up. Same thing here, if you exchange, if you have done some contract to exchange non-monetary consideration and that lacks commercial substance, so that will be outside this particular chapter. Simple example, suppose A Limited, B Limited are two companies and both are in the supply of what? Some type of petrol, wire or natural resources. Correct now. So to facilitate their sales to the customer, they have exchanged what? Goods between them. So that transaction actually lacks commercial substance, therefore will be outside the purview of this particular chapter. Got this point? Now coming to definition, of course, revenue means what? Any income arising from ordinary activities. So any income which is arising from ordinary activities will become revenue. Apart from revenue, all will be other income. In SOP, you know, we write first revenue, then we write on other income. So right now we are concentrating only on revenue part. So any income which is arising from ordinary activities will become what? Revenue. Okay, sir. Now this chapter, this Ind AS 115 has given 5-step model for revenue recognition. Means any contract with customer, apply this 5-step and apply recognize revenue. First step is what? Identify contract with customer. In this you need to identify whether the contract is with customer or not. Right? If yes, then identify the performance obligation in the contract. Performance obligation means from seller point of view, not from buyer point of view. In any contract, both party will have their own right and both party will have their own obligation. For example, right now we have done one contract. So you have an obligation to pay and I have an obligation to provide services. So in this, my obligation is to perform, your obligation is to pay. So right now this chapter is applicable to me, not to you. So can you see, we need to identify performance obligation in the contract from supplier, from the seller point of view, from the seller point of view. So if there are more than one performance obligation, so we need to identify the distinct performance obligation. So how to identify that we need to understand. Then determine the transaction price, means we need to determine that consideration, what is the transaction price. If the transaction price is fixed, then okay, but if it is variable, how to estimate it? So if there is some variable consideration or if it includes some non-monetary consideration, then how to estimate that we need to discuss. So how to identify transaction price, we need to understand. These three are actually based on the information given in the question. So this is actually based on the information given in the question. So based on the information we need to identify. Then actual start from these two, means your role will start from point number 4 and point number 5. First, point number 4 is what? Allocate the transaction price in all the performance obligation in that contract. So whatever transaction price you have calculated in step number 3, that will be allocated to all the performance obligation identified in step number 2. So can you see, if there is only one performance obligation, allocation is not required. Allocation required only when there are 2 or more than 2 performance obligations, correct? So how to allocate, that we need to understand. And last, once you have allocated transaction price, then we need to recognize the transaction price as revenue as and when performance obligation is satisfied. So we need to understand when that performance obligation is satisfied. So as per Ind AS 115, performance obligation satisfied are there at a point in time, then recognize entire transaction price as revenue at that point in time only. And if performance obligation is satisfied over the period of time, they need to recognize transaction. How to recognize transaction price revenue over the period of time? What is the method of recognition, that we need to understand. So these are the 5-step model. So we need to now understand each by each step. So step number 1, I think understood, identify the contract with customer. It is not so much important also from examination point of view, because of course any question there will be some contract with customer. But it can be important for this criteria point of view. Means what Ind AS 115 says, that if all these 5 conditions satisfied, then only there is an accounting contract. So accounting contract will be only recognized. If it is not an accounting contract, then step number 1 is not passed, then we can't go to step number 2. Normally all these 5 conditions will be satisfied. But when these 5 conditions will not be satisfied, that we need to understand. So they have given how many criteria? 5 criteria. First is what? The party have approved the contract. Approved. Both parties have approved the contract and are committed to perform their part of obligation. So I am committed to teach and you are committed to pay. Then it becomes step point number 1. Second, the entity. In this chapter, entity means what? Seller entity. So whenever I am saying entity, entity means seller entity, correct? So entity can identify each party's rights regarding the goods and services transferred. So we need to identify the goods and services transferred, so whether it has been identified or not, which goods and services need to be transferred. If that is not identified, it cannot be a contract. It cannot be a contract. Third point, the entity can identify the payment terms. If the payment terms is not identified, then it cannot be an accounting contract. The payment terms need to be also identified. What is the amount of consideration, when it to be paid, everything need to be identified. Fourth, the contract must have commercial substance. Commercial substance means both parties should enjoy some benefit from that contract. If they are not able to enjoy the benefit, it lacks commercial substance. So of course it must have commercial substance. Last point is important. It is probable. Probable means chances are more than 50%. Whenever I say probable means chances are more than 50%. So it is probable the entity will collect substantially all the correct consideration that they are expected to be entitled. Means can I say consideration will be collected and that is probable. So if there is any uncertainty regarding the amount of collection, correct now, then this step number 1 will not be satisfied, correct? So if all these conditions satisfied, then we'll go to step number 2. But not so much important from exam point of view, correct? Now this point number D may be important from exam point of view. Now just try to understand, suppose you are in step number 1 and all the 5 conditions satisfied, then you will go to step number 2. But suppose any one of the condition not satisfied and you have received the consideration. So what will be the accounting treatment of that consideration? That whatever consideration you have received, that will be a liability. That will be a liability. So if the contract with the customer does not meet the criteria, if the contract with the customer does not meet the criteria, then whatever consideration you have received, that will be recognized as a liability until all the 5 conditions are satisfied. Correct. But in 2 circumstances, even though 5 condition is not satisfied, in 2 circumstances, even though that 5 condition is not satisfied, the consideration received will be recognized as revenue. This might be important from exam point of view. What are the 2 conditions that let me explain? Ki entity's performance obligation is satisfied, means my performance obligation is satisfied, and the consideration received is non-refundable, and the consideration received is non-refundable, then whatever I receive, that becomes my revenue. Correct now. So entity's performance is completed and all the consideration has been collected and is non-refundable, then whatever consideration you have received, even though that 5 criteria is not satisfied, will be recognized as revenue. Second circumstance is if the contract has been cancelled, the contract has been terminated and the consideration received is non-refundable. If that is non-refundable, then whatever consideration I have received, that become what? My revenue, and will be transferred to revenue, means will be transferred to profit and loss account. So this may be MCQ based question, ki whether revenue will be recognized or will not be recognized. Chalega. Then contract term is okay, you can understand. I am just focusing on this special point. Okay. Now combining contract, this may be also important for 2 marks MCQ based question. Ki suppose you have done 2 contract with the same customer, 2 contract with the same, 2 or more than 2 contract. So now question is, can we combine all this contract and apply Ind AS 115 as a single contract? Understood the topic? 2 contract or more than 2 contract with the same customer, So normally we'll apply Ind AS 115 separately, but the question is that can we combine and can we apply Ind AS 115 as a single contract? Well, yes, if any one of the 3 conditions satisfied. If any one of the 3 conditions satisfied. So what they want to say? Ki 2 or more than 2 contracts should be accounted as single contract if they are entered at or near the same time. At or near the same time with the same customer. And if any one of the following conditions satisfied. Correct? If any one of the following conditions satisfied. First condition, the contract are negotiated as a package with a single commercial objective. Means the entire contract is negotiated as a single package. Suppose you say that, sir, we'll do one contract with FR, AFM and audit. 3 contract. But the negotiation has been done as a single package. Means entire price is what? 25,000. So can you say then it can be combined? 3 contract, single negotiation, combined. Amount of consideration paid in one contract depend on the price or performance in other contracts. Suppose you have done first contract for FR. The price is 10,000. Now you again came, sir, I want to learn AFM also. I said again one contract. The price of AFM is based on what? Previous price. So I'll give some discount because you have already taken what? FR from me. So even though the price of AFM was 10,000, I have given it 5,000. So 5,000 why I have given? Because you have already taken FR from me. Understood? It means the price was based on previous contract and therefore now it can be combined. Last, the goods or services promised in the contract are actually a part of same performance obligation. Is actually a part of same single performance obligation. For example, you are doing construction of building, one contract, then after some time you enter the contract with the same customer for installation of lift in that building. So again, it is a part of same performance obligation only. It is a part of single performance obligation. Therefore, you can combine. So I think you have understood. So any one condition satisfied, you can combine. Otherwise, you can't combine. Got this point? The next point is what? Contract modification. Contract modification is also important from exam point of view. Ki whenever suppose you have done some modification in the contract, original contract, then modification happen after some time. Original contract, then after some time modification happen. Modification means changes in the terms and conditions, changes in the original terms and conditions. So either there will be increase in what? Scope of the contract, or changes in the scope of the contract, or changes in the price of the contract. Changes in the scope or changes in the price. So what Ind AS 115 says that any modification can be of 2 types. Either it will be a separate contract or it will not be a separate contract. So if it is a separate contract, then apply Ind AS 115 separately. No need to adjust the previous contract. Means original contract will be accounted separately and modified contract will be accounted. Any one of both the conditions not satisfied, then it is not a separate contract. So what are the two conditions? Point number A, point number B. What they are saying, the scope increases, the scope of the contract increases. So scope will increase by addition of one or more goods or services which are distinct. So scope of the contract increases because of additional goods or services that are distinct. And the price of the contract will also increase. The price in the contract will also increase and that price increase will be equivalent to the standalone selling price of the additional goods and services. Then it will be a separate contract. Understood? For example, I will take one example, simple. Suppose you have taken FR from me, one contract done. Understood? One contract. But after some time you find that, sir, you teach AFM also. I don't teach. You teach AFM also. So in the same contract, we have not done separate contract. In the same contract, we have done modification. Then now I will teach AFM to you. Understood? So can you say the scope increases? And if the price increases with the standalone selling price of AFM, then it will be a separate contract. Now suppose the price of FR is 10,000. So initially I charge how much? 10,000. And the price of only AFM is 10,000. So if I charge you 20,000 over, so can I say in modified, suppose I have done, now you need to pay additional 10,000. So additional 10,000 is equivalent to what? Standalone selling price of AFM. Therefore it will be a separate contract. It will not be combined with the original contract. But if I say the price is only 5,000, so that is not equivalent to standalone selling price of AFM, then it is what? Not a separate contract. It will be considered as combined contract. Understood? Simple example I have given. I hope you have understood. So if any one of these conditions not satisfied or both the conditions not satisfied, then it will be what? Not a separate contract. In that case, what need to be done? Okay, normally they will ask this question in exam. Because this is so separate contract, apply Ind AS 115 separately. But adjustment is required when it is not a separate contract. Understood what I am saying? Adjustment is required when it is not a separate contract. Okay. So in that case, two situations may arise. Two situations is what? The remaining goods and services. If the remaining goods and services in the contract are distinct from the goods and services already transferred, means whatever remaining goods and services are distinct from the goods and services already transferred, then it will be considered as cancellation of old contract, creation of new contract. And the remaining transaction price, whatever remaining transaction price which is not recognized as revenue, will be now allocated to outstanding performance obligation. So it will result in creation of new contract, cancellation of old contract. Means whatever you have done in old contract that you leave, means whatever revenue you have recognized, that will be recognized. Now the remaining transaction price which is not yet recognized as revenue will be now allocated to outstanding performance obligation. Understood? So whenever, if the remaining goods and services are distinct from the goods and services already transferred, then it will be what? Termination of existing contract, creation of new contract, and allocate the remaining transaction price not yet recognized to the outstanding performance obligation. But if the remaining goods and services are not distinct from the goods and services already transferred, then we need to adjust the amount of revenue as if modification were part of original contract. By applying cumulative catch-up basis. So account for contract modification as if it were a part of existing contract. In that case, we need to adjust the amount of revenue by applying cumulative catch-up basis. So I need to explain what is the meaning of cumulative catch-up basis. This is simple. This you can do. Now only one doubt will come, sir. How can we understand these are distinct or these are not distinct? This doubt will come. Only the doubt will come, sir, how can we understand whether it is distinct or it is not distinct? For that we need to go to step number 2. So whether it is distinct or not distinct, that is defined under step number 2. कि whether the performance obligation to be satisfied distinct or not distinct, that is defined under step number 2. Understood? Correct? So that you just give stub one question mark will automatically cover distinct and not distinct in step number 2. Got this point? Let me explain with one example ki how to apply this. Only one question of this nature is given. I'll just give you that example only. Ki suppose you have taken, let me take my example. Suppose we have done one contract that I will teach you for 300 hours FR, rupees 100 per hour. This was the initial contract. Okay. Now what happened after 2 months, 3 months, after 15 days or 1 month, syllabus changes, and I need to now take more number of hours. I will take now more number of hours. So of course I will demand more money from you now. In our business it does not happen. In the same price I will teach. Correct now. But suppose because the syllabus increases, so I will demand more now. Are bolna rahe? And suppose from my point of view I will teach additional 100 hours. And the rate fix in the modified contract rate fix is suppose 70 hours, 70 per hours. This was the modified contract. And out of these 300 hours, already we have done 100 hours of coaching we have done. Means can you say this is nothing but over the period of time. I am providing my services over the period of time, so revenue will be recognized over the period of time. So out of 100, for this 100 hours, already I have recognized my revenue, this much revenue I have already recognized. Already I have recognized this much of revenue. Now what is cumulative catch-up basis that I am explaining? So can you say these remaining services are not distinct? They are same services. Remaining services are not distinct now. So it is not distinct because I am providing the same services only with now more number of hours. So in that case what our Ind AS 115 says, first find out the total transaction price. So this become how much? Zyada ho gaya. And then 100 into 70 how much? 7,000. Total become how much? This become how much? 400. So 37,000 divided by 400. What is the per hour? 92.5 hours. It means per hour is 92.5. Means we should recognize for this 100 how much? We should recognize 92.5 means 9,250. But how much we have recognized? It means we need to decrease the revenue by how much? We need to decrease the revenue by 750. So we'll adjust the amount of revenue. Either will increase or decrease by applying cumulative catch-up basis. So this is known as cumulative catch-up basis. Understood? So this type of question can be asked in exam for 2 marks or 4 marks or 5 marks, whatever they want. Understood? Chalega. Done. So modification also you have understood. Modification also you have understood. Now coming to performance obligation. Performance obligation means promise given in the contract. Whatever promise I have given to provide, this promise can be either to supply a goods or services or a bundle of goods or services that are distinct. Understood? The promise can be what? A single goods or services, a bundle of goods or services that are distinct. Or it can be series of distinct goods or services. Series of distinct goods or services which are substantially the same and they are the same pattern of transfer to the customer. For example, I'll just give one example for this. For example, you are providing accounting services. So when you are providing accounting services, that include a series of distinct services. Because can I say you are doing all type of, when you are giving accounting services, so you are doing many things now. You are doing bank reconciliation, one type of services. You are doing journal entries. You are doing other reconciliation. There are many other services you provided. So that becomes series of distinct services that are substantially the same and they have the same pattern of transfer to customer. The pattern of transfer will also remain same. So that is known as what? One performance obligation. That will be considered as one performance obligation even though that includes series of distinct services. Understood? Now only one doubt will come. So how can we understand this is distinct? How can we understand that one goods or services will be distinct from other goods or services? That we need to understand. For that, what Ind AS 115 says that there are 2 steps to identify the distinct goods or services, means distinct performance obligation. What is the first step? We need to find out whether the goods or services are capable of being distinct. Whatever goods or services you are providing, whether they are capable of being distinct. Second, if they are capable of being distinct, whether they can be distinct within the context of contract. whether they can be distinct in the context of contract. If these two conditions are satisfied, means they are distinct performance obligation. Otherwise, they are not distinct performance obligation. They are same performance obligation. Let me take one example. Suppose you purchase from me in one contract mobile and calculator. In one contract mobile and calculator. So one transaction price. Correct now. So in this, whether these are distinct performance obligation or same performance obligation, that we are saying. This to understood na, but you need to apply in all situation na. Chalo, isko chhod do. Now this. Arey kya aa gaya? Mobile and what? This understood na. So mobile and whatever you say, correct? So this is what? This and this is what? This. Okay. So you purchase both from me in one contract. So whether it is same performance obligation or distinct performance obligation. This is also distinct. No doubt hai na? Someone is saying same na? Everyone is saying distinct, so I will take one example. Someone is saying same also na? How many are saying same? And how many are saying distinct? So it means doubt is there. So it means now focus is required. Focus is required na? So in this you need to understand what Ind AS 115 says. So are you able to understand? You need to understand what Ind AS 115 says. Now let me first explain, then you will say whether same or distinct. Then at the end we'll discuss whether it's same or distinct. So I have given two examples. Calculator and mobile was understood, distinct. But doubt will come for this. Doubt will come for this. So let me take what Ind AS 115 says. So what Ind AS 115 says? First see whether they are capable of being distinct. Second, if it is capable of being distinct, whether it is distinct in the context of contract. If both conditions satisfy, it means they are distinct. Otherwise, they are not distinct. So capable of being distinct means what? Let us understand. Capable of being distinct means what? Customer can benefit means you are purchasing now. So you can benefit either alone or with any other readily available resources from the market. Means can you use this mobile without this? Yes. Can you use this without this? Yes. You can purchase this separately and you can use with any other mobile. Yes or no? Which can you purchase from the another market? So it means capable of being distinct. It is capable of being distinct. But one more condition is there. So capable of being distinct. The second. If the first condition satisfies, second condition need to be also satisfied. Correct? Second is what? Distinct in the context of contract. So distinct in the context of contract, what Ind AS 115 says that actually as per substance they must be distinct as per the contract nature, as per the nature of contract nature. So what they are saying, separately identifiable from other promise in the contract. So what they are saying, two or more promise to transfer goods and services will be distinct if any one of the following factor exists. If any one of the following factor exists. Understood? First what they are saying, significant integration services not provided. Now significant integration services, whether this mobile is integrated with this, whether this require integration with this. So can you say in this integration services are not provided. This is not integrated in this. This is not integrated in this. So this is not integration services not provided. Understood? Second, no significant modification or customization. Whether this modify this is required to modify this, whether this is required to modify this. The second condition also not satisfied. A second condition also satisfied. No significant modification or customization. Whether it is highly interrelated with this. Can you use this without mobile? Yes. So it is not highly related or highly interdependent to this mobile. This is also not highly related or highly interdependent to this. It means all the can I say this all means can I say this all conditions are satisfied. Therefore they are capable, they are distinct in the context of contract, and therefore they are separate performance obligation. They are separate performance obligation means they are distinct performance obligation. It means when I am saying integration services provided, let me take one example of integration services provided. Suppose you are constructing a building. So can I say you are, as a contractor, you are providing many services. Can I say you are purchasing raw material for customer, you are providing designing services, you are providing construction services, you are providing labor management services. There are many services you are providing. It seems one services, but there are many services now, and all are integrated to each other. All are integrated to each other. Therefore, in that become a same performance obligation, even though they are different, even though they are capable of being distinct. Capable of being distinct means, can I say, you can take labor management from other contractor. You can purchase raw material from other supplier. Yes or no? So it is capable of being distinct, but this is not distinct within the context of contract. Therefore, that will be a single performance obligation. Understood? Customization and modification. Let me take one example. Suppose you purchase one software. Software requires installation. Normally, installation will not customize the software. For example, if you purchase Tally software, which you know, so you can say installation will not customize the Tally software. But sometime now, the vendor, means seller entity, will install it and customize the software as per your requirement. Customize the software as per your requirement. It means, can I say that installation is providing what? Customization or modification of that software. In that case, what? It means that involves significant modification or customization. In that case, that purchase of sale of software and installation will be one performance obligation. Otherwise, there are two performance obligation. Understood? I hope you have understood this much. Balance example you can do from ICS study material. Got this point? So these two are important to identify whether there are two or more than two performance obligation or not. Correct? But then also with the question you will be able to understand there are different performance obligations. ICI will not trouble you much in this. Got this point? Yes, sir. This is also done. Then coming to determining the transaction price. How to determine the transaction price? The determination of transaction price depends upon four factors. First factor is variable consideration. Second is significant financing component. Third is non-cash consideration. Fourth is any amount payable to customer. Correct? In this variable consideration and significant financing component is important from exam point of view. Variable consideration means, can I say, we need to estimate. Whenever there is a fixed consideration, no estimation required. But whenever there is a variable consideration, we need to estimate. So how to estimate? So what Ind AS 115 says that estimation depend upon two parts. What they are saying, if the entity has a large number of contracts with similar characteristics. Understood? For example, I'll just give an example. Suppose I am teaching you FR to many students, and right now I have announced that contract done, but I have announced that if anyone is receiving, you are getting more than 90% marks, I refund 50% of fees. So now consideration become variable. Na? Yes or no? So right now we don't know whether the price is 10,000 or 5,000. So it becomes variable. So it depends upon one single contract, large number of contract. There are large number of students now. So it become what? Large population. If the entity has large number of contract with similar characteristics. Understood this point? Correct. In that case, what they are saying, identify the expected value, and expected value will be weighted average of all possible consideration amount. Means they will give you some probability, multiply with that probability, and that expected value will become the amount of variable consideration. So all probable will be given the question, only to apply weighted average of all possible consideration. But if the contract has only two possible outcomes, yes, no, they say yes, no, only two possible consideration, in that case most likely consideration will be the amount of variable consideration. So we call it most likely consideration method. Understood? So in that case, the most likely amount, that is single most likely outcome, is the variable consideration. Correct? Understood? So this is also very easy. I hope you can understand by your own. We'll take some example of this. Now coming to significant financing component. The word is significant means, can you say any insignificant financing component will be ignored? So any insignificant financing component will be ignored. So whenever there is a financing component, it can be significant, it can be insignificant. Understood what they want to say? So if suppose there is any financing component means will include interest. Now. Means transaction price includes what? Interest. Transaction price, not consideration include interest. consideration include interest. Now, if it is insignificant, ignore. Ignore means your transaction price will be what? The consideration amount. There is no need to give the effect of time value of money. There is no need to give the effect of time value of money. But if it is significant, then can you say transaction price will be present value of what? Future consideration, the present value of future consideration. In this you need to exclude what? Interest component to find out the transaction price. To find out the transaction price, we need to find out present value of all future consideration. All future consideration. Understood this point? So how to find out that we need to understand means what will be the discount rate that we need to understand. What will be the discount rate? Now what is significant, what is insignificant, that has not been defined. Means it is a matter of judgment. Means in the question they will inform you whether it is significant or insignificant. If the 2% or 3% has been given, so it becomes insignificant. More than I will say 5%, that becomes significant from exam point of view. However, in exam question they will inform you whether it is significant or insignificant component, because by our own we can't understand whether it is significant or insignificant. It is totally a matter of judgment. Understood? Now what is the discount rate that we need to understand? The discount rate will depend upon is the contractual rate of interest is explicitly stated in the contract. Means whether rate of interest is defined in the contract. Bola if yes. If no, then determine the discount rate. Then we should determine the discount rate. What will be discount rate, that we need to understand. But if yes, and that contractual rate of interest is equal to market rate of interest, is equal to market rate of interest in a separate financing component, then that contractual rate of interest will become what? Discount rate. That contractual rate of interest will become discount rate. But if the contractual rate of interest is not equal to market rate of interest, means this is at off market terms, means it become off market term, in that case determine what? Discount rate. So whenever this situation come, so what will be discount rate, that we need to understand. So they have given two discount rate for this. This is very important. Discount rate should be determined by using either incremental borrowing rate of the seller incremental borrowing rate, and if it cannot be determined, if the incremental borrowing rate cannot be determined, then interest rate implicit in transaction is nothing but what? Effective rate of interest. Effective rate of interest means use IRR concept. Use IRR concept. Means first preference will be given to what? Incremental borrowing rate. If that is not given the question, then what? Effective rate of interest. Effective rate of interest is nothing but IRR. Understood? Can you say effective rate of interest you can calculate? Now so you become expert with financial instrument chapter. But be careful. It is quite possible they have given incremental borrowing rate and they have given both. So first preference will be given to what? Incremental borrowing rate. Chalega. Can you say once you have calculated this discount rate, you can find out present value, and that will become your transaction price. That will become the transaction price. Correct? Means, just try to understand. If I am saying you have done a sale and 1 lakh is payable after 2 years and the discount rate is 10%. So what is the transaction price? You say 1 lakh into 0.826. This will come out to 82,600. Understood? And suppose the control is transferred at a point in time. So you recognize revenue. So what will be journal entry? Trade receivable account debit to revenue. Your revenue will be how much? 82,600. 82,600. And this trade receivable now will be accounted by using amortized cost method as per Ind AS 109. As per Ind AS 109. Understood? Have you understood? This point you have understood? This is what deferred payment. Sometime whatever we receive in advance. Sometime we receive in advance. Let's say, suppose this is Y0 and Y2. And this is the date when the control will be transferred. Control will be transferred. Correct? But you have received some amount yahan par. You have received some amount yahan par. Let me take example. Suppose this is 1 lakh and you have received 82,600. You have received 82,600. Quite possible. Understood? So this much you have received, but revenue will be recognized at which point of time? at Y2. So what journal will do for this? Bank account debit what? To what? It will become financial liability. It will become a financial liability, or you can say contract liability. In this chapter normally we say contract liability. So we will call it contract liability. But this is nothing but financial liability now. 82,600. And now on this you will apply amortized cost method at the rate of 10%. After 2 years it become 1 lakh. So your revenue will be what? 1 lakh. Your revenue will be 1 lakh. So it can be both way. Either you can receive advance or you may receive after some time. So in both cases you need to apply time value of money. Understood? Correct. Yes, sir. So this is also one part which may be asked in exam. Till now, in this no question have been asked. Till now, from this particular point, no question have been asked in exam. Now there is one point which is also important: overriding provision of financing component. What they want to say is in these three circumstances will not apply the concept of significant financing component, and there is no need to apply the time value of money factor. Understood? What are these factors? When the customer paid in advance, and the timing of transfer of those goods and services is at the discretion of customer. Means customer has requested that I will take delivery after 2 years. So okay, their mistake now. That is their mistake. So in that case, it will not include any significant financing component. Second, a substantial amount of consideration is variable. Substantial amount of consideration is variable. Suppose we have done one contract and I said, you give me money once you pass. Now you will pass, definitely you will pass. Correct? This other student, they will pass or they will not pass. I don't know now. The substantial amount of consideration will become what? Variable. In that case, can you say when they will pass, then only I get money? So in that case also it will not include significant financing component. Whenever we are receiving, then only we recognize the revenue. Correct? The difference, the last point is what? The difference between the promised consideration and the cash selling price is for the reason other than the provision of finance. Normally in our business, what happens? We receive in advance. So why we receive in advance? Why we take money in advance? In our business, in education business, everyone will take advance now. Even though performance obligation is not satisfied. Correct now? Suppose the batch will start after 2 months, then also I will take today only now. If you want to take admission. So why? Because we know that if the performance obligation is satisfied, you may default. Then we lose money now. And when the seat is given to you, so we will not give that seat to the other party. Therefore, we take the advance. But there is no reason to take advance that for the provision of finance. Means that significant financing component will not be included in that particular transaction price, and therefore there is no need to exclude that. Understood? So this may be some circumstances which may be important from exam point of view. However, there is one practical expedient. Practical expedient means what? What we do actually in industry. Industry means what actually we are doing in the industry, accounting industry. Correct? So there is a practical understanding that if the time gap between the transfer of goods and services and the payment date is 1 year or less than 1 year, then we'll never do the effect of time value of money. Then we'll do always accounting at undiscounted amount, even though it includes significant financing component. Understood? So this is some practical expedient question may be asked from this for 2 marks. Chalega? Yes, sir. Non-cash consideration. Non-cash consideration means I am providing services, but I am not receiving cash. I am receiving what? Non-cash. Let me take one example. Suppose A sold a plant to B. So for B, it is property, plant and equipment. For A, it is what? Inventory. A is what? Seller. B is buyer. Understood? Exchange of old plant. In exchange of old plant. Understood what I am saying? So in the books of B, what is applicable? Ind AS 16. In the books of A, what is applicable? So in the books of B, cost price of new plant will be equal to what? Fair value of, first preference you have fair value of old plant plus minus what? Cash adjustment. If that is not known, then fair value of new plant If that is also not known, then carrying amount of old plant plus minus cash adjustment. The motive was to revise Ind AS 16 also. This so I hope you know. Now what Ind AS 115 say in the books of seller entity? That is the white. So here transaction price will be equal to what? We are doing transaction price. The first preference will be given to what? Fair value of old new. No. Fair value of non-cash consideration received plus minus cash adjustment. First preference will be given to this. Understood? Fair value of non-cash consideration means old plant. Fair value of old plant received now. Correct? So fair value of old plant received. Doubt is there? Achha, you might be thinking why old plant? Why not new? Just try to understand. Whenever I am thinking from buyer point of view, the buyer may be write down cost. Cost means consideration paid. Consideration paid means what? Non-consideration paid. To here what is given up? Old plant. That will be given first preference. In the books of seller, consideration is received. So what they are receiving? Old plant they are receiving. So based on that fair value, the first preference will be given to the whatever consideration they are receiving. The fair value of non-cash consideration plus minus cash adjustment. If that is not known, then what? Standalone selling price of what? New plant. Why standalone selling price? Because they know the selling price. Now we will not find out fair value. We will find out standalone selling price of new plant. Or what? Bolo. Or nothing na. Standalone selling price will be known na. He is the seller. Seller will know selling price na. So third circumstance will not arise. Understood? So they have said, this is very beautiful concept, that transaction price will be what? Fair value of non-cash consideration received plus minus cash adjustment. But if the fair value of non-cash consideration cannot be measured reliably, then take the standalone selling price of the new plant. Understood? Can I see you remember means what journal entry you will do? Suppose, let me take one example which can be asked in MCQs, which this question can be asked in MCQs. Suppose A Limited sold plant and they have issued what? Equity shares of B Limited. Understood? The standalone selling price is 1 lakh and they have issued 20,000 equity shares. 20,000 into 15 how much? 20,000 into 15 15 3 lakh ज़्यादा हो जाएगा. To make it what? 2 lakh 50,000 and let us say 15. Okay. बताओ, in the books of B, which Ind AS is applicable? Very good. Ind AS 102 means my job done. Today only, yesterday only we have done na. Ind AS 102, my job done. Very good. Excellent. What journal entry will be done? बताओ. First, PP account debit to equity share capital at what amount? If you can say me correct means you have understood. Everyone need to say. First preference will be given to what? Fair value of asset given up. Asset received na. Given up what? Fair value of asset given up or received? Fair value of goods or services received. Ind AS 102 says that first preference will be given to the fair value of goods and services received. Means your journal entry will be what? 2 lakh 50,000. How many shares? Into what? 10. 2 lakh. Balance will be transferred to securities premium. How much? What journal entry will do in these books? They have received equity shares. So it will be investment in equity shares, account debit to revenue. What amount? First preference will be given to what? First preference will be given to what? Fair value of non-cash consideration received. Fair value of what? Non-cash consideration. What they have received? Equity share. How much equity shares? 20,000 into what? 15. How much? Very beautiful question, huh? So 3 lakh is the answer. 3 lakh is the answer. Ulta, different, huh? Different hai. Got this point? Correct. Now, suppose what happened? This was done on 1/1. Now on 31st March, the equity share fair value become 20. But what journal entry you do? Investment account debit. First, 20,000 into 5. 20,000 into 5 how much? 1 lakh. To what? Very good. Means you applied which Ind AS? 109. Only one person is saying, other is silent. Means the subsequent accounting of this non-cash consideration will be done as per respective Ind AS, and revenue will not be adjusted. So C has applied Ind AS 109 and C has applied FB TPL, but it can be FB TOC also. Understood? Have you understood? Chalega. So I have done from both point of view. Ind AS 16, Ind AS 102, Ind AS 15 तीनों बता दिया. चलो. Understood? Okay, sir. So this also done. Now come to consideration payable to the customer. Sometimes whatever the contract is designed in such a way, sometimes some consideration is payable to the customer. For example, you may know about cashback system. Cashback means there may be some voucher you have received, means you have purchased some AC, in that there is some voucher of cashback. So if there is a cashback voucher, it means some consideration will be paid by manufacturer to you. Cashback system is there. So what will be the accounting treatment of that cashback in the books of seller? So what Ind AS 115 says that if seller has not purchased anything from customer, then that consideration payable to customer will be deducted from transaction price. Understood? But if seller has purchased some separate goods and services from the customer, so it will be accounted as a separate purchase transaction. From customer. Quite possible that we have purchased something from you directly. The customer may be my what, but I have purchased something from customer also. So in that regard, if something is payable, so that is a separate purchase transaction accounted as separately. Understood? But in this case, just try to understand what they want to say. Is the consideration payable to a customer a payment for the distinct goods or services from customer? If the answer is no, account for consideration as a reduction of transaction price. But if the answer is yes, now I am just giving one situation. Suppose the fair value of goods purchase is 1 lakh, but a consideration payable is 1,20,000. Apply your common sense. Consideration payable is what? 1,20,000. But whatever you have purchased from customer, the fair value of that goods is what? 1 lakh. So in that case, what you will do? Your purchase will be recorded at 1 lakh ki 1,20,000. 1 lakh. So difference 20,000. What you will do? Now deduct from transaction price. Understood? So in that case, account for the excess as a reduction of what? Transaction price. And balance will be accounted for the purchase of goods or services in the same way that entity account for other purchases from supplier. Till now this question has not been asked, but can be asked. Chalega. But if you know, you can do it. Chalega. Then coming to step number 4, allocation is super easy. Means what they say, first identify the standalone selling price of goods, each performance obligation. Standalone selling price of each performance obligation. And can you say standalone selling price can be directly identified? Because if I am the seller, I know the standalone selling price of goods and services, whatever I am selling. So it can be easily identified. But there are sometimes a situation may arise that we don't able to identify the standalone selling price. For example, suppose this mobile and calculator, I always sell in together only, and I have never sold it separately. So it means I don't know what is the standalone selling price of this. For example, I'll give you my situation. Suppose whenever I do a contract for FR services, so with FR I conduct tests in my regular classes. So it means there are 2 performance obligations. One though I will teach, one I will conduct tests, but I have never separately sold my test. So I don't know what is the standalone selling price of test. So in that case, how to identify the standalone selling price of test? Quite possible now. So in that case, what Ind AS 115 says that you need to estimate what? Standalone selling price. If it cannot be directly observable, but can you say in exam, so they will give na estimation also. How can we estimate? Because we are not a seller na. So from exam point of view, they will give estimated standalone selling price. But there are three methods of estimating what is standalone selling price. One is known as adjusted market assessment approach. Means go to market, find out your competitor is selling at what price. That will become what? Standalone selling prices. Understood? But suppose your competitor is also not selling it separately. Quite possible. Quite possible. In that case, we'll identify the expected cost of providing that services plus a reasonable profit margin. Can you say we can easily estimate the cost of providing services plus a profit margin, that will become a standalone selling price. If that is also not available, then identify residual approach. Identify the residual approach. Now what is the residual approach? Suppose A, B, C. Okay. You have sold the goods at rupees 10 lakh. Okay. Now you have identified the standalone selling price of A, 3 lakh. B, suppose 6 lakh. And you are not able to identify the standalone selling price of C, either by this method or this method. The last approach is what? Residual approach. Means 10 lakh minus what? 9 lakh. 1 lakh will be the residual approach. So last method will be what? Last option is what? Apply residual approach. But last, when you can't estimate the standalone sellings either by directly observation or by using point number 1 or point number 2. Understood? Understood? Now, once you have identified standalone selling price, the transaction price will be allocated to each performance obligation in the ratio of standalone selling prices. You have calculator, you can allocate it. Chalega? Understood. Normally, standalone selling price will be given the question because we are not expert in estimating the standalone selling price. Got this point? But there is two more important point in this. Point number D and point number E. And this is only expected in exam. Already in exam, the question have been asked from this topic. I will do that question on your behalf. Key allocation of discount. Okay, normally discount means what? Whenever you purchase bundle of goods together, so discount will be given. Correct? And whenever the standalone selling price of all the goods will be more than the transaction price, means there is a discount. So that discounts will be allocated to all performance obligation in the ratio of standalone selling price only. In normal situation, we'll do that. But sometimes discount relate to only one performance obligation, not to all performance obligation. Yeah, one or more, but not all. In that case, discounts will be allocated to one or more, but not all performance obligation. Correct? It happens with me when GFRS was introduced in elective paper in old scheme syllabus. So we started teaching GFRS. But to promote GFRS, initially I have given a discounted price with FR. Means FR is 10,000. GFRS actual price was 7,000, but I have given it 12,000. Both 10 plus 2. You only say that discount was for FR or GFRS? GFRS only. FR, so I have my own customer now. Correct? Means to promote GFRS, what I have given? Discounting GFRS. So that discount should not be allocated to FR. That discount only belong to GFRS. So in that case, you allocate discount only to one or more, but not all performance obligations. Similarly, allocation of variable consideration. Now, normally variable consideration will be also allocated to all performance obligation in the ratio of the standalone selling prices. But what Ind AS 115 says that variable consideration relate to one or more, but not all performance obligation. That will be allocated to one or more, but not all performance obligation if two conditions satisfied. But if these two conditions satisfied, then only you will allocate to one or more, but not all. What are the two conditions? Ki whatever means the terms of variable payment relate specifically to the entity's effort in satisfying that performance obligation, and allocating the variable amount of consideration to one or more but not all is consistent with the allocation objective. What do you mean by allocation objective? Allocation objective means whatever transaction price you have allocated, that should be approximately equal to the standalone selling price. That is the allocation objective. What is the allocation objective? Ki whatever transaction price you have allocated, that must be approximately equal to the standalone selling price of performance obligation. That is the allocation objective. So if that is consistent with the allocation objective, then you can allocate the entire variable consideration to one or more, but not all performance obligation. This might be important from exam point of view. I'll take one question based on this. But have you understood this, what I am saying? So let me take that question. This question you do by your own, because this is allocation of discount. This is easy, you will be able to understand. 48 is already asked in exam, but can be repeated. 48 you can understand by your own, but 46 till now not asked in exam, 49 till now not asked in exam, which is expected. So I want to take this question. Chalega? An entity enters into contract with a customer for two intellectual property, license A and license B, which the entity determined to represent two performance obligations is satisfied at a point in time, with the control will be transferred at a point in time. The standalone selling price of A and B given 16 lakh and 20 lakh. The entity transfer license B at inception of the contract. Well, the point of time is the date of contract only, but license A is transferred 1 month after, 1 month later. Okay. Case A, don't read this case A, okay. Read the only case. The price stated in the contract for license A is fixed amount 16 lakh, and license B is the consideration is 3% of the customer future sales of product that use the license B. Means here the consideration is 3% of sale. This is known as royalty income. Whenever you provide some your intellectual property to be used by other, that whatever consideration you have received, that is known as royalty income. The royalty income is based on sales or usage of that particular property. Understood now? So it is based on the sales or usage. Understood? Are you able to understand? So what will be the consideration? Consideration is 3% of future sales. 3% of future sales. Now, for the purpose of allocation, entity estimate, because it becomes variable consideration, so you need to estimate it. They have given estimation also. Thank you very much. Estimate that is sale based royalty, that is variable consideration, to be 20 lakh. So it means first they will estimate sales and then they will apply 3%. 3% of that sales is what? 20 lakh. Understood this point? Have you understood this point? Allocate the transaction price. Can you say just try to understand? In this case, it is very simple. Because A and B, what is the standalone selling price? 16 lakh and 20 lakh. And what is the fixed consideration? 16 lakh. What is the variable consideration? 20 lakh. And can you say, because this variable consideration relates specifically to the performance obligation of B, and the allocation of variable consideration only to B will be consistent with the allocation objective, and therefore we can allocate. In this case, no doubt. And 16 lakh can be entirely allocated to, and 20 lakh will be entirely allocated to B. But what will be journal entry? Batao. In this fixed consideration you receive initially. So suppose 1/4 is the date of contract. They have not given date. I am doing with that. Suppose 1/4 is the date of contract. So how much you have received? 16 lakh. For which license? But license A performance obligation satisfied after 1 month. Means that will become your contract liability. Understood? Now coming to 1/5 means next month. So can you say first you need to find out sales of April month. That is not given in the question. Let us assume. Suppose the sales of 20 lakh divided by 3%, how much? 20 lakh divided by 3%. That is the total sales of the year. Divide by 12. 15 lakh. 55 lakh. Chalo, let us assume 55 lakh. Okay. 55 lakh. Let us assume 55 lakh is the sales of which month? April month. Into 3% will be how much? 1,55,000. Okay, 65,000. It means this is the royalty income for what? License B. But the performance of obligation was satisfied on which date? On 1/4. But the amount is received on which date? On 1/5. Now the question arises, revenue will be recognized on 1/4 ki 1/5. 1 second, फिर से सुनना. 1 second. In the question it is given license B performance obligation is satisfied on the beginning only. Means 1/4. बोलना yes or no? But a consideration received, the royalty income received in which month? 1/5. Because that only you can define the total sales. Total sales 3%. Correct. Now the question is revenue will be recognized on 1/4 ki 1/5. 1/4 ki 1/5. No, not correct. What Ind AS 1/5 says कि in case of sale based royalty income, this is our special guidance till now I have not done any revision. In case of sale based royalty income, revenue recognized at a letter of two date. First date performance obligation satisfied, or the date when the sale is occurred, whichever is later. So can you say even though performance obligation was satisfied at this point of time but no sales occurred, can you recognize revenue? No. Practically you can't recognize revenue because the revenue is based on sales. It might have been no sales occurred throughout the year. So you are recognizing wrong revenue now. Well, wait for the occurrence of sales, and once sales occur, recognize the revenue. It means, can you say we recognize bank 1,65,000 to revenue of what? B 1,65,000. Understood this point? And can you say at this point of time performance obligation of this is also satisfied? So you will pass one more journal entry. Contract liability account debit to revenue of what? A, how much? 16 lakh. Understood this point? Then next month, only for contract, only for license B, you recognize the revenue. Understood this point? Have you understood? Now next, situation number 2 is good. Case number B. The price stated in the contract for license A is the fixed amount of rupees 6 lakh. For license A fixed amount, and for license B the consideration is now 5% of customer future sales of product that use the license B. Entity estimate a sale based royalty, that is variable consideration, is now 30 lakh. Here the license A is transferred 3 months later. Now license A is transferred 3 months later. The royalty due from customer in the first month is 4 lakh. In this case they have given 4 lakh. Means we are not supposed to now take any assumption. They have given the royalty income. Now in this case what happened? Ki license A, license B. What is the standalone selling prices? 16 lakh, 20 lakh. But fixed consideration is what? And variable consideration is what? 30 lakh. So the first condition is satisfied कि this variable consideration relates specifically to what? Performance obligation to be satisfied for B. But second condition will not be satisfied. Allocating 30 lakh entirely to B, whether it will meet allocation objective? No, because standalone selling price how much? 20 lakh. So can you allocate 30 lakh entirely to B? You cannot allocate 30 lakh entirely to B. And can you allocate this fixed consideration entirely to A? No. So in that case, your total consideration become what? 36 lakh. And this 36 lakh will be allocated to what? A and B in the ratio of their standalone selling prices. Understood? Have you understood? Not able to understand? Bolna? Understood? So 36 means how much will allocate? 16 lakh, 20 lakh. Allocate 36, that will be 16 and 20 only. 16 and 20. The question has been designed in such a way that is coming 16, 20. In your, it can be different also. It may be the total is coming only 32. Then allocate 32 in the ratio 16 is to 20. Understood? Have you understood? Any doubt is coming? Doubt to hai. Now some of you thinking, Kissa, why you are doing this? 6 to allocate this. Now out of this 30, 20 this and balance transfer to what? You might be thinking in this way. Anyone thinking in this way? Ki fixed consideration belong to what? Fixed consideration entirely belong to what? A. You may think in that way also, na? Only transfer what? Variable consideration? But no. We are doing as per IC solution. IC has done in this way. We will also follow IC solution. So if any other solution is coming into mind, delete that. So entire consideration 36 will be allocated to A and B in the ratio of what? Their standalone selling price. One second, entire consideration fixed plus variable will be allocated to A and B in the ratio of their standalone selling prices. Now, मजा आएगा entry में. Now, on 1/4, बताओ how much you have received? Bank account 6 lakh. But this belong to what? This belong to A and B. In which ratio? Allocate करो. Allocate 16:20. In this ratio, allocate 2 lakh 667 and तो बताओ this 2667 will be revenue or contract liability? Very good. This is for A. And this 333 will be revenue or contract liability? Revenue or contract liability? Revenue. Because performance obligation is satisfied for B. And this is not sale based royalty income. Whatever I have said for what? Sale based royalty income. This is the fixed consideration. The fixed consideration we recognize as and when the performance obligation is satisfied. For license B, the performance obligation has been satisfied. So this much will be revenue for B. Now on 1/5, again how much we have received? 4 lakh. But this will be also allocated in which ratio? 16:20 allocate. 1 lakh 70 7,000 777. Then बताओ this A वाला will be what? Because performance obligation in this case number will be done after 3 months. It will be again contract liability for A, and for B revenue because sales has occurred, so this will be revenue. So in this question they have asked what is the contract liability at this point. So contract liability will be this plus this, and revenue will be this plus this. Good question till now not asked. So can be asked. So I have done my job to explain you this. Now changes in transaction price, I will take one question, I will explain this point. When step number 5 will be over. So I will take one question about changes in transaction price. Come to step number 5, satisfying the performance obligation. Now performance obligation to be satisfied. So this is the last step, and we have understood revenue will be recognized as and when performance obligation is satisfied. Now as per Ind AS 115, performance obligation is satisfied either at a point in time or over the period of time. Can you say at a point in time, no much discussion required? If you know the point in time, entire transaction price will be recognized as revenue at that point in time, means only discussion is required over the period of time. And so how will understand कि here performance obligation is satisfied over the period of time? Normally whatever I have seen, कि question will inform you whether it is over the period of time or at a point in time. But there can be a 2 mark specific question in that they can ask whether it is at a point in time or over the period of time. For that reason, they have given 3 criteria. How many criteria? If any one criteria satisfied, it will be what? Over the period of time. If no criteria satisfied, then it is what? At a point in time. Understood? So this is important only for a specific question when they ask whether at a point in time or over the period of time. For revenue recognition, I will say they will normally give at a point in time or over the period of time. Correct? So what is criteria? First criteria is customer receive and consume the benefits simultaneously as and when entities perform. Means customer will receive the benefit and consume the benefit as and when seller perform their performance obligation. I'll take the best example. Suppose I am providing you accounting services. First month I came, I have given the services. So you have received the benefit and you have consumed the benefit also. Correct now? Understood? Because you have received the benefit and you have consumed the benefit. Second month I may not be coming. So second month you will appoint another accountant. Whether that accountant required to perform whatever I have done. Not able to understand. 1 second. I am providing you accounting service. I am accountant, not chartered accountant. I am not giving auditing services. I am giving accounting services. So I came to you. First month, all the journal entry I have done. So of course I have correct journal entry na. Correct journal entry. Okay? I have done correct journal entry. So whatever services I have given in first month, you have received and you have consumed the benefit. Now second month, suppose I am not able to come, I have terminated my job. So you will appoint a new accountant. Whether new accountant is required to re-perform whatever I have done? No, it means you have received and consumed the benefit simultaneously. Therefore, this is over the period of time. Let me take one more example. Suppose I am providing auditing services to you. I am an auditor now. Correct. First month I came. I have given the services. You have received the services. Second month something happened and I am not able to come. I said terminated. Now you reappoint new auditor. But the new auditor, whether he will do from the beginning or from the second month? Beginning, because he will not rely on my work. Therefore, in that case, you receive but you have not consumed the benefit. Means criteria A is not satisfied. Means A is not satisfied. B and C may be satisfied. So A is not satisfied. Have you understood this point? Can I go to B? Can I go to B? So in this point is very important. Any question you apply this. This criteria can also be applied if an entity determines that another entity would not need to be substantially re-perform the work that the entity has completed till date if that other entity were to fulfill the remaining performance obligation to the customer. Understood? A very good question has been given ICS study matter. You will say whether it is A is satisfied or not satisfied. Suppose this is India, South India, correct? This is what Mumbai. This is what Sri Lanka, Colombo. This is Colombo. Same example is given in ICS study material. You might have done. Now, suppose I am giving you transportation facility from Mumbai to Colombo port. Understood? But criteria A is satisfied, not satisfied. Means over the period of time or A is not satisfied. Whether customer receive and consume the benefit simultaneously. Huh? Means you are saying A is not satisfied. How many are saying A is satisfied? देखो अभी we have done ना रे. Apply ना. 1 second please. I am not happy with you. Whenever I am asking, give answer. Whether it may be wrong, it may be correct. Give na re. Try to react. Try to react. Once you react, then something will happen in your life. When you will be still, nothing will happen in your life. देखो, every action has a positive or negative reaction. You know this ना? Every action has a positive or negative reaction. Negative हुआ, तो you are there only. Positive, you are step one more step आगे. You are one step forward. Okay ना? To react. You take action. If you are not acting, you are going back, I will say. To act. Okay, acting is required. 1 second. Mumbai, Colombo. I am providing sea transportation, not land transportation. Sea transportation from Mumbai to Colombo port. A is satisfied, not satisfied? How many are saying not satisfied? How many are saying satisfied? Correct. So satisfied is correct. But when I have read this answer now for the first time, I have given wrong answer. And if you are giving correct answer, means you are better than me. Are bolna re? You have given wrong, like me. I have said not satisfied. So you are like me now. If I am CA, so you will also become CA. Are bolna re? In any situation you will become CA. I have given wrong answer. So I am a chartered accountant now. So C will also become chartered accountant. You have given correct answer. So now think about rank. Because you have given better answer now. So in any situation you are going to become CA. Wrong answer does not mean you are not going to become CA. If you are not able to do one question, it does not mean you are not able to become CA. If you are weak in one subject, it does not mean you are not able to become CA. CA does not mean perfection. CA means jogado. Jogado means what? Means who will take advantage of all the situation. Who will take advantage of all the situation. He knows his weakness. He knows his strong point. So will work on our weakness and try to excel in what? Our strong point. That is the point. Means when I was doing CA Inter, so there was one subject, information technology. No, Inter. You have to IT SM na. Our 100 marks IT. More dangerous na. It was more dangerous or not? SM to you have scored na. IT is more dangerous or not? Means I was also like you. I was also like you. Believe me, IT was nightmare for me. Means that time to, believe me now, in my house there was no laptop, there was no PC, and we were studying information technology. Means that days I remember no technology experience, no mobile, nothing. Now to you are expert in technology, you know many things. But I have never touched mobile, camera, laptop, PC, nothing. Whatever, when we used to do articles, if some keyboard we have touched. Understood now? That too, if I am going to audit, that is also not there. Only vouching. There was that only physical work na. So IT was nightmare for me. I have understood in this that time 8 subject. No, that time 6 subject in that time also 6 subject in CA Inter. I have understood 5 subject I will pass, 1 subject I will go. So I know my weakness now. I will work hard in what? I have not taken coaching class for IT. How much I score, you know? 72 in IT. But I don't know how. Study more na. Try to make it a strong point. You can score. Believe me, right now if you ask me IT, I don't know anything. I can't teach information technology. I can teach all subjects, but I can't teach information technology. That is my weak point right now also. Means I don't know how to, means whenever there is software problem na, I give to my son. My elder son, he will do everything, but I don't know how to do it. I am using, maja aata hai, but I can't repair it. But my son is totally expert. Understood? So it means IT is nightmare for me right now also. But I have scored how much? That only you need to find. That is chartered accountant. That is only CA. You need to find out what is your weak point, excel in that. Try to improve that. Strong point, excellent marks. That is the point. So you need to find out what is your weak point. Suppose you think audit, whatever. Try to work on that. Don't leave it. Don't leave it. Try to work on that. Because that is the subject where you may be in disadvantage stage. So try to give more importance that. Correct? One more example. Suppose you have 4 friends. This friend you don't talk much. These 3 friends you talk much. Now you only say, if you will not talk to him, if you will not go to near me, if you will not touch him, what will happen? What will happen? Disconnection? Same thing. This is audit subject, मान लो. Touch more, use more, read more. Then only what will happen? Something will happen. Understood? I am saying if you touch, then only feeling will come. Now touch book, touch more time. So if you touch, they will respect you. So that is the point. Whatever is your weak area, find out. Work more than that. Because if you are comfortable, you can pass easily. If you are discomfort, work on that. Chalega? Now, in Ind AS 1.5, I hope you have understood. This is what 100% correct. The A is satisfied. Why? Because suppose yahan tak transportation facility was given. Now can you say one new entity will come? So whether he will go back. So new entity will give the services from this only na. Therefore, it means whatever services is provided till now has been received as well as what? Consumed by the customer. Means this much transportation has been given na. And suppose something has happened. So a new company will give transportation facility from here na. The cargo will not go back. The new cargo will come up to this point and they will give services for, or it will be landed to somewhere near port, and the service will be given from this place. It means the new entity is not required to re-perform the work whatever has been done by previous entity, and therefore criteria A is satisfied. This is one of the question in ICI study material, therefore I have given. B is what? Ki whenever entity performance create or enhance the asset as and when entity control the asset. Means any asset which is under the control of customer. Any asset which is under the control of customer. And in that asset, the seller entity is giving some services. So it is already under the control of what? Customer. So it is over the period of time. For example, we are doing building construction in the land of customer. So can you say whatever service, whatever work we have completed, that control is already transferred. So it means the control is transferred over the period of time. As and when we create or enhance the asset, the control is transferred to the customer. Therefore, this will be what? Over the period of time. But suppose if you are constructing building in our land, so till the building is completed, till the sale has been done, the control is not transferred. The control is not transferred. Understood? So what they are saying, entity's performance create or enhance an asset that a customer control as and when asset is created or announced. Simple example, construction of building in customer land. Last criteria is what? Entity performance does not create an asset with an alternative use. Means whatever performance has been given, that will not create an alternative asset which can be used by seller entity. And the entity has an enforceable right to payment. Enforceable right to payment for the performance completed till date. Means they have a right to demand payment whatever performance have been completed till date. If these two conditions satisfied, means it is over the period of time. So first is what? Entity performance does not create an asset with an alternative use to the asset. Means can you say whatever we are constructing, or whatever we are providing services, that is as per the specification given by the customer. Means suppose I am constructing an asset as per the specification given by the customer. Means that cannot be used by other customer. That cannot be used by the other customer, or we cannot sell it to other customer. We cannot use it for our purpose. Correct? The first condition satisfied. Second, and the entity has a right to demand payment till the date whatever performance has been completed. If I can demand payment for the 40% of work performed, it means second condition satisfied, and this will be over the period of time. Now when they say enforceable right to payment, the question is what do you mean by right to payment? So they have given an explanation. Right to payment means cost incurred till now plus a reasonable profit margin. Means if you can demand only cost, then the second condition is not satisfied. You can demand cost plus what? Reasonable profit margin. It means then second condition satisfied, then only it will be over the period of time. Otherwise it will not be over the period of time. Understood? I think you have understood. Whatever example given, you can understand by your own. Chalega? So this is what over the period of time means. A, B or C, if any one of the conditions criteria satisfy, it will be over the period of time. Otherwise it will be at a point in time. Now in example, suppose a specific question asks, then first apply A. If not satisfied, then apply B. If not satisfied, then apply C. Mean directly don't apply C, even though you know C will be applied. So whatever answer has been given as a study matter, first they have applied A, not satisfied. Then apply B, not satisfied. Then apply C, satisfied. So over the period of time. C not satisfied at a point in time. So apply A, B and C on simultaneously basis. Chalega? Yes sir. Done. Now coming to the method. Now whenever I am saying over the period of time. Over the period of time. Now the question arises how to recognize revenue. So they have given two methods. One is output method, very easy. Based on the value of output transferred. Output method means whatever output you have transferred, the measure the value of that output, that much revenue will be recognized. It is very simple. Therefore, they will not ask. Output method is very easy now. So whatever output you have transferred, measure the value of that output, that much revenue will be recognized. But sir, how will understand what is the output transferred? In that case, we need to take the help of one surveyor. Means one surveyor will come. He will identify how much performance obligation is satisfied. Correct now. He will measure the value of that. Whatever value is given by us, that will become the revenue, and that much revenue will be transferred. Means this will be as per the information given in the question. As per the information given in the question. Understood? We'll take one question based on this. Have you understood this point? Correct? 1 minute. We'll take, my pen is not working. We'll take 10-minute break, okay? Pen is discharged. 10-minute break, okay? Can we start? Everyone not came? Chal. Now, we were discussing about Ind AS 115, the method of measuring performance obligation satisfied over time. This was the topic going on. Means we have understood when the performance obligation is satisfied over the period of time or at a point in time. Can I say at a point of time, at a point in time, the discussion is not required for revenue recognition because entire transaction price allocated to that performance obligation will be recognized revenue at that particular point in time. So no discussion required. But whenever it is over the period of time, so now we need to understand how much transaction price will be recognized over the period of time. Means suppose over the period of time is 5 years. So how much we recognize in first year, second year, third year, fourth year and fifth year. That is required. So topic is what? Method of measuring what? Progress. So what Ind AS 115 says that revenue recognition is based on the measurement of progress of satisfying the performance obligation. So how to measure the progress? That depends upon two methods. One is what? Output method. Second is what? Input method. Output method is very simple. Ki measure the value of output. Means whatever goods and services are transferred, identify the value of that goods and service transferred, and that much revenue will be recognized. Correct? For that, normally when there is a long-term contract, to find out how much performance obligation is satisfied, we may take the help of surveyor. Means surveyor will come, he will give a report ki how much work has been certified, what is the value of that work certified, and that much value will be recognized as revenue. Okay? So that is based on surveyor of performance completed till date or appraiser of result achieved. I think in costing you have done surveyor method. Work certified, work not certified, you have done now in CA inter costing. Correct? Similar to that, ki surveyor will come, they will give you the value of work which has been completed, and based on that value we recognize the revenue. Means this will be based on the information given in the question. Information given in the question. If you want, I can take one question so that you can link with that. Whether I have taken that question. Yeah, this is the question. Question 89. Nivan Limited commenced the work on 2 long-term contracts during the financial year ended 31st March 2019. The first contract with AN Company commenced on 1st June 2018 and had a total sales value of 40 lakh. It was envisaged that the contract would run for how many years? 2 years. Means over the period of time. Correct? And the total expected cost will be 32 lakh. On 31st March 2019, Nivan Limited revised its estimate of total expected cost from 32 lakh to 34 lakh on the basis of additional rectification cost of 2 lakh incurred on the contract during the current financial year. Means some additional cost was incurred. So of course estimated cost may increase. Initially it was 32 lakh, now it become 34 lakh, it may increase. An independent surveyor has estimated at 31st March 2000, independent surveyor, which method? Surveyor method means output method, that a contract of 30% is completed, means 30% is given in the question. So that will be given in the question, we are not supposed to calculate that. And Nivan Limited has incurred cost up to 31st March 2019, 16 lakh and has received payment on account of 13 lakh. Understood this much? Means you see from first contract, first contract is for how many years? 2 years, correct? But what was the estimated cost at the beginning? 32. But at the end it become 34. What is the transaction price at the beginning? What was the contract value? What was the consideration? 40 lakh. So it was beginning 40 lakh and at the end also it is 40 lakh only, correct? And how much they have incurred, actual cost incurred is how much? Actual cost incurred is how much? Actual cost is incurred 16 lakh and how much payment received? 13 lakh. So 16 lakh is actual cost and how much received? These are all information given. So because 30% work has been completed, so 30% of 40 lakh you recognize. So how much you recognize the revenue? How much? 12 lakh will be revenue. And how much will be the total cost? 30% of this will be how much? 34 into 30%? 10.20. It means, can I say your revenue will be 12 lakh for contract 1. Your cost will be 10.20. 10.20 lakhs. So what is the profit? 1.20. Correct. Now 1.80. Understood? Very simple, simplest question. Now out of this revenue, how much you have received? Means how much advance received? So 1 lakh will be your contract liability because that is advance received from customer. So 1 lakh will become your contract liability, which will come in the balance sheet as liability. As liability. How much what is the total cost? Bolo. What was the total cost? Sorry. Total actual cost was 16 lakh, but how much you have recognized? 10.80. So how much you have not recognized? You have incurred how much? 16 lakh. Out of that, how much you have recognized as an expense? So balance is what? 5.80. This will be known as work in progress as inventory in the balance sheet. Inventory as an asset in the balance sheet. Understood? Have you understood? Means whatever you have incurred, which is not an expense, will be your asset. So that will be contract work in progress, recognized as an inventory in the balance sheet. Recognized as an inventory in the balance sheet. Understood? Have you understood? Second contract. I hope you have understood. Second contract, same information has been given. Second contract with B and Company commenced on 1st September 2018 and was 18 months. The total sales value is 30 lakh and total expected cost is 24 lakh. Payment on account of already received 9.5 lakh and total cost incurred is 8 lakh. Nuan Limited has insisted a large deposit from B and Company because company had not traded together prior to the contract. The independent survey estimated that how much work has been completed? 20%. Once again, similar question you can do now by your own. Similar, you can do it by your own. Understood? So this type of question means whenever output matter, direct question will come. Output matter, direct question will come. So output matter easy, but this question have been asked in exam, already asked in exam, so can be important. Can be important. Understood? In this question, two alternative solution has been given. Whatever we assume, initial estimation was 32 lakh. Then additional cost was how much? 2 lakh. So in one of the alternative solutions, they have assumed it is an abnormal loss. If 2 lakh is an abnormal loss, then that will not be considered in total cost. Then you should calculate 30% of what? 32 lakh. Understood? So if you have taken that 2 lakh is an abnormal loss, so that will not be considered to find out the cost incurred. Then you need to find out how much 30% of 32 lakh. But I will say why to assume by your own, it is an abnormal loss. Correct now? So from my point of view, don't assume, consider it as what? Normal loss, normal cost, normal cost. Understood? But they have given two answers, you can read, you will be able to understand. Chalega? Yes, sir. Now coming to input method, which is more important. So in case of input method, the best method is cost to cost method. We call it what? Cost to cost method. Cost to cost method. In that case, what our Ind AS 115 says that percentage of progress means how much progress has been made, that will be calculated by cost to cost method. So there is one formula, will apply actual cost divided by total estimated cost into 100. It means, can I say, in this we need to measure the progress by our own. The formula become what? Actual cost incurred divided by total estimated cost multiplied by 100. We call it what? Cost to cost input method. Cost to cost input method. Sometimes we also calculate progress on the basis of labor hour consumed. Labor hour consumed. For example, we are labor, but can I say we are providing services based on hours only? So suppose my total estimated hour is 300 hours. Out of that 100 hours I have completed. So how much portion of work I have performed? 100 divided by 300. So we can also use labor hour expended method. Correct? Understood? So, but normally in exam they will give you only what? Cost to cost method. Cost to cost method. Understood? So these are the two methods. Most popular method is what? Cost to cost method from examination point of view. From examination point of view. To explain this, let me take one question, which is also asked in exam. This question. An entity has a fixed fee contract of rupees 1 million. 1 million means 10 lakh to develop a product that meet the specified performance criteria. We are doing question number 26. Estimated cost to complete a contract is 9,50,000. The entity will transfer control of the product over how many years? It is given over the period of time. I said normally in all the questions they will say over the period of time or at a point in time. So we'll go as per the information given in the question. Means there is no need to apply A, B, C. So that will be a specific question for A, B, C. Chalega? And the entity uses cost to cost input method. They have given also cost to cost input method to measure the progress on the contract. An incentive award is available if the product meet the following weight criteria. Means there is some variable consideration. There is some variable consideration. Means some incentive will be given, some award will be given. So there is some variable consideration. If the weight is 951 greater, incentive is 0%. Nothing will be given. If the weight is 701 to 950, then 10% incentive, and incentive will be what? 1 lakh. Means 10% of what? 10% of 10 lakh, that is coming what? 1 lakh. And if the weight is 700 less, it becomes 25% of 10 lakh, that is coming 2,50,000. Chalega? The entity has an extensive experience creating the product that meet the specific performance criteria. Based on its experience, the entity has identified 5 engineering alternatives that will achieve the 10% incentive and 2 that will achieve 25% incentive. Means they are now just identifying that whether we can achieve 10% incentive or we can achieve 25% incentive. So 5 engineering model is saying 10%, 2 engineering model is saying 25%. Correct? In this case, the entity determined that they are 95% confident that it will achieve what? 10% and 20% confident that will achieve 25%. Correct now? But it is what? Will apply weighted average of all possible consideration or will take most likely outcome. Most likely because there are 2 outcomes. One is what? 10%. One is what? 25%. And which is most likely? 10%. Therefore, will include what? 1 lakh. Then they have given that only will include 1 lakh. This para is not important. If you want to read, read. Then entity reassesses production status quarterly to determine whether it is on a track to meet the criteria for incentive award. Can you say they at the end of each year they will reassess whether that is achievable or not achievable? Correct now? Or whether we can achieve 25% incentive or not. So they will reassess the transaction price. They will reassess the variable consideration. At the end of year 4, what happened? At the end of year 4, it become apparent that this contract will be fully achieved and the weight-based criteria fully achieve the weight-based criteria. Means now they are of the view that they can achieve 25% incentive. Therefore, entity revised its estimate of variable consideration to include the entire 25% incentive fee. Means at the end of 4 years, okay, transaction price will change. Transaction price will change. Understood? The question is what for changes in transaction price? Changes in transaction price. Then they have given evaluate the impact of changes in the variable consideration when the cost incurred. First year this was the cost incurred, second year these, third year these, fourth year these, and fifth year. What is the total coming? Total is 9,50,000. Means what was the initial estimation? What was the initial estimation? Initial estimation was 9,50,000 and the actual cost is what? 9,50,000. Can you say practically not possible? Only in examination it is possible. Can you say it might happen that whatever they have estimated, the actual is different? So that type of question can be also asked. That type of question can be also asked. So I will just give you one situation when estimation and actual are different. So that type of question till now not given, but in AS based question they used to ask. So I will inform you that also. Ki suppose that question asks how to react. How to react. Chalega. This become very easy. Calculate yearly revenue, operating profit and margin. Can we do it fast? तो बताओ फास्ट करेंगे. तो we have how many year? Year 1, year 2, year 3, year 4, year 5. What is our fixed consideration? 10 lakh, 10 lakh, 10 lakh, 10 lakh, 10 lakh. What is the variable consideration? Initially it was 1 lakh, 1 lakh, 1 lakh, then changed to what? 2.5 lakh, 2.5 lakh. What is the total transaction price? It is 11 lakh, 11 lakh, 11 lakh, 12.5 lakh and 12.5 lakh. This is understood? Correct? Understood. Now, can you give me actual cost incurred? First 50,000, then what? 1 lakh, 75,000, then 4 lakh, then 2 lakh, 75, then last 50,000. Can you give me total estimated cost? 9 lakh, 50,000, 9 lakh, 50,000, 9 lakh, 50,000, 9 lakh, 50,000, 9 lakh, 50,000. Correct? Understood. Now, we need to find out how much contract revenue we recognize. So, a simple formula will work. This is A, this is B, this is C. So, you will do A into B divided by C. Can you give me? A into B divided by C every year. 57,895. Then $2 lakh. Then 4 lakh, 1, then 3 lakh 18,000, 61,842, then correct. Understood. My question, without calculating, the total should be equal to what? The total should be equal to what? Atna lakh. This is revenue. I have written contract revenue. You have allocated 11 lakh now. Why is it 9 lakh 50? What the total should be 11 lakh or 12 lakh 50,000? 12 lakh 50,000. It should be 12 lakh 50,000. But how much it is coming? Check karo. It will not come. 11 lakh. Exactly. 315. So can you say it should be 12 lakh 50,000, but it is not coming? Why it is not coming? Because can you say here there were some changes. There was some change. What is the difference? 12 lakh 50,000 minus this? 98,685. So this will be adjusted in which year? Fourth year. Because changes has been done in which year? And we will say cumulative catch-up adjustment. And this will be become total revenue. Total revenue you can calculate. This amount is coming how much? 4,60,527. I hope you have understood. Now the total will be how much? 12,50,000. Correct. This I have given one shortcut. Shortcut you understood? Means what we have done? Just try to understand. So first year, second year, third year, we have done allocation on which basis? 11 lakh. Understood. But there were some changes in which year? This is changes in accounting estimate or changes in accounting policy? Accounting. So changes in accounting estimate. Prospective, retrospective. Means from the year of change. So what was not recognized in first year, second year, third year will be recognized where? fourth year. So this was actually the revenue of which year? First year, second year and third year, which is now recognized in which year? Fourth year. Now your institute has given one working note for this. I'll explain the working note, because in exam if you will not give working note, they will deduct marks. So what is that working note? I will explain. But shortcut you have understood? Shortcut you have understood now? Correct. Now can you see, you can compare with the cost, then you can calculate profit, then you can calculate profit margin. So they have asked you to calculate profit margin, that you can do by your own. Minus actual cost, profit, then profit margin. Profit margin is profit divided by sales, that you can do by your own. Now how to calculate this amount? First, can you give me what was the total cost up to this date? What is the total cost up to this date? 9 lakh. What was the total estimated cost? Into 100, 94.7, means this much work was performed. Now into 12 lakh 50,000, how much? 11 lakh 84,000. 2, means this much revenue should be recognized in first, second, third and fourth year. But how much we have recognized? Can you give me the total of this? Total of this? $10 lakh. Difference is what? Exactly coming now. 1 rupees, 2 rupees difference will come. Same amount is coming or not? 2 rupees, 3 rupees difference will come. This is the working note they have done. So in exam you can also do one working note. Correct? Yes. This is one method. Have you understood? But have you understood? Now come to my concept. This much you understood? This is ICS 30 method solution. But this method cannot be used in all questions. If suppose they have given the different actual cost, means actual cost is different from estimated cost, then you can't apply this. So I like to change the question. And what is the best method that I will give you, in which all questions can be done? Whenever there is no changes in total estimated cost, then you can apply this. But whenever there is changes in estimated cost, then you can't apply in this way. So I'll give you one more way, which is better way, without any working note. Chalega? So I'll just give you, suppose year 1, year 2, year 3, year 4, year 5. So I'll give you actual cost and Y0 recon. Y0 means what? Y0 means inception. Okay. So this is actual cost, this is estimated cost. So actual cost was nil, estimated cost was 9,50,000. This is cost to complete, right on. Cost to complete and then down estimated cost. So this was nil, cost to complete is 9,50,000. So this will be also 9,50,000. Right. Then Y1 actual cost is 50,000. Cost to complete is 9 lakh. So this become what? 9 lakh. Means year 1 there was no changes. Then year 2, let us say how much they have given? 1,75,000. Okay. So let us say it is 1,75,000. But this become 10 lakh. So what is the cost to complete? This plus, this plus minus this, how much it is coming? 7,75,000. Understood what I am saying? This is year 1, year 2, this is year 3, year 4, year 5. Understood what I am saying? Correct? I am creating one question for you. Okay. Then they have given how much? Let us say 4 lakh only. But this become 10,20,000. Understood? So this total, 3 total minus this, how much it is coming? 3 lakh 95,000. This type of information might be given now. Correct? Then, how much they have given? 2,75,000. So let's say 2,75,000. Correct? But this become 10,50,000. Batao. This 4-year total, and minus this, how much it is coming? 1,50,000. And the actual is also 10,50,000. So this will be nil now. Cost to complete will be nil. So this can you give me? What will come? 1 lakh? No. Give me total should be 10,50,000. 1 lakh? Chalo, this is the question. Under the question. And in exam they will not give this. In exam they will not give this. Understood what in exam they will not give? Estimated cost they will not give. They will provide this information. So in this question, how to do? This question have been asked in CA final old scheme of syllabus when there was AS7. So in AS7 was also what? Revenue recognition for long-term construction contract. So they used to ask this type of question. So on that basis, they can repeat this type of question. Till now in ICS study material, they have not given this type of question. So of course can be asked now. So how to do? Other all information remains same. So you need to help me. 1, 2, 3, 4, 5. First can I say our transaction cost already we have calculated 11 lakh, 11 lakh, 11 lakh, 12.5, 12.5. So first find out cumulative cost up to reporting date. Cumulative cost. The cumulative cost means first year how much? 50,000. Second year how much? 50 plus 1,75,000. How much? 2 lakh. Then 2,35,000 plus 6 lakh. 2,25,000. So third one is what? Fourth one is what? And fifth one is what? Means fifth one will be equal to this now. Total 10,50,000. Then find out total estimate. Then you will add cost to complete. So first year cost to complete is what? First year is what? 9 lakh. Second year 7,75,000. Third year 3 lakh na. 3 lakh. Then what? Then what? 0. So again this total will become total estimated cost. What is total estimated cost? 9 lakh. This will be 10 lakh. This will be 10 lakh 20,000. This will be 10 lakh. This will be 10 lakh. Correct. Now we'll do on cumulative basis. So automatically can I say cumulative catch-up basis will be applied and that working note is not required. So now we'll find out cumulative revenue. Cumulative revenue recognized up to reporting date. What is formula? A into B divided by C. Formula become A into cumulative cost incurred divided by total estimated cost. Understood? A into B divided by C. Can you give me? 57,000. Second. Two lakh 41,500. 47. Then 11 lakh into this much time. Confused. This is A, huh? This is A, this is B, this is C. Third one is what? 6 lakh. 0. Fourth 10,71,000. 429. Fifth one, it will be 12 lakh. So automatically entire revenue recognized. Now can you say we can find out year-wise revenue? So year-wise revenue will be 57895. Then minus this, then minus this, then minus this, then minus this. So you'll get revenue of that year minus actual cost of that year. That will be profit of that year, and you can find out profit margin. In this way, there is no working note for cumulative catch-up basis required. So this is the only when they have given changes in estimated cost also. If you do in this way, your answer will be wrong, or there is high level of working note is required. There you die. So always I will say whenever questions come, do in this way. First I have done as per ICA solution. Then I have said this is more perfect method to do all types of question. Understood? Have you understood? Chalega? Yes, sir. Done. So my job done. So I have taken one question for output method, one question for input method. Now this para is very important. Means point number B, I think 3 times or 2 times the question pakka kahe. 2 times in examination question has came from point number B. Very important. So what they want to say? Ki whenever you apply input method, that too also cost to cost input method. Whenever you apply cost to cost input method, so to measure the progress in satisfying the performance obligation, any abnormal loss incurred will not be considered. First point is to understood. So what they are saying, when any cost incurred does not contribute to entity's progress in satisfying the performance obligation, such costs must be ignored for measuring the progress of work. Means any abnormal loss incurred should not be considered in measuring the progress of work. For example, if I say in this way, in this example, suppose if I say ki out of this 1,75,000, 20,000 was abnormal loss. So you will take 1,75,000 or you will take 1,55,000. Not able to understand. If I say during second year, out of 1,75,000, 20,000 abnormal loss incurred. So to measure the progress, you will take 1,75,000 to 1,55,000. 1,55,000 means this working note will be done as per 1,55,000. But when you deduct actual cost, then you will take what? 175. Understood? Have you understood? So in measuring, you will take 1,55,000. But when you deduct actual cost to calculate profit margin, then to whether abnormal or whether actual cost, you will deduct both now. That time deduct 1,75,000. Understood? Have you understood? Yes, sir. Then second point number B is very important. When the cost incurred is not proportionate to the entity's progress in satisfying its performance obligation. This point I will do with one question. Because whatever I will say, you will not be able to understand if you don't remember that point. This question, 58. Already asked 2 times in exam. On 1st Jan 2001, entity contract to renovate a building, including installation of new elevator. Correct? Now, bata, renovation of building with installation of new elevator, 1 performance obligation, 2 performance obligation. Renovation building with installation of elevator, 1 ki 2. This is single performance obligation, multiple performance obligation. No, new elevator will be integrated now. Integrated with the building only. Is integrated now. It is not distinct in the context of contract. First condition capable of being distinct, but not distinct in the context of contract. Therefore, it is not distinct. It is single performance obligation. Correct? So this particular point number B can be applied only it is a part of single performance obligation. If it is a part of single performance obligation. Correct? The entity estimate the following with respect to the contract. Transaction price how much? 50 lakh. Expected cost of elevator how much? 15 lakh. Other cost is what? 25 lakh. The entity purchased the elevator and they are delivered to the site 6 months before they were installed. Means the seller entity has purchased the elevator and supplied to the site. Means supplied to the customer 6 months before it will be installed. Means 6 months before the installation it was given to the customer. Means control of that elevator was transferred to whom? Customer. 6 months before the installation. 6 months before the installation. The entity use an input method based on cost to measure progress to a completion. So this particular point will be applied only in case of cost to cost input method. The entity has incurred an actual other cost of 5 lakh. So it means they have already purchased elevator at what amount? 15 lakh. So this 5 lakh is for what? For renovation of building, by the end of 31st March 2001. How the company recognize revenue performance obligation made over the period of time. Of course, this point is applicable when it is over the period of time. Means what they want to say. Okay, right now it is 31st March 2001. Suppose this is Y0 and this is Y1. And this is 6 months. Correct. So can I say the contract was done at this point of time, samajh lo. Correct. And they have already purchased elevator and 15 lakh was incurred. During this period, 5 lakh was incurred. Correct. Total transaction price was how much? 50 lakh. Total cost incurred is what? 20 lakh. And total estimated cost was how much? Elevator 15 lakh and 25 lakh. Total become what? 40 lakh. Now, just try to understand. In this case, if we consider 20 lakh divided by 40, it means 50% of work has been performed. 50% of work has been performed. So what Ind AS 115 says? This is not correct. Because can I say the elevator was purchased and supplied to customer 6 months before and no installation has been done. Means actually that was only purchased, cost incurred, but no performance obligation is satisfied. Therefore, that should not be considered in measuring what? In measuring what? Progress in satisfying the performance obligation. It means can I say only 5 lakhs should be considered. So this will not be considered in measuring the progress in satisfying the performance obligation. Means 5 lakh out of what? 25. Out of 25 has been incurred. So 5 divided by 25. How much has been? The 20% of work has been performed. It means 20% of renovation has been completed. 20% of renovation has been completed. Now in this case what they are saying? Ki for elevator we recognize revenue to the extent of cost incurred. Means for revenue, for elevator we recognize revenue to the extent of cost incurred. And for renovation of building, revenue will be what? 20% of how much? 50 minus 15 how much? So 20% 35 means how much? 7. Means your total revenue will be what? And your total cost will be what? And your profit will be what? Your profit will be 2. Have you understood? One second. What they want to say? Whenever 4 conditions satisfied. Now let us come to the concept. What they are saying? If the 4 conditions satisfied, so any cost which has been incurred, which is not proportionate to the cost incurred in satisfying the performance obligation will not be considered in measuring the progress in satisfying the performance obligation. This is the concept. What is that 4 condition? Now let's see. What is the first? Goods do not represent a distinct performance obligation. So of course that cost of elevator was not a distinct performance obligation. First condition satisfied. First condition satisfied. Second, the customer is expected to obtain control of the goods significantly before receiving the services. Yes, that was given 6 months before the installation. So customer received the control. Second condition also satisfied. The cost of such goods is significant in relation to total expected cost. Yes, 15 lakh was a significant cost. Third condition also satisfied. Fourth, the entity purchased the goods from a third party. Yes, elevator was purchased by seller from third party and does not significantly involve in designing or manufacturing such goods. Means they have purchased and supplied it without any designing or customizing that elevator. They purchased from third party and supplied to whom? Customer. That means fourth condition also satisfied. If these 4 conditions satisfied, then such recognized revenue to the extent of cost incurred is appropriate. Means for the elevator, revenue will be recognized to the extent of cost incurred. To the extent of cost incurred. That only we have done. So for elevator, we have recognized revenue to the extent of what? Cost incurred. Means out of 15 lakh, so we have recognized. Balance was 35 lakh, that is for renovation building. So 35 lakh ka kya liya? 20%. So this is the revenue for which renovation of building total become 22 minus total in cost incurred 20. So your profit become 2 lakh. Understood? Super important question, can be again asked with the different types of question. Means similar type of question will be given with different type of case study, I will say, but you can do it. Understood? But in that question, you should write down these 4 conditions. Content is very important. Content is very important. Next point. Next point, what they want to say, ki sometime what happen, ki at the beginning of the contract, it is quite possible we are not able to measure the output of the construction contract. Means suppose we started one contract and we are not able to estimate the cost. If you are not able to estimate the cost, so can you say we are not able to estimate the progress in satisfying the performance obligation? Means suppose I started teaching you, but for the first time I am teaching you FR. Means I am a new teacher. So I don't know now how much time it will take. Are bolna re? So it means I don't know ki how much progress has been completed even though I have started my teaching. So in that case, what they are saying, if you are not able to measure the progress in satisfying the performance obligation, in that case, revenue will be recognized to the extent of cost incurred. So if you are not able to measure the progress in satisfying the performance obligation, in that case, what they are saying, don't recognize any profit. Your revenue will be equal to cost incurred. Revenue will be equal to cost incurred. Understood? This para that only says. Then straight line revenue. They have given 2 situations when the revenue recognized on straight line basis over the period of time. Straight line basis over the period of time. Means there is no need to measure the progress, divide by number of year kar do. Total transaction price divide by number of year. So there are 2 circumstances. First, when an entity expects that customer will receive and consume the benefit as and when entities perform. Means customer will receive and consume the benefit of the entity's promise equally throughout the contract period. When the customer receive and consume the benefit equally throughout the contract period, then use straight line basis. Means accounting services, security services, it will be equally throughout the contract period. So on SLM basis. Second, if the entity does not know when and how the customer will demand services. For example, I am providing annual maintenance services. So can it say I will give services only as per the request of customer? But we don't know when they will request. In that case, we'll recognize revenue on SLM basis. So these are the 2 points where we recognize revenue on a straight line basis. Chalega. Transfer at a point in time, this so understood. This much was up to step number 5. Now, there are 10 special guidance from which normally in exam question is asked. First is step 1, 2, 3, 4, 5. Now, there are 10 special guidance from which question may be asked directly in exam. Understood? I have given one question based on this, which is either already asked in exam or can be asked. So, even though I am not taking the question, once I have explained, can I say you can do it by your own? Because I have only 1 hour left. So I will now focus on content, because if I do question, I will not be able to complete the entire thing. So can you see, if you know the content and you can do one question based on this, you will be able to answer now. You will be able to answer. Chalega. First is what? Customer option for additional goods or services. Customer option for additional goods or services. Sometime what happens? Whenever we do initial sale, means I have sold one product to you. So with that, I will give one option to you that customer can purchase additional goods within a time period at a discount. At a discount. Means I have also sold one option to you. Option is right. Means I have transferred one right to you that you can purchase additional goods from me at a discounted price. At a discounted price. Or sometime you might be knowing that nowadays there is a concept of reward point, award point. Whenever you purchase something from the seller, they will ask your mobile phone number, and in that mobile number they will add some points. Once that point will reach to 100 point or 1000 point, you can redeem the point for purchase of additional goods at a discount. So that is known as award point. So in that case, what our Ind AS 115 says that whenever you do initial sale, there are 2 performance obligations. One is the initial sale of goods, and second is the sale of option also. So sale of option will be a separate performance obligation. Separate performance obligation means entire transaction price will be allocated to initial sale of goods plus what? Sale of option. Sale of option means what they want to say. The option to purchase additional goods or services can be in many forms, for example, sales incentive, coupon with limited distribution, or customer award credit. The option is a separate performance obligation if it provides material right to the customer. Material right means a discount that is not available if the customer will not enter into that transaction. Means the discount is only available when you have done initial sale. When you have done initial sale, means the discount is not available to all the customer. The discount is not available to all the customer. In that case, entity should allocate the entire transaction price to each performance obligation in the ratio of their standalone selling price. Means can I say we need to estimate the standalone selling price of option also. Then allocate a transaction price in the ratio of standalone selling price of option and the initial sale of goods. Understood? And then recognize revenue. Means what will be journal entry? Whatever consideration we have received, suppose we have received 1000. So some revenue, some transaction price has been allocated to initial, suppose 900 allocated, 900 will be recognized initially on the sale of initial goods. And the balance is to for sale of additional good that will be sold in future. So that cannot be recognized revenue right now. So that will be known as deferred consideration. Yeah, deferred revenue. So 100 will be deferred revenue. And this will be recognized as revenue as and when option is redeemed or expired, whichever is earlier. Whichever is earlier. So this will be recognized revenue in the year in which the option is redeemed or expired, whichever is earlier. Then your journal entry will be deferred revenue to revenue. Understood? One question has been asked, I think 3 times in exam. I don't know why they ask this question every time. Many times this question has been asked many times, 3 times of pakka. I don't know what is in this question. But it might have a students are doing mistake. Therefore, they are asking this question. Okay. An entity intend to contract for sale of product of 1000. As a part of the contract, the entity gives the customer 40% discount voucher for any future purchase up to 1000 in the next 30 days. The entity intend to offer 10% discount on all sale during the next 30 days as part of seasonal promotion. Means out of 40%, 10% is available to all customers. So what is the material discount? 30% become material discount. So 10% discount cannot be used in addition to 40% discount, means 30% is the material discount. The entity believes that 80% likelihood that customer will redeem the voucher on an average and customer will purchase 500 additional product, means rupees 500 additional product. Okay. Determine how many performance obligation, 2 performance obligation, sale of initial goods and discount voucher. There are 2 performance obligation. And there is standalone selling price that we need to find out. Standalone selling price of sale of product A will be 1000. This is the standalone selling price of product A. And for discount voucher, it will be what? Can you say 500 into 30%? How much it is coming? 150. And what is the probability? 80%. So 120 become what? The standalone selling price of discount voucher. Standalone selling price. So 1120. So this also done. Then allocated transaction price. So what was your transaction price? 1000 only. This 1000 will be allocated in this ratio. In this ratio that you can allocate. That you can allocate. So that is only given. Because standalone selling price is 1120. Then 1000 has been allocated in this ratio. Have been asked 3-4 times in exam. I don't know why they are asking this question, but they are asking, maja aa raha hai. Can be repeated. Can be repeated. This much you understood? So first done. Then sale with a right to return. Sale with a right to return. This point, this question has not been asked, but can be asked. Sometimes we sell with an unconditional right to return. Means customer may return the goods. In that case, how much revenue should be recognized? So what our Ind AS say that revenue should be recognized only for those goods which are not expected to return. Means if they are expected to return, don't recognize revenue. For that, recognize the refund liability. For example, suppose you have sold goods 1000 units at rupees 150. Out of this, you are expecting that 50 will be returned. So it means your journal entry will be bank account. Already you received how much? 1000 into 150 means how much? 1,50,000. But you recognize revenue for what? Only for what? 950 into 150. How much? 1,42 na? 500. And your refund liability will be what? 7,500. Very simple. Very simple. Now can you say whatever goods are expected to be returned for which you have not recognized the revenue, it means that is your asset only. And on settlement refund liability, you have a right to recover that goods. So that will be your asset. That will be your asset. So you need to pass one corresponding journal entry. So for that, you will pass one journal entry, inventory, account debit, and it will be adjusted with cost of sales. It will be adjusted with cost of sales. But can you say with what amount? Can you say with the carrying amount of inventory? Carrying amount of inventory means as per Ind AS 2 minus expected cost of recovery. Minus expected cost of recovery. Understood? Carrying amount means as per Ind AS 2 whether cost price or NRV whichever lower. Minus expected cost of recovery. Suppose they have given carrying amount. Suppose they have given carrying amount is 120, means cost price is 120, and it is given that expected cost of recovery is 2 rupees per unit. So how much inventory? 50 into what? 118. How much it is coming? 5,900. This will be your second journal entry. Have you understood this point? Correct. If the expected cost of recovery is not given, assume nil. Then assume nil. Very simple. आगे चले. This question I am expecting till now not asked. Till now not asked. Then next point is what? Non-refundable upfront fee. This is not so much important. छोड़ दो. Correct. Coming to consignment arrangement. This is also not important, but you know consignment arrangement. You know consignment arrangement. Correct now. So in the books of consignee, can you say we recognize revenue on net basis, means only the amount of commission, and in the books of consignor we recognize the revenue with the gross amount, means when the sale has been done by consignee. So they have just given one explanation in consignment arrangement, revenue recognized in the books of consignor only when the consignee has sold goods to third party. Only when the consignee has sold goods to third party. So this we know from Bachman. Correct now. So this is very easy, you can understand. Correct. Now this is very important, principal versus agent. This has been asked also 3 times. One same question, similar question they have asked 3 times in exam. I don't know why. Means in this type of question, first you need to identify whether the entity is principal or agent. First you need to identify whether the entity is principal or agent. If he is principal, then the revenue will be on gross amount. If he is agent, then revenue will be on net amount, means the commission. Means the revenue recognition depends upon whether the entity is principal or agent. If he is principal, then revenue will be gross amount. If he is agent, then revenue will be net amount. So they will give one case study. First they will ask you whether he is a principal or agent, then what will be the amount of revenue. So whether he is a principal or agent depends upon this indicator. If any of the indicator exists, he is what? Principal. Any one of the indicator. If any one of the indicator exists, it means he is acting like a principal. If no indicator exists, means he is a agent. Understood? So what are the indicator? The entity is responsible for fulfilling the contract. Means he is responsible for fulfilling the contract. But in consignor and consignee, who is responsible for fulfilling the contract? Consignor. Consignee is not responsible, even though he has done contract. The entity have an inventory risk, but who has inventory risk? Even though it is lying in the premise of consignee, if fire occurred, whose risk? Consignor. The consignor is principal. The entity have discretion in establishing price, but who will determine the sale price? Consignor. The consignor is principal. The entity is exposed to credit risk. If suppose the seller is customer default, so who have that loss risk? Consignor. So if all these conditions satisfy, the entity become principal. If all not, sorry, any one of the indicator is there, then he become principal. Otherwise he is agent. So you can apply in any case study. And normally 2 type of question they have given. In both questions he is principal only. Understood? You can read and you can understand. And if principal, then recognize which amount? Revenue as a gross amount. If agent, then net amount. That too you can understand by row. Correct. But super important question. Super important question. One option wala question, one this question. I don't know why they are asking in exam, but simple. Then sale based, usage based. This to already I have explained. The revenue will be recognized at a letter of sale based usage with royalty. At a letter of when performance obligation satisfied or when sales or usage occur, whichever is later. This already I have explained. Then bill and hold arrangement. One time this question was asked. One time this question is already asked. The bill and hold arrangement means what? The invoice has been prepared, but the goods are not transferred. Now the question is that whether control has been transferred or not transferred. So what Ind AS 115 say that the revenue will recognize when the control has been transferred. So sir, how will understand the control has been transferred or not transferred? So they have given 4 conditions. If 4 conditions has been satisfied, so even the goods service seller, control will be transferred and recognize the revenue. So what are that 4 conditions? So first, is the reason for bill and hold arrangement is substantive, means whether there is a practical reason to hold goods, means whether it is as per request of customer. As per request of customer. It means if the seller has delayed what delivery, then we cannot recognize the revenue because control will not be transferred. But the delivery is delayed due to the request of customer, it means the reason for bill and hold is substantive and first condition will be satisfied. Understood? Second condition, has the product been identified separately as belonging to the customer? Whether it has been separately identified that this item belongs to what customer, then it means control has been transferred. Second, is the product ready for delivery? If the product is still under manufacturing, then can I say we cannot transfer the control. Whether it is ready for delivery, if yes, it means control can be transferred. Last, does the seller entity have the ability to use the product or transfer the product to other party? If answer is no, means control has been transferred. If all these conditions satisfied, then it means control has been transferred, then revenue can be recognized even though goods are held by seller. So they will give one case study. In all these conditions will be given the question only. You need to write down all these conditions, then conclude yes, control can be transferred and therefore revenue can be recognized. Only one question that is given, you will read, you will be able to understand. Chalega. But in this content is important. If you are not writing this content, they are not going to give any marks. I say that this entire marks depends upon content. If you are writing this content, then only they will give marks. Now you say no, revenue recognized, control transfer, no marks. So if you write on that, no marks. You need to write down this content. Chalega. Then warranty, till now no question has been asked, but important. Warranty, till now no question has been asked, but important. Now what warranty? Ind AS 115 says there are 2 types of warranty. One is known as assurance type of warranty, one is known as service type of warranty. Assurance means normally whenever you purchase any goods, some assurance warranty will be given that item will work as per specification. Understood? But service type of warranty, what means ki if any default came, if this is not working, to will provide service, don't worry, we are there for you. That becomes service type of warranty. Normally during assurance period, suppose I purchase this mobile. When I purchase this mobile, so there will be one assurance type of warranty and there will be one service type of warranty. So vendor know ki when they will stop working. So 1 year they have given assurance type warranty. I know nothing will happen. And that warranty is not for physical default, means it will work as per the specification. If the screen damage, that is not covered in that warranty. Then there is one service type of warranty. If it is screen damage, then also we repair it, but you need to pay extra. You need to pay extra for that. That become what? Service type of warranty. So one is assurance type of warranty, one is service type of warranty. Understood? Correct? Yes, sir. Now, for this, what Ind AS 115 says that first you find out, is the customer has an option to purchase warranty separately. Normally, assurance type of warranty is not available to purchase separately. Service type of warranty you can purchase separately also, because I have purchased 2-year extended warranty for this. 2-year extended warranty. My iPad and my this both are under extended warranty because we are using on a rough basis now. Correct now. So I have taken what? Extended warranty. Expensive item. Correct now. And can be damaged. So I have taken 2-year extended warranty. Means it was available separately. If it is available separately, then what Ind AS 115 said, then promise warranty will be accounted as separate performance obligation, and then transaction price will be allocated to both performance obligation. Apply step number 5 and step number 4 and step number 5 for revenue recognition. Then that warranty will be a separate performance obligation. Correct. But if this is not available separately, it is not available separately, means you cannot purchase it separate. Then you need to identify, is the promise warranty provide the customer with a service in addition to assurance type of service, assurance type of warranty, means whether they are providing services with assurance type of warranty. If the answer is yes, then once again the promise warranty will be a separate performance obligation, and then apply step number 4, step number 5 to recognize the revenue. But there is no service warranty, then you have to apply Ind AS 37 for what? Assurance type of warranty. So for assurance type of warranty, Ind AS 37 is applicable. For service type of warranty, when it is a separate performance obligation, we have to apply Ind AS 115. Correct? Let me take one question, you will be able to understand. This is question for bill and hold. This question is for principal agent. This is all question. This is for sale and warranty. This all are important question. Can be asked in exam. So if you read, you will be able to understand. Chalega? This was a question for warranty. An entity manufacture and sales and compute, and manufacture and sales computer that include an assurance type of warranty for first 90 days. The first 90 days assurance type of warranty, Ind AS 37 will be applicable. Chalega? The entity offer optional extended coverage plan under which it will repair or replace any defective part for 3 years from the expiration of assurance type of warranty. This is what? Service type of warranty. Correct. Such optional extended coverage plan is sold separately, means it will be part of separate performance obligation. The entity determined that 3 years of extended coverage represents a separate performance obligation, even though not given, it will be that only. The total transaction price for the sale of computer and extended warranty is 36,000. This is the transaction price. The entity determined the standalone selling price of the computer and extended warranty is 32 and 4. Exactly same. So the transaction price 36,000 will be allocated in which ratio? 32 and 4 only. However, it can be different also. But it becomes simple question. You can allocate now. Correct. The inventory value of computer is 14,400, means the cost price of inventory. Furthermore, the entity estimate that based on its experience, it will incur 2,000 in cost to repair the defect that arise within 90 days coverage period of assurance type warranty. So for this will create what? Provision as per Ind AS 37. So what will be journal entry? Journal entry what? In ICA book they have given one compound journal entry. First batao, can I say bank how much? Bank or receivable how much? 36,000. Can I say of course the computer control is transferred immediately. So we'll say to revenue how much? 32,000. And warranty revenue recognized over the period of time 3 years. And that will start for after the expiration of 90 days. Correct now. So abhi that will be deferred revenue. Deferred revenue. How much? 4,000. First journal entry you understood. Second we need to create a provision. So journal entry will what? Warranty expense. How much? 4,000 now? 2,000. Warranty expense 2,000. To what? Provision for warranty 2,000. This is as per Ind AS 37. Then can you say once you have sold, to the cost price of inventory will become expense. So one more journal entry will do as per Ind AS 2. Cost of sales to inventory. Cost of sales to inventory. How much? 14,400. Super easy. Very good question for 4 marks, 5 marks, 6 marks. Simple. Yes, sir. So you can do this also. So this also done. Next point is what licensing. Till now no question have been asked, but they have given some few questions based on this in ICS study material. But no question have been asked in exam. So can be asked, can be asked. Now for licensing, what they say, what do you mean by licensing? Licensing means what? The seller entity has transferred the right to intellectual property to the customer. Means my intellectual property, now you will use. So I have developed some intellectual property. For example, I have developed one formula to teach. Now you want that formula, sir, I want to teach FR, give me. So I'll give you free of cost. Understood now? So my intellectual property I have given to you. So that is right to use intellectual property. Right to use intellectual property. It can be in the form of software, technology, motion picture, music, other form of media, franchisee, patent, trademark, copyright. So my intellectual property I have given for use to the customer. That is known as licensing. That is known as licensing. Correct. Now we are here to understand recognition of revenue for granting a license. See how to recognize revenue for granting a license. That is based on whether that license, means granting of license, is a separate performance obligation or is not a separate performance obligation. When it is not a separate performance obligation, then okay, there is nothing to inform. So if it is not a separate performance obligation, then do as per the goods and services whatever has been transferred. So what Ind AS 115 says that entities shall account for both promise as a single performance obligation. Example, let me give example. Suppose I sell laptop. I have sold laptop, but in laptop then can I say there is a operating system. That is also one software. So it means there are two things which I have sold. One is the tangible component, one is intangible component. But just try to understand that operating system is an integral part or is not an integral part of laptop. Integral part of laptop means, can I say the laptop cannot be used without operating system. Therefore it is what? One performance obligation only, and therefore there is no need to do a separate accounting for that. Means sale of computer, once the control is transferred, we recognize the entire revenue. So in this case no separate adjustment is required. Understood? So entities shall account both the promise, means the transfer of computer, and transfer of operating system as a what? Single performance obligation. I think in this no discussion required. But if the promise to grant the license is a distinct performance obligation, then what need to be done? Understood now? So if it is a distinct performance obligation, how to recognize revenue? In that case, what Ind AS 115 says that you need to identify whatever license you are granting, whether that granting of license is a right to access intellectual property or right to use intellectual property. The two key terms. Whether it is a right to access the entity's intellectual property or right to use intellectual property. Two keywords you have understood. Right to access, right to use. Now there are some intellectual property, just trying to understand, which depends upon which will change according to my activities. Means if the intellectual property will change throughout the period of license as per the activities performed by the seller entity, it means this is right to access. Means in that case, can I say it will change? So it means performance obligation satisfied over the period of time, and therefore in that case it will become separate performance obligation for which revenue will recognize over the period of time. So what they want to say, first identify, is the intellectual property to which the customer has a right changes throughout the period? If the answer is yes, it means in that case the revenue will be recognized over the period of time. Means it will be a separate performance obligation, and transaction price will be allocated to that, and whatever transaction price allocated that will recognize as revenue over the period of time. Means over the period of license, But if it is not changing throughout the period of time, so can you say as and when license granted, entire benefit is transferred to what? Customer. Means the control is transferred at a point in time. and therefore entire transaction price whatever allocated to that separate performance obligation will be recognized as revenue at that point in time. Understood? For example, I'll take my example. I purchased one software for recording purpose. Understood? Now my seller from whom I have purchased, they give me many updates. This update, this update, this, but I am not, because if I'll do update, what happens? I need to once again learn that update. Means if that updates will come, so I need to change it now. Correct? It means I need to learn that what happened after this. So I am not technically person, I know, you know. So I will not use that update. Means I have strictly said to my technical person, don't update it. My video is of good quality. Understood now? So it means, can I say, even though they are giving updates, can I say it is not changing my software? So it means I receive the benefit as and when what? License was granted, and I don't require any updates. But suppose update is necessary to use what? Software. It means, can I say I can't use the software without updates? Means I need to update it. Means that updates whatever activities performed by the seller entity will be required and will change the software throughout the period. It means in this case performance obligation satisfied over the period of time. Understood? Correct. So only you need to understand right to access means when it is over the period of time, right to use when it is at a point in time. Two keyword you understood. Now there is one question, this much you understood. So how will understand now from a given question it is right to access? So how will understand that it will change? So for that purpose they have given three conditions. But like these three conditions satisfied means intellectual property will change throughout the period of time. Means there is a right to access. This is important from exam point of view. Means whatever question they will ask may be dependent on this. May be dependent on this. Correct. So right to access over the period of time depends upon how many conditions? Three conditions. If all the three conditions satisfied means right to access. If any one of the conditions not satisfied, then right to use. Right to access means over the period of time, right to use means at a point in time. This much you understood? So right to access, what are the three conditions? The entity is required, entity, seller entity is required or is reasonably expected to undertake activities that will significantly affect the licensed intellectual property. Means entity is expected to perform some activities that will change the licensed intellectual property. First condition. Second, the license exposes the customer, means whatever activities performed by the seller entity that will expose the customer to any effect of the entity's activities. Means whatever activities is performed by the seller entity that will expose customer either in a positive way or in a negative way. That will expose either it will be favorable or unfavorable. Correct. Last, the entity's activities, whatever activities performed by entity is not a part of separate performance obligation. So that entity's activities are not a part of separate performance obligation. If all these three conditions satisfied means that is right to access, otherwise it is right to use. To explain this particular point, I'll take one question, and that is expected. Means I am expecting from the, but whether I have taken that question, I am not taken. Taken. Means this question I am expecting from last 2-3 attempts, but till now not asked. Means ICI is not reacting as per my expectation. This time may come. If came, then you give me dua. Dua. Okay. Dua means blessings. Sport team D enter into 3-year arrangement to license its team name and logo to apparel maker Sport team, suppose Chennai Sport, Chennai Super King. Famous team. In Chennai to famous. Mr. Dhoni is famous. Chennai CSK na. Famous Chennai na. I know the craze is Chennai Super King, Chennai match na. Arey bhai. All will be in yellow dress. Means I will not see anyone in what? Any other dress. Means so craze. Huh? CSK na? You all like CSK na? IPL match you watch? You will to watch. Chalo, theek hai. Chennai Super King, let us say, enter into a 3-year arrangement to license their team name CSK and their logo to the apparel maker M. So here the seller entity is what? Sport team. Customer is what? Maker M. The license permit M to use the team name and the logo on his product, including display product and his advertising on or marketing material. Means they can use the team name and logo in their product, in their marketing material, whatever. So it means right to use intellectual property. Intellectual property is logo and team name. That is a property. That team name is what? Property. CSK is property. No one can use it. No one can use it without the permission of CSK. Owner. Determine the nature of license in the above case. Now just try to understand. Let's see whether all these conditions are satisfied or not. Whether entity is required or reasonably expected to undertake an activity. Yes, they are required to play the IPL matches. They can't say no, now will not play. So they are expected to play all the IPL matches. Yes or no? This is what activities to be performed. The license expose the customer to any effect of entity's activities. Can you see? If they win, that is a positive effect. If they lose, negative effect. Means customer are exposed to the with the activities of what? Seller entity. The last. The entity's activities playing match is not a part of, is not a separate performance obligation. And so all these three conditions satisfied means the license will change throughout the period of use. If they are winning, the value will increase. If they are losing, the value will decrease. Means this is right to excess, and therefore whatever transaction price will be recognized over the period of time. Understood? Correct? One more example they have given. Modifying. Modifying the above facts that means modifying the above information. Sport team D has not played games in many years. There was one team, Hyderabad Deccan, which is now defunct. Now so it is what? Sunrise Hyderabad. I already forget. Hyderabad Deccan was initially, then they withdrawn, then Sunrise Hyderabad came. So that became a defunct company. Hyderabad Deccan become what? Defunct now. Okay. So no, the name has not been changed. The owner has been changed, I think so. So that name change kya? अरे छोड़ना यार. Let me form one example. His sport team D has not played games in many years, and the licensor is the brand collector B. So there was one brand collector B. What is the job of brand collector? They will purchase the brand of defunct company. They will purchase the brand of defunct company, and whoever is using that brand, they will file a case against them, and they will try to collect the amount from them. Understood? Correct? So an entity that acquire IP, intellectual property, such as old team of brand names and logo from defunct entity or those in financial distress. B's business model is to license the intellectual property or obtain settlement from the entity that use the IP without their permission, without undertaking any ongoing activity to promote or support the IP. Means they will not play any IPL matches. In this case, batao, if suppose this brand collector has transferred the brand name etc. to any company, and that company can use that logo etc. So whether it is right to access or right to use? Right to use. So entire performance obligation is satisfied at a point in time. Very good question. Till now not asked. Now you can answer this. So this question can be asked, done. Repurchase agreement. Once again, beautiful concept, but no question have been asked. I like this concept very much, but till now no question has been asked in exam. But expected. Repurchase agreement means what? What do you mean by repurchase agreement? Whenever sale has been done with a repurchase agreement, means either in one agreement or a separate agreement. There is a repurchase agreement of the same goods. Means I sold this mobile and in one contract, either in the same contract or in a separate contract, I have done one more contract to repurchase the same item from you. So that can be either in the form of forward contract or call option or put option. When I say forward contract, it means what? Can you say there is a right and obligation to buy? Yes or no? in a future contract, the entity will have a right as well as obligation to buy. In call option, they will have a right to buy. Yes or no? In put option, we will have an obligation to buy. Put option means put option will hold by customer. They will have a right to sell. So we will have an obligation to buy. So put option will be with whom? Customer. Call option will be with whom? Seller. And this will be with both party. Means future contract. In future contract, we have a right as well as obligation to buy. Other party will have a right and obligation to sell. This is forward contract. So can I say in this case, there are two situations. Either the question will be of forward contract or call option, or the question will be of put option. Correct? So if it is a question of forward contract call option, so of course can I say entity has an obligation to buy. So if entity will have a right to buy. So if they have a right to buy, the control is not transferred now. Control is not transferred. So it means when you have done the contract, revenue cannot be recognized. But consideration received. Consideration received. So what you will do about that consideration? So what they are saying? Accounting treatment depend upon two situations. There can be two situations. If the entity can or must repurchase the asset for an amount less than original selling price, means what they want to say, repurchase price is more than what? Original selling price. Means you have sold at ₹100. You have sold at less than, my mistake. Less than. Repurchase price will be less than what? Original selling price. Means you sold at ₹120, but you repurchased at ₹100. It means consideration received how much? Sold at ₹120. So you have received how much? 120. But you will pay how much? 100. So 20 rupees extra. So that will be deemed to be received for the asset which has been given for use for that period. So what they want to say, the difference will be accounted as per Ind AS 116, and that will be considered lease contract. Lease contract. So this difference 20 rupees will be accounted as per Ind AS 116 as a lease income over the period of contract. Over the period of contract. Understood? And if the differential price means this differential between original sale price and repurchase price will be recognized as a lease income over the period of lease. But if the option remain unexercised, means control is transferred. If they will not repurchase, so control is transferred. In that case, if the option remain unexercised, then revenue recognized at repurchase price. At repurchase price. Have you understood this point? Not understood, no? Not understood? Understood. Okay. Second case is what? If the repurchase price, original selling price, and repurchase price is more than what? If I say this, so how much we have received? 100. But we will pay how much? So that is nothing but a financing arrangement. Means we are in need of money. So right now we receive 100, but we will pay you 120. So whatever asset has been transferred, that asset has been transferred as a security. Correct now. So in that case, this 20 rupees will be recognized as an interest expense over the period of contract, and whatever you have received will be a financial liability. The financial liability will be subsequently recognized as per Ind AS 109 at amortized cost. And if the option remain unexercised, we recognize revenue at repurchase price. This is the question. Means if I take one question, only one or two question has been given. An entity enter into contract with a customer for sale of tangible asset on 1st Jan 2001 for ₹1 million, means 10 lakh. The contract include a call option that gives the entity right to repurchase the asset for 1.1 million on or before 31st December 2001, means after 1 year. So here repurchase price is more than what? Less than what? Repurchase price is more than what? Original selling price. So it will be which arrangement? Lease or financing? It will be a financing arrangement. The first journal entry will do what? Bank account debit to how much you have received? 1 crore. Correct? Financial liability. Then year end you will pass one journal entry, interest expense account debit to financial liability. How much? 0.1, 0.1. Correct. The total liability become what? 1.1. Now, if the call option exercised, means they want to repurchase, then your journal entry financial liability account debit to bank. But if the call option is not exercised, so financial liability to revenue will do. Financial liability at 1.1 to revenue how much? 1.1 at repurchase price. This is the concept. Understood? Then come to put option. Put option के लिए कर लेते हैं. Put option, what they have said? An entity has an obligation to repurchase the asset at the request of the customer. Means there is a right to sell by with whom? Customer. Means we have an obligation to buy. The seller entity has an obligation to buy as per the request of customer. In that case, what Ind AS 116 says that if the put option is favorable for whom? Customer, then they will exercise. If the put option is favorable, if it is favorable with the customer, then can I say they will exercise. So it become yes. So if it is favorable, it is yes. If it is unfavorable, means no. If it is favorable, means yes. If it is unfavorable, means no. Understood? So there can be two situations. Once again, if repurchase price is less than original sale price, and if the put option is favorable, so they will exercise it. Means the entity has an obligation to buy, then we cannot recognize the revenue. Then whatever the differential amount will be accounted as lease as per Ind AS 116. But if it is unfavorable, they will not exercise. If they will not exercise, so there is no repurchase, then entire transaction will be accounted as a sale with a right to return. Then it will be accounted as a sale with a right to return. Understood? Correct. Similarly here also, if repurchase price is greater than or equal to original selling price, if favorable, accounted as a financing arrangement. If unfavorable, recognize revenue as a sale with a right to return. Sale with a right to return we have already done. Sale with a right to return already we have done. So apply the concept of sale with a right to return. There is one question, we can do it. Okay. Coming to running out of time. Contract cost. Contract cost. Contract cost में what happened? Last attempt they have asked question from this topic which we are never expecting. We are never expecting, but lollipop question. But when they ask lollipop question which I am not expecting, that become complicated sometime. Correct? Believe me, we were not expecting. I was also not expecting when I have seen Arey Baba, this big chapter and they have asked this question. Correct now? They have so beautiful concept and they are asking what? Contract cost. Chalo theek hai. Now there are two type of contract cost. One is known as cost to obtain contract. One is known as cost to fulfill the contract. The cost to obtain the contract, simple word. If these are incremental cost means this will be incurred only when the contract is obtained. Incremental cost means what? That will be incurred only when the contract is obtained, then that will be capitalized as a contract cost asset. But if these are not incremental cost, means it will be incurred even though contract is not obtained. That will be incurred even though contract is not obtained, then that will be charged to PL as an expense. Correct? So any incremental cost of obtaining the contract, correct now, will be capitalized as contract cost asset. Otherwise, it will be charged to PL as an expense. So they have given same example. This example were only asked in exam. Same to same question. Means examples were given in ICS study matter. This all examples is from ICS study matter only. Same question was asked. If you have read, easy. If you have not read, may be difficult. May be difficult in exam. Now you only say. Commission paid only upon successful signing of a contract. But the incremental, not incremental. Bolo. Means whether it will be incurred only when contract is obtained. Yes, now. Because paid upon on successful signing. Yes, to capitalize. Capitalize. Travel expense for salesperson pitching a new client contract. So it will be incurred even though contract is not obtained. So it will be charged to PL. Legal fee for drafting terms of arrangement for party to approve and sign. Legal fee. Okay, drafting fee contract may be obtained, may not be obtained. This is only drafting fee. We don't know whether contract will be obtained, so it will be expense. Salary for salespeople working exclusively on obtaining a new client. So salary paid, contract may or may not be obtained, it will be expense. Bonus based on sales target. Bonus is payable only when the contract will be received. So it will be capitalized. So these are some examples. Similar question may be asked in exam. Always think whether that will be incurred even though contract is not obtained. Correct now. that will be incurred only when contract is obtained, then capitalized. If that will be incurred even though contract is not obtained, then expense charged to profit and loss account. The rule is this. Chalega? Then cost to fulfill the contract. Now, once again, I don't know whether it is important or not important. Okay. Now cost to fulfill the contract are of two types. Whether that cost is covered in separate Ind AS, means when right now I am fulfilling the contract. I am teaching you now. So I am fulfilling the contract. So I am using this computer, laptop. This is covered in Ind AS 16. Correct now? So if it is covered in separate Ind AS, apply separate Ind AS. So are these costs incurred are covered under scope of other Ind AS? Yes, apply other Ind AS. Means I am using software also, that is covered under Ind AS 38, apply Ind AS 38. But if these are not covered under other Ind AS, then apply Ind AS 115. Now in that, very simple, then ask one question for other costs which are not covered under Ind AS, specific Ind AS. So are these costs are recoverable from customer? If these costs are recoverable from customer, capitalize. Otherwise charged to profit and loss account as an expense. Simple. Means are these costs are recoverable from customer? Recoverable means when you calculate cost price, have you added that? Will you recover it from customer? If yes, then capitalize. If no, charge it to profit and loss account as an expense. You only say, suppose, just try to understand. Right now, I'll take some example. There are some electricity bill we are incurring. So whether that is recoverable from you? What do you think? Recoverable from you? Yes or no? Huh? Yes or no? No, this you are saying as per the your reasonable basis, means you are applying judgment. But can you see that will be written in the agreement? See the agreement now. We don't have that even specific agreement, that is not recoverable. Believe me, electricity bill, that is not recoverable. Correct now. But can you see in the long term contract, everything will mention what is recoverable, what is not recoverable. So whatever recoverable, see the agreement. If it is recoverable, capitalize. Otherwise charged to profit and loss account as an expense. Understood? So that is, I have given some examples of recoverable and not recoverable is given. You can read it. Some examples of recoverable or non recoverable is given. Read it. Correct? This is not so much important for those. Last point, service concession arrangement. Appendix D. Last day I was saying now, there is one bakwas question for this, and that was asked in exam. I said in one of the batch, bakwas question, but I have not said it will not come. And that question was asked. I will inform you what was the bakwas question, that is already asked, but now so important, same question may come. Same question may come. Only one question they have and same question may come. Now, do you know about service concession arrangement? Service concession arrangement. For this, Appendix D to Ind AS 115 is applicable. Appendix D to Ind AS 115 arrangement is applicable. In this case, what happened? There are two parties. One is government. Second is private entity. And they will enter into a contract. This private party will provide some construction work, construction of infrastructure. For example, construction of road, construction of garden, development of garden, which is used by public, public utility. Understood? So they will construct it and then they will also maintain it and operate it for a specified period. Suppose the period is 20 years. Construction period suppose 2 years, and they will maintain and operate for 18 years. And after 20 years, this will be transferred to what? Government. This is known as service concession arrangement. Also known as BOT. BOT means build, own, transfer. I think income tax may you have done. Build, own, transfer. First construct, then own, and then transfer. So that is known as build, own, transfer. BOT, both type of arrangement. Understood? Correct. So what will be the accounting treatment for this in the books of what? Private entity. So in this, government is known as grantor and private entity is known as operator. So we are here to understand how the revenue recognized in the books of operator, not in the books of government. So this appendix D is not applicable in the books of government, it is applicable in the books of private entity. Now there are two types of consideration. Either this private entity operator will receive directly from whom? Grantor. Means government will pay some consideration to whom? Operator. Means operator has the right to collect cash from whom? So it become a financial asset for whom? Financial asset for whom? Private entity. This is one type of consideration. Second, what will happen? The government will say will not give. Collect from the user of public utility. Means charge the user of infrastructure. It means the government will grant a right to charge whom? To public. It means they have received a right to charge public once they use the infrastructure. So it means this is known as intangible asset. So this is known as intangible asset model. So for accounting, in appendix D says that there are two models. One is financial asset model, one is intangible asset model. One is financial asset model, one is intangible asset model. Understood this much? Correct? Have you understood? Now I will not read this much. Correct? Because it will take so much time. One question is there, I will explain that. With that entire accounting I will explain. Chalega? This much you understood? This one point, this infrastructure, whatever has been constructed by operator, whether that will become PP of operator? Well, no. This is not a property, plant and equipment of operator. That will not be recognized as PP of operator. That is the infrastructure of what? Government. Correct? So this will not be a PP of. Now how to recognize revenue? This everything I will explain with one question. Whenever you have time, just read it. Just read it. You will be able to understand. You will be able to understand, because I know that question will be only asked, because they don't have time to create this question. 79. A Limited is in the business of infrastructure and has two divisions under the same. One is toll roads and second is wind power. The brief details of this business and underlying project are as follows. Vilwara Jabalpur toll project. The company has commenced the construction of project in the current year and has total expenses aggregating to 50 crore. Means how much expenses incurred? 50 crore as on 31st December 2001. Under IGAP means previous GAAP, before applying Ind AS. Before applying Ind AS. The company has recorded such expenses as an intangible asset in the books of account. This is not as per Ind AS. The brief details of concession arrangement are as follows. Total expenses estimated to be incurred is how much? Out of this, how much already incurred? Fair value of construction service is how much? Means construction service. They are providing two services. One is construction, one is maintenance and operation. Okay. Total cash flow guaranteed by government. But the financial asset model and intangible asset model. So this is not correct. This is not correct. Understood? Have you understood? So we will recognize financial asset. And finance revenue over the period is what? Means of course financial asset, we recognize interest income also given. They have given interest income. Other income related to service during operation phase, means whatever they are collecting other income, that become operation phase revenue. Means what was the total revenue granted? 200. Out of this, how much for construction service? 110. How much interest income? 15. What is the balance? 75. So 75 is for what? Operations. 75 is for operation. Means now you need to pass journal entry, thinking overall journal entry in this entire year. Means you need to pass one compound journal entry. For the first, for revenue for construction, what journal entry? Can you say financial asset account debit to construction revenue? Revenue from construction. What is the amount? 110. The first journal entry is what? Financial asset account debit to revenue from construction, 110. What is the cost of construction? Total cost of construction? 100. To what journal entry? Cost of construction to bank. Cost of construction will be charged to profit and loss account. Second journal entry done. Correct. Then you recognize interest income. Interest income, what journal entry? Financial asset to interest income. What amount? 15. Understood? Then you recognize revenue from operation. What journal entry? Financial asset to revenue from operation. How much? 75. Then you will collect how much amount? 200. What journal entry? Bank account debit to financial asset. 5 marks you got out of 10. Out of 10, 5 marks. Bakwas na. Understood why I said bakwas? What is this, Baba? This is bakwas. I was not expecting, but I said in class bakwas. And the same question came. For how many marks? 10 marks. 5 marks you got na? Simple na. It was simple, but I said in class what? Bakwas. That was my mistake actually. So once I said bakwas, what the student will do? I was crying that day. Arey yaar, kya kiya maine? Now second, Kolhapur-Nagpur Expressway. The company has also entered into another concession agreement with the government of Maharashtra in the current year. The construction cost of the said project is 110 crore. The fair value of construction cost is approximately how much? This is fair value of construction contract. Okay? The said concession agreement is toll based. But intangible asset model ki financial asset model? Intangible asset model. Correct. And the company need to collect toll from the user of the expressway. Under IGAP, they have recorded expenses incurred as intangible. This is correct, but it is not correct. So what will be first journal entry? But for revenue for construction contract, we recognize one right to collect. So intangible asset account debit to revenue from construction. What is the fair value? 200 crore. 200 na? 200 crore. First journal entry, intangible asset account debit to revenue from construction 200 crore. What is the cost of construction? It is 110 crore. The cost of construction to bank 110 and the cost of construction will be transferred to profit and loss account. Then this intangible assets should be amortized during the year of services, operation services. So amortization. So what journal entry do? Amortization expense account debit to intangible assets. What is the amount? 200 crore. Cost price will be amortized now for the remaining period to intangible asset, amortization expense account debit to intangible asset 200 crore. Then they have not given the toll amount collected. So one more journal entry will come, bank account debit to revenue from operation, but question mark because the information has not been given. They have also given question mark. Check karo. Question. Bakwas question. Bank account debit revenue for operation phase question mark. 5 marks you got. 10 marks you got. Now the same question will come, 10 marks aayega na. Understood? Only to write down two things. Why intangible asset model? Why financial asset model? That too you can write now. That you can write down. But read the content. Once you read now, more understanding will come. Okay? I have completed my Ind AS 115 also. But there are some questions left in this I have not done because of time factor. But I have done my job with the content. Entire content I have done. Understood? I hope whatever I have done that will help you. Normally what happens when we come for classes, one more thing. When we come for classes, free classes, etc. So normally students think this is free classes. This is not actually free classes. Believe me. This is not a free classes. This is not free. I will receive the consideration in the form of your marks. So your marks is our fees. Understood? Your marks, your whatever success you are getting, that is only a fees. So we teacher provide free classes, not for our promotions. Normally students think that we are promoting ourselves. No promotion. You think we are promoting ourselves? No promotion. We want that if you require help at the last stage, we are available at that point of time also. That is the mere intention. Ki your passing the day when you pass, so we also become happy. Because our effort will also have some part in your life. Once you become CA, so we have contributed some part in your success, and that is only a fees. So whenever revision class is done, that is actually not free of cost. Your marks is our consideration. So now it depends upon you how much fees you are going to give me. Understood? So that depends upon you. Understood? So my job done. Now I am waiting for my consideration. Understood? And I want that once you become CA, call me, contact me. My number if you don't have, if you are my student you have, but if you are not doing, if you have not done my regular class, exam oriented class, so write down one number 773100. This is my number only. I have only one number. My wife has also this number only. Correct? But don't call me. Because in class, there are n number of calls. So I will only call if the number is saved. If the number is not saved, I will not call back. But if you message me, you write down, sir, I am your student, I will call back, yeah, I will message you. Understood? Already I have said join my mentorship group. For November attempt, I am available for you. whatever doubts you are asking, whether you have done that chapter, whether you have not done that chapter, means you can ask any doubt from any other chapters also. And I have an obligation to answer. I have an obligation to answer. You have a right to ask. You have a right to ask. Understood? Yes, sir. Thank you very much. All the best wishes for your preparation. And this attempt will be your last attempt. Only put your whatever effort you can put. Whatever effort. Means sacrifice everything. I always say CA means what? They have done a lot of sacrifice, and that will come as a maximum gain once you become what? CA. So more and more pain means more and more gain. So take more pain. Whatever pain you can take, and that will be only your gain. And the result day will be your happiest day of your life. And with always study that this happy moment you need to give to your parents. Always think. Means when I used to study, I used to put the photo of my parents in front of me. Whenever I am distracted, I used to say, oh, par. So we are also distracted that time. But whenever we see that photo now, we'll start studying. I used to put my parents' photo. You can put any other photo also. Whomever you love, correct now. But that should give you motivation to what? Study. Motivation to study. Thank you very much. We'll meet next time only once you become CA. Not as a student. I don't want to meet you as a student. I want to meet you as a chartered accountant. So if I will come, then you meet. Or you come to Hyderabad, we will meet. Thank you very much. All the best. One photo will click. Group photo. First, let me wind up. Live class student, you also, everything, whatever I have said, it is also applicable to you. Bye-bye to you also. All the best.